areas where anyone, even I'm a very proud Indian, but I feel very sad about this when we see what we do in our own touristy places, in our cities. And that's the reason why inbound tourism has always been a bipolar story. Bipolar, you have the high-end tourists, rose-tinted glasses, come and stay in fantastic hotels, go in your guided cars, etc., air-conditioned, everything, love India, see the Golden Triangle, etc., etc. They build their own story, they go back and tell their memoirs, etc. Or you have the backpackers. The middle-class family sitting in the US or sitting in Europe or any other part of the world does not think of India, but they'll go to Thailand, but they'll go to Bali, and but they'll go to Turkey, and they'll go to Morocco, they'll go to Kenya, they'll go all of these places. So they're not scared of traveling far. They're just saying when we get there, we want to make sure we're safe and secure. We can enjoy the whole day. We will sightsee in the day. But what are we going to do in the evening?
Speaking of creating a luxury tourism industry, Dr. Raj, let me come to you and address that very same question with you. We were just talking about room rates in Udaipur at this point in time, and of course skyrocketing. But how do we, A, get more travelers in? How do we get them to stay longer? Is it easier for people like you, especially as we build out the luxury side of the market?
Well, thank you first and foremost for putting me right at the end of all the legends that are sitting on this stage. I was literally thinking you're just running away. I said, after all of them, what am I going to say? But no, but I think there are a lot of things that we need to understand, but I think everything's really been summed up really, really well. But the one thing that we need to talk about at this point, and I think we were really happy when the resurgent Rajasthan took place and our Honorable Prime Minister came and inaugurated that and specifically spoke about heritage tourism. Now that was something that was just lying beyond the back burner. Nobody was really talking about it. It was just there. And talking about experiential tourism. Now, these are the sort of things that kind of bring people like us to life. And it's not something that can be done in isolation. It cannot be done by one person. A leaf out of my grandfather's book of what he thought or said for the Lake Palace specifically, that these palaces were built and lived in before America was discovered. Now, and we are really, really happy that people like the Taj, our partners, we are the longest associated partners in independent India today for over 50 years. The only partnership that survived for as long as it has, and it's their first hotel they've taken out after their own hotel in the late 60s. So we're really happy that this experiential tourism is getting to people. And secondly, that what my dad used to say and always often says, that heritage hospitality is not about running hot water, where you have somebody literally with 2 buckets and running with hot water. It's really changed. It's come a very, very long way. And today, a destination like Udaipur is being spoken about globally in the same breath as any other part of the world when it comes to weddings. Obviously began under great criticism, saying that what are these jokers doing? What is this circus up to 30 years ago? And today, either you talk about Italy in the same breath, or you talk about Udaipur or Lake Pichola or the Lake Palace or the Jagmandir in the same breath. So, so that is the power that we've been able to achieve. And it's not been a single person's achievement. It's been the entire community, the entire industry that's put a shoulder to the wheel and has been able to bring things to standard to where they are today. But what we really need to understand is that enough? So that is where we really need the push. People need to change their mindsets as far as luxury hospitality is concerned. It's something that we need to learn to appreciate and not look at it with a condescending sort of an approach, because it is something that goes way beyond what, generally people have a vibe as far as tourism is concerned. And obviously connectivity, so talking of Udaipur again, bringing the greatest and the largest weddings. We still don't have an international airport there. Having the ease of people having to fly down privately into that city is again a bit of a root canal, So, so those are the sort of things that people really need to kind of look at, and that's the sort of support.
How many root canals do you go through every day?
I don't want to go down that route. Just start getting calls at 3 a.m. asking people asking for help. And for the most simplest things, you don't buy a car because you need to fill petrol in it. You buy a car because you need to go from place A to place B. The same way, you don't start a business because you want to make money. You start a business because you want to build communities. And I think that's what the industry has always done. There's a beautiful couplet in Hindi that comes to my mind, which I'd like to share. And I think that's what I've learned from my seniors on stage today as well. कि नियत जिसकी अच्छी है, किस्मत उसकी दासी है, कर्म जिसके अच्छे हैं, उसके घर में मथुरा काशी है.
Mr. Kant, let's address the capital issue. Now, for the kind of infrastructure build out, and it's happening across different spaces, roads and highways is taking care as far as the road aspect is concerned. Civil aviation is doing its bit on air connectivity. But, on balance, what do you believe is the need of the hour now in terms of capital that this sector will require to be able to deliver on the promise and the potential? Can we envisage a new way of public-private partnership to take this forward?
So, Shireen, first and foremost, let me say that during G20, we took our delegates to about 220 destinations of India. I didn't get a single complaint. All of them went back really happy, and when Brazil did its G20 presidency, everybody remembered India. There was nostalgic memories of India, and on top of the list was Udaipur. The experience was just mind-boggling for them. So my belief is that as far as tourism is concerned, this is going to be not only India's decade, this is going to be India's century. And this is going to be India's century because no country I'm saying this because tourism is multi-sectoral.
Yeah.
The great leaders who look at it from a tourism perspective, but tourism grows when many other things happen in the country. And it is going to be India's decade and India's century because we are the only country in the world which is actually making 8 airports and 3 metros every single year. We are the only country which is doing 30 kilometers of roads and about 12 kilometers of train connectivity every day. There's no country in the world which is doing this. And I'm absolutely convinced that if you added in the last 7-8 years about 88,000 kilometers of roads, you've added highways, expressways, many other things, and that will have a huge multiplier impact on India's tourism. When I was in tourism, there was a huge shortage of clean sheets and clean bathrooms in Tier 2, Tier 3 cities. If you go to Tier 2, Tier 3 cities, you get top-class hotels, and I'm really happy that Taj has really created these residences into great assets and many other things, and moved into Tier 2, Tier 3 cities. And so what I feel is that we are the only country which is today a $4 trillion economy, which is growing at 8.2%. Now, if you grow at that rate at a $4 trillion base, and you're aiming to be a $30 trillion
economy.
economy.
Where's the 8.2 number coming from, sir?
Last year. We grew at 8.2% last year. And don't go by this quarter. We'll bounce back. Yeah. So my view is that when no country in the world with a $4 trillion base growing at 8.2%, its tourism is bound to grow and expand rapidly. And it's for us really to use this opportunity to ride on this wave of growth and exploit it to the full. And my view is that much like the share prices of in IHC and ITC all have boomed because of his bonuses have boomed because of the share prices booming. I mean, his shares used to be 40, 50 bucks. It's 850 bucks or something now. So hotel industry, each one of you
is checking the ITC share price at this point in time.
No. So each one of you is going to be a billionaire entrepreneur from India because of the tourism industry. The next big wave is going to be the tourism industry of India. And we just need to make sure that when this growth expansion, really booming of tourism industry takes place, we are able to just chip in at the right places by making sure that we push the states. We push the states, their chief ministers, to take ownership of job creation. We push them forward to create their own brands. We push them forward to provide the last mile connectivity, because when this growth takes place, it should be an orderly growth for job creation.
Bisanand, the final word to you, sir.
The final word, I take Mr. Khan's point that if you're all things to all people, you end up being nothing. I said we haven't given a single message. We give a multiple messages, and I'm equally responsible, having headed many forums. So the single message is that create employment. We must get that message across. And if we get that message across, I was just imagining and dreaming that next year CII Summit or the year after, we have created that push to a pull.
Yeah.
And I imagine a room where all the private sector is sitting here and all the government, including the Prime Minister, sitting there, asking the private sector, what can we do for you for tourism? That would be a real dream.
Well, we hope that that dream is actually realized as early as next year. I would love to host that conversation again. But many, many thanks to the panel for joining us here.
Let's get an outlook going for 2025. Last couple of years have been great. What is 2025 going to be like? We have Gautam Chachoria, Head of Global Markets India, and Tanvi Gupta Jain, Chief India Economist at UBS Securities India, joining us right here in our studios. Gautam, Tanvi, great to have both of you here. Appreciate your time. Let's just start at a very simple, basic level. It's been a good last few years, right? I'm actually outstanding if you look at broader markets, not measured by just the Nifty per se. 25, Gautam, are you starting with a positive skew, very positive skew, or kind of a more tepid kind of, what are enthusiasm levels like?
Well, I'll start. Thanks for having us here from UBS.
Yeah.
I'll start with a mix of two things. One is our EM strategist. He's still underweight India on a relative basis for 2025. If I speak to investors and then the feedback I'm getting, look, it basically boils down to policy stance and reforms agenda. India underperformed last few months largely because of the earnings miss and growth surprises, not necessarily because of India, China, and what's happening globally. Those, in our view, were small factors. The bigger factor has been the slowing growth here.
And you said policy stance. You
Policy
mean
stance.
monetary or fiscal?
Monetary and fiscal both. And monetary also, Tanvi is the expert there, but mix of both rates as well as a liquidity stance.
And you think the slowing that we've seen in the recent months is because of that?
You could ascribe a large part of that. Again, both monetary, one of them doesn't work in itself. It has to be together. So when both of them were, in a way, slowing down or forcing growth slowdown, in totality, we saw the surprise or negative surprise to some extent in 2Q earnings or in the GDP prints.
So that gets us to Tanvi. It's all stance, both fiscal and monetary. On fiscal, there is broad agreement that government spending there's no option, but it has to pick up in the fourth quarter. Monetary is kind of less clear. So just your first thoughts.
Sure. So if you look at the growth momentum in India is clearly slowing. And I think early 2025 we'll get to know what is the likelihood of US imposed tariff hike on China. And that will definitely lead to more downside risk, not only for India, but as well as the global economy. So I would say India definitely needs a monetary as well as a fiscal policy support. Fiscal policy at this point, we have seen the government capex spending has been lagging. Year to date, capex is down 15%. Even if I expect that the government will be increasing the capex spend by 30% in the remaining 5 months, the full year capex is only going to be 4%. So clearly, I think at this point, there is definitely a need for monetary policy support as well. We have a 75 basis point rate cut expectation starting the Feb policy of next year. Obviously, a focus will be more on how and the timing of the rate cut, especially with the weaker FX. But looking at the real policy rate in India, adjusted for the GDP deflator, at the upper quartile or the 10-year upper quartile, definitely there's a room for a rate cut in this cycle.
Okay, hi Tanvi as well as Gautam, and good to see you all in the studio. Thanks a lot for coming down. Well, a quick question on the current GST rates. I was speaking to a couple of experts last week, and some of them indicated maybe the government should look at lowering GST rates. That could be one of the measures. Do you agree or you don't think so?
I think in the past we have seen that if you reduce the direct tax rate, it may not have a direct impact on the economy because I can use that lowering of income tax rate to boost my savings rather than really boosting my consumption. But a cut in indirect tax rate generally tends to have a much larger impact on consumption spending because it's a tax on consumption rather than a tax on my directly income levels.
Yes.
But I would say a GST council has to decide. It is not so much to do with the government.
Yeah.
Eventually, the GST council has to take a call. And the GST collections have been buoyant. The tax revenue in India has been buoyant. So maybe we can look at specific products where we want some easing in the GST rates. But definitely one idea which is already going on in the market and should have or should bode well more for consumption.
Okay, on select items, maybe some kind of a cool-off could bode well. Well, Gautam, you come in. You've given us an answer with regard to 2025. But you stop short of giving us estimated returns. 2025, which way would you be leaning? Mid-single-digit returns or high single-digit returns? Or do you think that we could brace for a difficult year, which would mean a negative year in terms of equity market returns for 2025?
Look, there are many moving parts, as always is. But,
Indeed.
even more so now, given the global backdrop of post-US elections, the policy stance there, as well as, look, there's a lot of hope building out around fiscal and monetary. And I'm less worried about what happens to FY25 GDP print and what happens to 3Q or 4Q earnings. I think that's gradually getting priced in by the market. Market knows that growth recovery, if at all, will be slow.
Yes.
What's critical is what scale this policy stance happens at, and therefore what's the outlook for FY26. And I think that's where it boils down to whether it's going to be a tough year or whether it was going to be a single year, double-digit year. Look, valuations in India, I'll worry less given the flows locally have remained resilient. And I don't see any reason talking to all the key clients who have these flows coming in, it's stopping anytime soon. So if the flows will remain resilient, I won't worry about valuations or necessarily market correcting in a meaningful way. Consolidation phase or single-digit, double-digit will depend, to me, boils down to policy stance and reforms agenda. And I'll not underemphasize the reforms agenda part. Look, India also has been a big reform story over the last few years, which has given hopes to market that the long-term growth in India looks exciting. That's taken a backseat along with the short-term earnings and short-term growth because elections, post-elections, now there's no election happening.
There's no excuse.
No happening for many months now. So whether we see a reforms agenda back on the table in the budget, post that, pre that, I think that also plays a role.
Since you mentioned earnings a couple of times, FY26, what are you all penciling in terms of earnings? Because FY25 is not going to be as good as what we thought at the start of the year. FY26?
Look, analyst expectations in India always is that you have a recovery next year and we go back to low double digits to high single digits. That's a broad range, depending on the sector you look at. But the question is not just that. It's what markets start believing in. If it's going to be a double-digit earnings growth, which is linked to the policy stance, I think markets will be fine. We should still expect a single-digit or even low double-digit returns.
How was 24 in terms of, I mean, so UBS now, do you have a lot of mid-cap coverage, Gautam?
Yeah,
mid-cap, small cap?
Yeah.
That's where the interest is, isn't it?
It still
because
is.
the larger conventional sectors, I mean, it's a bit thunder. But broader markets, it's exploding. I mean, the interest levels, activity. So just,
So look, that's a space we want to keep building our coverage on, but going back to where market interest is, clearly among the foreigners, if you go back many years, it used to be the big private banks, consumers, IT services, and that's what's been not performing that well in the last 2, 3, 4 years. The interest is broadened out dramatically. We all know, we spoke about industrials, etc. That's not going to change in a hurry. Even now, despite the weak earnings or earnings cuts, those sectors, the cyclical sectors, are still seeing good growth compared to the rest of the markets. So I think that's a continuing trend, and that's what we want to tap on by expanding our coverage. Even today, investors' interest, like we had a conference a month back, the foreign clients, they were more interested in looking for bottom-up ideas around the mid-cap space. So that space is continuing.
Again, it's all single stocks and individual ideas, but there are some themes from where these come from. I mean, new energy transition. I mean, these are all sort of new exciting areas. There are lots of listed opportunities which were not there 3, 4 years ago. So any themes you can identify which you think one should look for? I mean, as they say, fish where the fish are. So where are the fish?
So look, the names you mentioned, nothing new for us. Those are sectors and themes we remain bullish on longer term. Our analysts, for example, industrials analyst has been downgrading a lot of names in the last 3 to 4 months, given where the valuations are, given the earnings momentum. But that's a space to be in. Industrials, cyclicals, capex, specialty chemicals. The sectors where we are not so convinced yet at a broader level is pharmaceuticals, where we see very select opportunities, but broadly we see headwinds. The renewable space looks very, very exciting, very exciting. There's a lot more which can happen versus what's been announced. And we're already only seeing the early stage, you would say, of the listed universe participating in that in a big way.
When you say renewables, what part of the renewables
The
chain?
entire value chain, from utilities to suppliers to EPC companies. And we've seen the playbook happen in China last many, many years. It's early stage in India.
Is it driven by protection, though, a lot of it?
Look,
I mean, not right or wrong, but I'm just saying. And
forget right or wrong, but protection is also in the context of what's happening globally. If it's protection happening only in India, then it would be a worry from a longer term
it's happening
perspective.
everywhere. So
If it happens everywhere, then it's possibly feasible.
Okay, all right. Tanvi, you come in on this. We've got a new RBI governor. Mr. Maruthur takes over from Mr. Das. Some would have argued that maybe, he should have got an extension of, say, a year or so. The bigger problem is the vice captain, so to call it, Mr. Patra as well, could be moving out. How do you see, the new governor in terms of a stance, continuity, as well as the key focal points that he'll have?
Sure, this is not the first time you're having a
जब लक्ष्मण मूर्छित हुए थे तो हनुमान जी उनके लिए संजीवनी बूटी लेके आए थे। तो आज दिल्ली के बुजुर्गों के लिए मैं संजीवनी योजना का ऐलान करने जा रहा हूं कि 60 साल से ऊपर के हमारे जितने बुजुर्ग हैं उन बुजुर्गों का पूरा इलाज फ्री करवाया जाएगा। इसकी चुनाव के बाद हम योजना लेके आएंगे, योजना पारित करेंगे। वो चाहे सरकारी अस्पताल में इलाज कराना चाहें, चाहे प्राइवेट अस्पताल में इलाज कराना चाहें, उनका पूरा इलाज फ्री कराया जाएगा। इसमें कोई बीपीएल, एपीएल, टीपीएल, आरपीएल कोई लिमिट नहीं होगी। सबका इलाज, चाहे अमीर हो चाहे गरीब हो, सबका इलाज मुफ्त कराया जाएगा। और कोई अपर लिमिट नहीं होगी। आप जितना आपका बीमारी पे खर्चा आएगा उसका सारा खर्चा दिल्ली सरकार वहन करेगी।
But the word reciprocal is important because if somebody charges us, India, we don't have to talk about own, if India charges us 100% and we charge them nothing for the same, they send in a bicycle and we send them a bicycle, they charge us 100 and 200, India charges a lot, Brazil charges a lot. If they want to charge us, that's fine, but we're going to charge them the same thing.
India's market news headquarters. Cutting-edge analysis, influential insights, market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. We were thinking that the year would wrap up without incident, but incident is what we have on our hands, and a big one. And it's Royal Global Markets. We're talking about, of course, the Fed decision overnight. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, hi, good morning.
Hi, good morning. This is turning out to be quite the turbulent end to the year. Where's Santa?
Well, so it looks like Santa's missing in action. And last night till around 11:30 odd, if you looked at the US markets, they were up actually. The Dow was up. And bam, you wake up at around 5 this morning and you see the US markets, have done a total U-turn. 10-session losing streak for the Dow. Yeah. And Powell had a plan of its own, looks like.
The surprising thing is, and we've discussed this last 2-3 days, that what if, because data lately has been very strong, what if he gently guides the market away from rate cuts in 2025? He did that, and he did it gently, but the market reaction was anything but gentle.
Violent.
So the market reaction was violent and rocky, and actually it spread through wildfire across, macro markets and, all kinds of things. I'll get to that in just a bit from now. But what did the Fed say? Just 4-5 points, which quickly summarizes that. So we got a 25 basis point cut. Don't think we didn't get it, but it was kind of sort of held back, right? There was one guy, one sort of voter who was a dissenter. He did not want a rate cut, and it was basically not a unanimous decision. And there were some others who kind of were a soft nose, but there was one outright dissenter, even with the 25 basis point cut that we got. Now, the big surprise for the market, actually not a big surprise because, but I think it's just that the market's done so well, I guess. That's the reaction really. Surprise, 2 cuts next year versus consensus expectations of 3 cuts. Actually, I'm saying consensus of 3, but some were at 4. That's 4 cuts in 2025. Now you're at 2. Long run Fed funds rate has been revised to 3% from 2.9%. So we all kind of talk about where should the neutral rate be? Is it really going to go back all the way to 2%? Well, guess what? It's moved up a little bit. Core PCE forecast, that's the inflation forecast, will revise up all the way for 2024, 25, 20, all the way until 2027. So inflation up. Unemployment rate forecast will revise down. For 2024 till 2026. Basically, what the Fed chair essentially is saying that the economy is doing well, much better. So unemployment we're seeing to be low, sustained low. Inflation expected to be slightly stronger, and we need to be cautious. So he stressed that caution is needed when cutting further, given that we are getting close to neutral. If you think about it, this is actually in some ways diametrically opposite to what we saw in September. Because in September, what was the backdrop? It was largely a strong economy, and the Fed cut. What did the market rates do? They went up. After, usually market rates would follow what Fed funds rate is doing, directionally at least. Well, they went in opposite directions. Right now, you've got, once again, a strong economy. Lately, data all has been very strong, but they've decided to pull back in terms of what they will do going into 2025 and beyond. And I think the market, of course, acknowledged that. The market reaction will come up next. S&P down 3%, NASDAQ down about 4%, Russell 2000 about 5% cut. The WIX, the CBOE WIX jumped 74%. We're almost at about 28 levels now. You got the 10-year yield, 11 basis points higher, 4.5% straight there. Actually, across the curve, 2-year, 10, 5, 30, everything went up. Dollar index is now past the 108 levels. So 1%, 1.16% higher to above 108. And look at the currency crosses. There were lots of breaks. The euro, the CNH, that's a Chinese currency, the Brazilian real. You could look at the Japanese yen. And I think there's a Bank of Japan sort of decision which will also come into play. But lots of stuff happened in currency, in rates, in FX, in the stock markets as well. I'll just get 2 levels here. The GIFT Nifty, I'll just put the GIFT Nifty up for a quick bit because that will give you a sense of where we are now. And then I'll just come back to the levels which I want to put out. That's the open. My God. So that's a 320, 330 odd point cut, 23,928. So having said that, let's just put the levels up. So 23,900 is the sort of first support zone. I think we're going to sort of start around there if the GIFT Nifty materializes by 9 o'clock, 9:15. And then you basically, these are nothing, but these are not averages. These are not some indicators. These are basically lows that we had recently, 23,900, where the market actually found some support. And then we had another sort of attempt at a sharp rally from there. And then 23,263, of course, is the lows that we saw 2 months back. Now, the Nifty Bank is, of course, the support here comes in at about 51,353. That is nothing but the 61.8% retracement of the rally that we had in the Nifty Bank from the recent lows to the recent high before it turned down once again. So those are levels. I think it's going to be a bit of defense in that sense. So no point really looking at in the near term what are levels to take out on the upside. The 20-day, of course, is the big one, which broke yesterday, and that seems to be working, that it indicates a short-term kind of a push lower. So a 300-point cut on the GIFT Nifty. Hopefully things improve a little bit, but we'll see. Rima.
Well, and to add to the volatility, today is also the Nifty 50 weekly expiry. Yeah. So markets have been in a downtrend. We've been declining now for the last 3 trading sessions. And so far this week, the Nifty is down close to about 2.5% from its all-time high levels. The Nifty is down nearly 8%. Mid in the small cap index, which was resilient till last week, has also started correcting now. The mid in the small cap index have lost nearly half to 1% so far this week. Big FI selling. So yesterday, the FI sold close to about 1,300 crore in the cash market, taking their 2-day selling to nearly about 2,000 crore rupees, while the DI buying was also very large, 4,000 crore. But despite a net inflow, right, the DIs bought so much more than what the FIs sold, we still had a down day for our markets.
Well, that's right, Rima. You know, and at times the screen reading is telling you the picture, right? You know, last few sessions the Dow has been weak, the Indian markets as well a little bit weakish, and you saw the US dollar was firm and the yields as well were holding firm, which told you that maybe in fact the Fed has a plan of its own and maybe it's not going to go according to script. Mind you, they went ahead and they cut rates, but the commentary clearly was very, very hawkish, and that's something that equity markets will not like as well. The top 2 cues today, well, the Fed, they have spooked the markets, and also you'll have the Nifty, weekly expiry that will play out. So expect some kind of, of volatility on the back of that. Last 2 expiries as well, we've seen a fair bit of volatility. So I think this time it's going to be no different. That said, a bounce is due, but when it comes about is going to be the question. And also now you have the global picture that's turned a little bit murky. The reason that I say a bounce is due is because the PCR has moved to the lowest that we have seen in the last many months. In fact, I think it could be at the lower end of what we have seen in the last couple of years, at around 0.55 odd. So the PCR has come down to those levels, traditionally from where you do see a bounce. And that's because the call writers, they have been having a blast. 24,300 call, 24,500 call as well, 24,200 call. All of them have seen a fair bit of writing. But on the downside, the 24,000 put, well, that has seen some bit of action. And that's going to be an important mark because in all probability, we start below those levels. What about positioning? Well, the FIs, they moved back to around that 1 lakh contracts odd on the short side. So it was at around 40,000 contracts a few sessions ago. That's moved to a lakh. Clients, well, they are long positions, net long positions, which they were unwinding earlier. It came down to around a lakh contracts odd. Last few trading sessions, it's back to around 2 lakh contracts or thereabouts. So they have been adding some longs as well. Now, moving to the levels that we're looking at. The Nifty at a very, very crucial juncture. I think this mark is very, very important. 23,800 to around 23,900. The options data, the 200 DMA, that's the important mark. Otherwise, if you breach this level, then a revisit of the recent low at around 23,200 could pretty much be on the cards. On the upside, well, 24,300 will be the level that you'll be watching out for. The Nifty Bank as well placed very, very interestingly as we speak. I think the support level comes in at around this 51,500 odd mark, 20 DMA. So we're in a broad range. The markets are, in a bit of a tizzy because the Fed has spooked global markets, but a bounce is something that the street will be looking forward to. And some of those technical indicators, they suggest we're oversold. But let's see whether or not that bounce comes about.
Thank you very much for that. Let's get to the equity calls then this Thursday morning. Jonathan Garner of Morgan Stanley says the Fed delivered a hawkish cut yesterday, indicating further progress is needed on inflation to justify additional easing next year. He says this was a shock to cross-asset pricing, with equities, bonds, gold all significantly weaker, and in particular the Nasdaq among the major US indices. He adds, while it's too soon to say the post-presidential election rally in global equities is ending, he would remind clients of their concerns on valuation and cycle risk, particularly in IT, auto and industrials.
Some more calls coming in. This is Ryan Wang of HSBC who says that the FOMC cut the US policy rate again, but signaled fewer rate cuts in 2025. This likely means a skip in January, no cut in January. He adds that he now forecasts 75 basis point rate cut in 2025, delivered over the next 9 months. He says they continue to look for a strong dollar, see a tug of war in the treasury market, and remain positive on risk assets.
Well, the big story is the sharp Wall Street sell-off in reaction to the hawkish FOMC cut. So let's listen in to what Fed Chair Jerome Powell had to say about the outlook going ahead.
Today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals, maximum employment and price stability. We see the risks as two-sided, moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two. You know, we've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation, and that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
Well, there's a lot to talk about, isn't it? And Mr. Powell has given us a lot to talk about. Ed Yardeni is with us. He's president of Yardeni Research. Matt Orton, chief market strategist at Raymond James Investment, is also now with us. Gentlemen, good morning. Great to have you with us here. So, I was saying this, Ed, earlier. Actually, the conditions remain largely same. September economy was looking strong. We got a cut. Here, economy largely, all data lately has been strong, and we got a sort of very constrained kind of a cut with a dissenter and then pulling back in 2025, etc. Your thoughts, Ed, what we saw in the market reaction then?
Well, none of this really surprises me. I thought before the September 18th cut that they wouldn't cut, or they wouldn't cut by more than 25 basis points. I felt the economy was resilient, was showing a lot of strength, and they really hadn't quite accomplished their mission. They weren't quite at 2%, but they just wouldn't listen to me. And they went on and cut it by 50 basis points, and then about another 25 basis points in November, and yet again today. And so they are down 100 basis points, but the economy is demonstrating that they may be stimulating an economy that's already quite strong. And what we've gotten out of that is a melt up in the stock market. And now with the Fed changing its mind and saying, you know what, maybe we need to slow down here. Maybe we need to pause for a while. The market's had a real significant sell-off here. But this is a healthy development because I think the market, I didn't want to see a melt-up occurring in here, and I don't mind a bit of a correction.
But Ed, how much of a correction here on the S&P, say, for example? We lost about 3% last night.
Right.
Yeah.
Well, it's pretty powerful it was pretty powerful to the upside, and it could be pretty powerful to the downside. There's still people who have huge capital gains from the bull market that started in October of 2022, and many of them probably would like to sell, but if they sold now, they'll have to pay taxes on those gains. So I think a lot of people were waiting until January to sell. So we could still have some of that ahead of us. And then, of course, we got the potential for tariffs on the day one that Trump enters the White House. We have the potential for a government shutdown because once again, Congress can't agree on what kind of budget they should have. So I would say that this could last a few weeks into January, and it could be as much as 10%, maybe 15%.
10 to 15% correction for equities on the cards. Matt, hi, morning. So come in first on the Fed projection, what you made of it. the kind of market reaction that we've had with, markets nosediving? And do you anticipate a correction? And one more, when could the first rate cut come? We're talking about 2, but are we in for at least a prolonged pause, say for the first 6 months?
Hey, good morning, Rima. Always good to see all of you. And I think what we got from the Fed today really wasn't all that surprising. At the end of the day, we knew with pretty much certainty that they were going to cut rates today. Whether they should or shouldn't is a different story. But I think what maybe the markets got a little bit spooked of was a confirmation by the Fed that inflationary pressures are building, and that the change in the summary of economic projections and the change of the dots is leaning on the more hawkish side. But when I look at the sell-off and I look at what the Fed implications are with the totality to the underlying market thesis, which is earnings growth, the fact that we have broadening earnings growth that really for the past 2 quarters or so has been translating into increased price breadth, the past week or 2 outstanding, those trends are still there. Economic growth is still there. The reason that the Fed is pulling back a little bit is because growth is still very strong, and we're potentially worried about a combination of more pro-growth policies intersecting with the uncertainty of what tariffs could look like. And so to me, I think these sorts of pullbacks could be good buying opportunities for the market. As you all know, I've been optimistic for a long time. And while I might not be willing to step in right now because I just think there's a lack of bids, we're heading into the end of the year where the S&P 500 was up almost 28% heading into today. So I just think a lot of investors don't want to step in and potentially give up gains if they're on the wrong side of the trade. But there'll come a point where the market looks very, very oversold, and the long-term fundamentals of many, many companies is going to propel the market higher again. So I would tell investors, as I have been, use downside opportunistically, because nothing the Fed has said changes my opinion. And whether we get 2 cuts next year, 3 cuts next year, probably March is going to be maybe the time where we look for another cut. That's still supportive. Rates are still coming down, maybe a little bit more slowly than we originally projected.
All right, got that, Matt. Thanks for that. Good morning, gentlemen, and welcome to the show. Ed, the last time we chatted, you said you're not too optimistic about the cuts, and you don't expect to see a melt up towards the end of the year. Boy, oh boy, you were bang on that. But what's the way ahead from here on? The US markets are saying maybe it corrects 10 to around 15% odd. What about the Indian markets? We have had a good run. We've pulled back a little bit as well, in the recent past. But what kind of a correction do you see in the Indian market? And where does India now come in the emerging market basket?
We've got a stronger dollar now. We've got a Fed that's somewhat less dovish. I'm not sure I would call it hawkish at this point, but that takes some of the excitement out of emerging markets generally. And of course, the emerging markets that have done the best are the ones where there are profits to be taken in the event of some disappointments about the outlook for interest rates, particularly in the United States. So I think India is prone to the same kind of correction that we're likely to have in the United States. But I agree, these are still bull markets. I don't see a recession occurring anytime soon. And without a recession, I think the most that we get is a correction of 10, 15%.
Matt, just to put numbers to that view, you said things can get very oversold. But what will be very oversold? You want to sort of as Ed did, you want to put some numbers to it? How much can this go?
Yeah, I don't even know if we have to hit 10 or 15% down. Honestly, that sort of pullback in the U.S. market, I've been telling clients, isn't off the table for 2025. Okay. My expectation is that we have a good market with increased volatility. But even a sell-off of call it 8% or so, I think would be par for this uncertainty we have. But it would be healthy to get more long-term investors back into the market. And there's nothing wrong with that sort of a sell-off in the context of a broader long-term bull market. So there's definitely room to go. And I think India in particular is less prone to that sort of a sell-off because you've just gone through a 10% plus pullback. And I think you're seeing strong domestic demand. The FII demand, I think, is down because it's in sympathy with what's happening in the US, and I think a reticence to take on additional risk heading into the end of the year. But again, the fundamentals look very, very strong across a number of companies, and those high quality assets like we've talked about before, some of my favorite names in the auto space, the financial space, some of those have held up better than the rest of the market. So again, sticking with quality is another really important way to navigate some of this volatility. And you can pick up these high quality assets at a discount during the sell-offs. That's a good thing for long-term investors.
No, absolutely. Ed, just one other thing, new development, right? Which is this, the U.S. government shutdown, which now looks likely on Friday, because now there is a stopgap bill, but it's not been voted on. It doesn't look like it'll be voted on. Trump and I think post the New York close, they came out and said that they want the bill to be passed, to be debated now, and they also want a spending increase, right? I mean, you had Mr. Musk on X, sort of, very loudly expressing his views about how people who say yes to this bill should be voted out. How should we read this, Ed?
Well, I think you put it in the list of things that can go wrong in the short term that might continue to feed this correction. I mean, that news that you just mentioned came out today in addition to what the Fed was doing. So I think the markets are rightly concerned about some confusing signals from monetary policy and fiscal policy. And I think there was sort of a widespread consensus that a lot of things are about to change, but they'll, on balance, will change in a positive way. But it's never quite that easy. It can be quite sloppy. And I think it's going to be sloppy for the next several weeks until things kind of all settle down and we see what makes it through Congress and what doesn't.
Is it the first signs of a bit of a struggle between Mr. Musk and his views on? I mean, he's promised to cut $2 trillion in federal spending, and what the incoming president and Republicans would want to see happen. I mean, there's a disagreement there, right? I mean, with this at least right now.
Look, Musk is not in the government. He's an advisor. He's become there's a bit of a what would we call a bromance between Musk and Trump, and maybe there's going to be some stresses and strains along the way. But at the end of the day, Musk is, I think, going to recognize that the president of the United States is the one who calls the shots. But I think he's right to point out that at some point here we have to end this Christmas tree approach to dealing with fiscal policy. We just can't keep putting more and more presents under the tree. And so I really don't have a problem at all with Musk expressing his opinion. But at the end of the day, people like Representative Johnson, who is going to head up the Republicans in the House, has to get the government to work. And that may require some compromising. It's not going to be a perfect situation for anybody.
We're in for some uncertainty for sure. Matt, just a quick word on the Indian markets. You spoke about how India is relatively much better placed. But will the FIs continue to remain reticent about investing in India with the dollar index now at a 2-year high and crossing 108?
Yeah, Rima, it's a good question. It's certainly a headwind to the FII story with respect to India. But I think this knee-jerk reaction with the dollar higher, I'm not sure how much further that's going to continue or how long that's going to continue. So whether or not it moves a little bit higher, markets trade a little bit lower in the very, very short term, again, it just creates more of an opportunity. But when you come back to whether or not that changes the underlying fundamental growth story, the big secular growth tailwinds that are driving the investment case for India, it doesn't. And I think when U.S. investors look for ways to diversify their portfolios, especially as these known unknowns I've been talking about with respect to policy moving forward earlier in the year come to bear, I think finding some of those countries where the growth is a little bit less related to just politics in the U.S., I think that becomes a very important asset and diversifier, especially when you look at other places like Europe, other parts of Asia. You look at the issues that are happening in Korea right now, Taiwan being entirely driven by semiconductors. I think India looks like a very, very attractive way to diversify away some of your risk and concentration risk that you have in the US. So I think they will eventually return, especially because I think the Chinese story just continues to disappoint. And that money, I think, eventually slowly keeps moving back to India.
Matt, Mr. Yardini, thank you very much for joining in for now. The GIFT Nifty is suggesting a cut of close to about 300 points. But the rest of Asia is also a sea of red. You've got Taiwan down more than 1%, 1.25%. Nikkei is down close to about 1%. Hang Seng is down nearly 1%. Shanghai slumped more than 0.5%. Across the board, the cuts are pretty deep. Let's also tell our viewers the interactions that we've lined up on the show today. So first up at 9 a.m., we'll be joined by Amit Dixit of ICICI Securities. We'll put the focus on the metal sector. 9:20, Krishna Sangvi of Mahindra Manulife Investment Management and Robert Sorkin, global economist at Citi. They will be our market masters of the day. Post that, Atul Chaturvedi of Sri Renuka Sugars will be with us to discuss whether OMCs will prioritize cooperative sugar mills for ethanol purchases and what this means for companies like Sri Renuka. Following that, the management of Trans Rail Lighting will be chatting with us as their IPO opens today. And we'll also put the spotlight on the real estate sector with Anuj Puri and Rajat Katuria to discuss the new housing supply inventory overhang as we enter into 2025. And towards the end of the show, it's our special segment, It's the Economy. Lata will be in conversation with Midhul Kotecha of Barclays to discuss the impact of Fed's hawkish commentary on emerging markets, Indian currencies and rates.
Well, time to slip into a short break, but we've got a lot of stock-specific action tracked for you when we return. For the time being, I'll run you through the list. We're looking at United Breweries, Lupin, Enviro Infra and ABB India. All of them will be reacting to positive news flow. On the flip side, you have Asian Paints that will be reacting to negative news flow, IPCA, DOMS, Yatharth Hospital, Zaggle Prepaid and Borsable Renewables that all be reacting to negative news flow. Slip into that break, come back. We'll get into further detail on all of these names.
Welcome back. It's a tough day ahead of us, at least to begin trade with. Markets have anyway lost 2.5% over the last 3 days. And this morning, again, that implied open 330 points lower. But let's talk about the stocks you should have on your radar this morning. Our research team is standing by with CNBC-TV18's list of top stocks for the day. Mangalam, first up, Asian Paints and United Breweries.
Well, I'm looking at Asian Paints first up because there have been a couple of senior leadership exits with immediate effect. Vishu Goyal has resigned as the Associate Vice President Retail Sales, Commercial and Marketing. And Shyam Swami too has resigned as Vice President Home Improvement, Decor, Services and Retailing. Both of them have cited personal reasons as cause for exit with immediate effect. And remember, this at a time when competition is high. Very recently, the management of Birla Opus did tell us that industry in the second quarter was impacted by consumer sentiment softness, but also competition from us. So those are factors that may weigh down on the stock. Also important to know that the company has announced replacements for them. Ashish Ray, who is currently the Associate Vice President Project Sales and Associate Vice President Retail Sales, Marketing and Commercial, will be, replacing one of the resignees. And we also have Gagandeep Singh Kalsi, who is the current AVP Strategy, Business Development and Senior Management Personnel, will handle Home Decor and Services. There have been replacements, but senior leadership exits are a negative. On the other hand, positive news coming in for United Breweries. They've announced a productivity program. The company has said that they will redesign their supply chain and centralize finance functions to drive efficiencies. What does all of that mean for their benefits? This could yield anywhere between 1.5% to 3% of annualized savings. But in the third quarter, there would be a one-time exceptional cost of redesigning these. So we'll keep an eye out on that. A positive coming in for United Breweries.
Okay, all right. Thanks a lot for that, Mangalam. Well, let's go across to Vinny. She's here and she's tracking two pharma companies, Lupin as well as Ipca. Morning, Vinny.
Good morning. So starting with Lupin, we're expecting green year after the company has received an ANDA approval from the US FDA. This is for two tablets. One is entrocitabine as well as tenofovir. Now, these two tablets actually are used as a combination for two antiretroviral medications to treat HIV as well as reduce the risk for HIV infection. This tablet is a generic equivalent of Descovy, which is a Glide Sciences Inc. They have the medicine Descovy, so this is a generic drug of that. Now, the product will be manufactured in Lupin's Nagpur facility. They have a 180-day exclusivity for this as well. And the market size of Descovy is around $1.8 billion as of calendar year 2023. Exclusivity is not only for Lupin, but other companies also that are there. This is expected to be launched in FY32. Keeping an eye out on this one, a positive for Lupin. Now, moving on, we have Ipca Labs, that's also in focus. Now, we're expecting a bit of a decline here after one of its promoters has sold around 1.6% stake in the company, 40 lakh shares in yesterday's open market. Block deal is what it came in as. 600 crores worth of stake is what the promoter Usha M. Chandurkar has sold. Now, Usha M. Chandurkar held around 3.27% stake as of September 2024. And overall, the promoter stake has now reduced to 44.7%. All the promoter and promoter group from previous 46.3% in September 2024.
All right. Thanks very much, Vinny, for that. And of course, we reported on that Ipca story. I think our colleague Nimesh earlier highlighted on D3 Chatter. DOMS is another one with which we sort of reported earlier, is now being confirmed. There's an offer here as well. Vivek is standing by. Vivek, morning.
Well, good morning. So DOMS Industries, what's actually happened is that the one-year lock-in for this particular stock, after the IPO has ended, has pointed out by our colleague Hormaz. So immediately, one of the promoters of the company, that is Fila, is looking to sell close to 4.5% stake in the company. The deal size is, the base size of the deal is close to 510 crore. With the upsize option, the total deal size will be 764 crore. What is the floor price? Close to 2,755 rupees a share. Remember, Fila held close to 30.5% stake in the company, and the company has said that there is a 90-day lockup on further sale of shares, and they've also indicated that Fila intends to go ahead and keep its shareholding steady as far as DOMS is concerned. But expect some red, given the fact there's a significant block deal that's anticipated today.
Thank you very much for that. Yatharth Hospitals, they did their IPO just last year. They had done a fresh issue of 490 crore rupees via that IPO. And now, about 14 months later, the company is looking to raise some more money, Vivek. What have you learned?
Well, that's right. A significant fundraising on the anvil as far as Yatharth is concerned. They launched a QIP. Company is looking to raise close to 700 crores. The base size is 450 and the remainder is the upsize option. Indicative price for this particular issue is close to 595 rupees a share. Equity dilution is quite significant, over 13.5% of equity dilution to go ahead and get this particular fundraise in. Why does the company need funds? The company, number one, debt repayment of both itself as well as a few of its subsidiaries. Company has done significant acquisitions both in Delhi as well as Haryana. So part funding over there, and along with that, purchase of medical equipment is something that the company needs fund for. Again, significant equity dilution. Expect some red on the stock today.
All right, Vivek, thank you very much once again. Zaggle is the other one. I think there's a block here as well. It's raining blocks. Abhishek is with us. Abhishek, morning.
CNBC-TV18 Newsbreak has been confirmed. Zaggle has launched its QIP. However, the QIP size has been downscaled. So they had a board approval of 950 crores, but they are looking to raise only 450 crores with an upsize option of raising up to 750 crores, which is lower than the board approval of 950 crores. Indicative price is about 523.2 per share. We had mentioned last week that the price could be anywhere between 500 to 520 per share. Now, the discount is about 6.75% to closing price and 5% to SEBI floor price. However, we need to look at the demand. What I hear from my sources is that the demand is a bit mixed bag over here. Equity dilution could be around 10.5%. The BRLM to the issue is Motilal Oswal, Equirius as well as Nuvama Wealth. Back to you.
Thank you very much for that. Back to Vivek now. And this time it's news on Borosil Renewables and Enviro Infra.
Well, that's right. So Borosil Renewables yesterday held a board meet. The board meet was mainly to consider a fundraising proposal. Whole raft of changes and announcements that the company has made. Number one, remember one of the main furnaces, that is the SG4 furnace, where the company was looking to go ahead and install capacity close to 1,100 tons per day. They've gone ahead and downsized that particular project. They now expect to put in only 500 tons per day as far as the capacity is concerned. This on the back of the fact that the company says cash accruals have been quite limited in the last couple of years due to low demand as far as the domestic market is concerned, as well as low prices. Along with that, the company has withdrawn the rights issue that they were looking to go ahead and raise 450 crores. Instead, they've gone ahead and upscaled as far as the fundraising is proposed. They are now looking to raise close to 600 crore, both via preferential issue to promoters as well as non-promoters. Along with that, due to very poor demand conditions, demand conditions in the European market, they are also going ahead and saying that the furnace in the German subsidiary will be stopped or cooled off for some particular time. The other stock on the radar is Enviro Infra. Revenues higher by almost 78% on a year-on-year basis. It's a recent listing, so Q2 results have come out. EBITDA higher by 150%. Margins very strong, 26.2 versus 18.7. Profitability almost tripling on a year-on-year basis. Order book very strong, 1,957 crore. The company says that as far as FY25 guidance is concerned, they are targeting 1,000 crore guidance, and they are expecting CAGR of almost 35 to 40% for the next 3 to 4 years.
Okay, all right. Thanks a lot for that, Vivek. Well, Vamakshi is here to tell us about ABB India. Morning, Vama.
Well, good morning, Nigel. The parent company ABB has signed an agreement to acquire the power electronics business of Gamesa Electric in Spain from Siemens Gamesa. This in turn will help the company strengthen its position for high-powered renewable power conversion technology. This transaction is expected to be completed in the second half of 2025, but the financial details, the financial terms of this agreement are not yet known. They are undisclosed. So therefore, we will have to keep an eye out for that. But, the offering that they have acquired will largely focus on electrical products for power conversion, and it includes double-fed induction generator wind converters, industrial battery energy storage systems, and utility-scale solar power inverters. So this in turn complements the existing portfolio that ABB has, and therefore bodes well for ABB India as well. So going with the green for this counter.
Thank you very much for that. Just keep your eye on Shopper Stop as well, because as Nimesh was highlighting yesterday in a block deal, Amazon has completely exited Shopper Stop by selling a 4% stake in the company amounting to about 275 crore rupees. The buyers were 361, Kotak Mahindra Mutual Fund, Tata Mutual Fund, Morgan Stanley. Shopper Stop has been active for the last 3 days. Amazon has completely exited. This is something Nimesh has been telling us. Here's a quick recap of the top stocks then. Stocks with positive news flow are United Breweries, Lupin, Enviro Infra, ABB India. Stocks with negative news flow are Asian Paints, Ipca Laboratories, DOMS, Yatharth Hospital, Zaggle Prepaid, Borosil Renewables. Well, lots happening even on the commodity and currency front. Manisha is here for a complete roundup. Manisha.
Oh, well, absolutely. The dollar index trading at a two-year highs after the U.S. Fed cut interest rates by 25 basis points, but signals that fuels in 2025 clearly has led to a lot of decline in commodities. So if you look at the crude oil prices, we've seen a percentage point of decline here. Gold and silver prices fell between 2 to 4% as well and are trading at multi-month lows right now. Similar is the case with the base metal prices as well. The strength in US dollar has made a fast decline onto this one as well. So you have copper prices trading at a 3-month lows. Aluminum, zinc, lead have now slipped to a 1-month lows. Steel rebar is trading at a 1-month lows as well. So when you look at a week-on-week data, we are looking at all non-agriculture commodities trading in the negative as of now.
Okay, all right. Manisha, thank you very much for that. Well, we'll take a quick commercial break here. We're going to come back with Deepan Mehta of Elixir Equities, and we'll talk specific stocks and all the blocks and QIPs and whatnot. But of course, the overlying message from global markets is red and a little bit of sort of darker shade of red. Give Nifty. I just want to leave you with that before we slip into that break. So still down over 300 points. Just coming back.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your
Welcome back. You're tuned into Bazaar Morning Call, and we're bracing for a rocky morning because the Fed has spooked equity markets. They have sounded not dovish, not very hawkish, but not as dovish as what the street anticipated, and that's why the markets are expected to open with a cut of around 300 points. But a lot of stocks expected to move around. Deepan Mehta, Director Elixir Equities, joins us on the show. Hi Deepan, good morning and good to see you. Well, let's start off with the top stock, Asian Paints, the big underperformer. They had troubles with regard to a new big powerful player coming into their space, which is Birla Opus. Now they got a bigger challenge because it appears some of the top level people are moving on. Some resignations is what we have. Your view on the stock, it's corrected a goodish bit. Competitive intensity is moving up as well. Your view on the stock?
Yeah, Nigel, good morning and thank you for having me on your show. I think the cup of woes for Asian Paints just seems to keep on overflowing. And this certainly is not great news for Asian Paints at a time when they need the best talent available within and outside the organization to take on the competition. This certainly is a setback, but look, Asian Paints is a very old company and I'm sure they have very strong succession plans for such key posts as well. But yes, it's a setback, but I don't think that that's really the issue in Asian Paints. The biggest problem right now, even apart from the competitive intensity, is the slowdown in urban spending, which is affecting volumes. And that I think unless you don't see a turnaround over there and the expansion of the market, I would be a bit circumspect when it comes to Asian Paints. And we have seen that the competitive intensity has played a role in terms of margins as well. So that also needs to be tracked. But I would say that existing shareholders, difficult choice for them whether to remain invested or sell. But certainly from a new investment perspective, I would avoid it.
Okay, that's Asian Paints. Asian Paints hit its high last year, towards the end of last year, 29th December 2023. Asian Paints had gone to a level of 34.22, and from that level, it's down more than about 30%. So it's been a tough year for Asian Paints and all the shareholders, 30% lower year to date, and of course from its 52-week high too. Deepan, hi, morning. We've seen the stocks correct over the last couple of days. Have you purchased anything, where the risk reward is attractive, you've gone ahead and bought?
No, Rima, not so, but it could be a good morning for investors like us who are sitting on some amount of cash, and such corrections are great opportunities. We have a list ready. I think I've said in the past also, like all these platform companies, also looking at increasing exposure in pharma, select software companies in the mid-cap space. So yes, there are some good quality businesses we are analyzing right now, but it's just that if stock price corrects by 15-20% in a market like this, or earnings catch up and you get them at a reasonable valuation, then I think the long-term returns can be great.
But there are quite a few stocks which have corrected 10-15% over the last couple of days. Nothing yet?
No, I think, Rima, what has happened is that these stocks which have corrected 10-15% from being super expensive are in the expensive zone. Another 10-15-20% correction would bring them to the reasonable zone. And that's the sort of zone that we are waiting for to start deploying whatever surplus cash we have. But as I said, I think, every time we feel that the market is correcting and quickly turns around as well. So let's see, is it different this time around?
Okay, no, I've got that. And I think, Deepan, hi, morning. That was well put. I mean, if you're sitting on cash, you welcome a fall. But if you're fully invested, you have to just grin and bear. That's the important.
I have a theory for that as well, if I can just elucidate for just 30 seconds. So, even if you're fully invested, what happens is that if you've been a long-term investor, there are many stocks in your portfolio which have done exceedingly well, but growth rates, especially long-term growth rates, are slowing down. And a correction like this provides an opportunity to churn the portfolio from the stocks which you are sitting on profit or which you invest for a long period of time, but where you feel that the prospects are not as great and it's run its course. So you can also churn your portfolio in such a way that your the proportion of money in high growth stocks is steadily increasing at the expense of the weightage in the slightly lower growth stocks. So such corrections provide an excellent opportunity to do a big time churn in the portfolio, get out of strategic investment holdings which will be held for several years, and get into new generation stocks or weightage or in sectors where you have a lower weight.
Very well put. And typically, I'm assuming these are names, as you called it, right? I think you qualified it strategic. You've held it for a long time. It's made you a lot of money, but incrementally, they're not doing very much. So even if they've corrected a little bit in the current market fall, because everything corrects, it's still a good way to sort of think about switching out of some of these slower growth areas into stronger growth areas. It's a very important point, Deepan. And I'll ask you, which are those sort of, ideas which is on that watch list of yours? You said it's ready, and we discussed some of the names earlier. But we had to take a quick commercial break here as well. So we'll come back and talk a little bit about here and now. Sudarshan and Mitesh are going to be with us to help us do that. Stay tuned.
How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
जब लक्ष्मण मूर्छित हुए थे तो हनुमान जी उनके लिए संजीवनी बूटी लेके आए थे। तो आज दिल्ली के बुजुर्गों के लिए मैं संजीवनी योजना का ऐलान करने जा रहा हूं कि 60 साल से ऊपर के हमारे जितने बुजुर्ग हैं उन बुजुर्गों का पूरा इलाज फ्री करवाया जाएगा। इसकी चुनाव के बाद हम योजना लेके आएंगे, योजना पारित करेंगे। वो चाहे सरकारी अस्पताल में इलाज कराना चाहें, चाहे प्राइवेट अस्पताल में इलाज कराना चाहें, उनका पूरा इलाज फ्री कराया जाएगा। इसमें कोई बीपीएल, एपीएल, टीपीएल, आरपीएल कोई लिमिट नहीं होगी। सबका इलाज, चाहे अमीर हो चाहे गरीब हो, सबका इलाज मुफ्त कराया जाएगा। और कोई अपर लिमिट नहीं होगी। आप जितना आपका बीमारी पे खर्चा आएगा उसका सारा खर्चा दिल्ली सरकार वहन करेगी।
Welcome back. There's about 7 minutes to go for the pre-open session, and markets, of course, are going to be opening lower. Yesterday, we did a market town hall. We had a nice bunch of sort of market experts, fund managers join us. They sat down with us. We sort of looked back at 2024, but also sort of looked ahead into 2025. So there was Niket Shah of Motilal Oswal Financial Services, the mutual fund side, Tahir Badshah of Invesco, and Rohit Shimpi of SBI IMF, all sort of mutual fund managers, money managers, and all three managed funds this year, which have done pretty much very, very well, top of the sort of category respectively. So just some thoughts on some of the top-down macro stuffs, which I think is going to be important to pay attention to, at least on a day like today. Listen in.
As we start 2025, if you look at micro and macro both, so if you look at micro, earnings growth is kind of weakening out. From almost 35-36% earnings growth in mid-cap that we have seen in the last 4 years, we are now down to about 4 to 5%. We don't expect this to meaningfully move up, at least for 25 as such. On the macro side, I think clearly there are challenges as far as US is concerned. US has clearly articulated that there's going to be a $2 trillion cut on spending. And one really needs to see how that really shapes up as well, because that can have a meaningful impact on global markets. So if you look at the macro and micro, it looks like 2025 will be much more tougher year, probably in the last 5 years.
Private capex, that's also something which has been on the cards for a long period of time, especially at the time when we are probably confronted with a slower trajectory of government capex. We don't want it to slip significantly either, but private capex could probably come to the rescue. We've seen some initial signs. If you go by probably the a bottom-up assessment of the BSE 500, then the first half probably indicates that the capex for BSE 500 is actually up 15% year on year.
Earnings have not been very great over the last couple of quarters. We do think that is kind of pulled down by two factors. One is the monsoon issues, some of the election-related slowdown that we've seen. We are actually hopeful that that comes back over the next few quarters. Typically, a capex upcycle or an earnings upcycle does not fizzle out as soon as we're probably seeing market experts predict at this point. So I think that's a little more durable theme that we're hopeful on. And the third one is sentiment, right? And you can't exactly predict markets, but you can tell the temperature of the room you're sitting in. And clearly for the last few years, last few quarters, markets have been kind of hot, right? If you look at retail investor sentiment or subscriptions in IPOs, etc., that gives us some sense.
Get into a break on that note. We'll come back with the pre-opening rates and some technical trading ideas with Mitesh and Sudarshan Sakhani. We'll also be joined by Amit Dixit of ICICI Securities to focus on the steel sector. Stay tuned.
But the word reciprocal is important, because if somebody charges us, India, we don't have to talk about own, if India charges us 100% and we charge them nothing for the same, they send in a bicycle and we send them a bicycle, they charge us 100 and 200, India charges a lot, Brazil charges a lot. If they want to charge us, that's fine, but we're going to charge them the same thing.
Well, 14 minutes and some 40 seconds, counting down to the market open, and we have the first sort of rates which will start to come up there on your screens. Is that I think those are the first rates, yeah. So values are changing, 700 lower, 1400 lower on the Nifty and the Sensex respectively. Hopefully things will pare back a little bit in terms of the losses that you're seeing at this point in time. But yeah, I mean, it's everything down kind of a day. I mean, actually, if you look at what I just looked at Asia a while back, forget China, because I mean, China has been trading off expectations of stimulus and not enough stimulus, so that maybe is a different market. But look at what Japan is doing. Look at what a couple of other Asian markets are doing. I mean, it's in the 1% odd vicinity. 0.75%. I think Japan is down 0.75%, and other markets are down about 1%. So it's not a. I mean, Nasdaq was down almost 4% last night. So it doesn't reflect that on a like-to-like kind of a basis. And of course, here in India, remember the Nifty from the highs 3 days back is down some 700 points. So coming into this, we did, and now with the benefit of hindsight, thankfully gave up some of the gains coming into the Fed decision, of course, and the reaction that we got last night. So lots to track in terms of individual stuff, but let's get some trading ideas as well. Najib.
Well, that's right. Let's get in Mitesh as well as Sudarshan who join us on the show. Hi, good morning, gentlemen. Well, the GIFT Nifty is suggesting a big downtick, but how are you all feeling about the markets? What's the trade? Mitesh, you go first, and also you could fill us in with your stock picks.
Good morning, Nigel. Yesterday, I talked about making bear spreads on the Nifty, indicating that we might go lower and there's a higher chance of that happening. And I think that declining movement which started about 2 days back is clearly continuing with the big gap down today. Now, the opening will be right at the support area. I think 23,900 zone, give and take a few points is an important support. So we might open about 300 points lower, closer to about 23,900 levels. So if you have short positions, I think we'll take some profits and see how the market reacts post the gap down. In case there's signs of recovery, we'll then, explore some longs. Otherwise, we'll just cover short and sit over it. Maybe, in case we see during the noon time, after an hour of market opening, if there's continuation, then we'll have another bear spreads with lower strikes on the option this time. But the only thing is that, 23,900, if you open down and we are slightly oversold, so there might be a 70, 80, 100 point kind of a pullback, which will give you better entry on the short side. So the directional bias is on the negative side, but around 23,900, tactically, I would want to take some profits.
All right, gentlemen, good morning. Mitesh and Sudarshan. Sudarshan, what about you? I mean, it's an everything down kind of a day.
Yeah, good morning. Well, we live in interesting times. All this volatility is not unusual. We have seen it before, and we'll see it again. Now, yesterday, markets are a continuation. My view was do not trade because we are in front of a very big news event. And that's exactly what happened. I mean, obviously, we had no way of saying this would happen. But it's wiser to step aside when a big news event is imminent. Now, today, there is no news event, but there is going to be a lot of volatility. And there is no way a trader can predict Nifty will go down another 200 points. Will it intraday go up 300 points? We have no way of saying this. What we can say is it will be very volatile. There is no sense in doing any trades today. Step aside, let the markets cool down.
Got it. Okay, all right. What about individual stocks? Sudarshan, you go first.
Well, see, I have two buy ideas and two short selling ideas, and there's no purpose in talking about levels because we don't know where markets will open. But the two buy ideas are Lupin and ITC. Both could outperform. And two intraday shorts are L&T Finance and Bata India. Again, very weak stocks.
Got it. Okay. All right. And Mitesh, what about you?
I have more of sell calls, Nigel. Sell on Axis Bank with a stop at 1137 for targets of 1085. Tata Motors is making a fresh swing low, so sell here with a stop at 772. Look for targets of 720. And Exide is a sell with a stop at 450 half for targets of 430. Also a buy on Dr. Reddy. So if it starts getting past yesterday's high of 1281, buy with a stop at 1260 for a target of 1325.
Got it. All right. Mitesh, just one more query I had with regard to Reliance Industries and HDFC Bank. What are the supports on both those two? Because we have seen in the past on a bad day, those two find support at lower levels and they try to fight back. So they're going to be, I think, important today as well.
Sorry, which stock? HDFC Bank and?
Reliance Industries. Reliance, as we speak, very, very close to the 20 DMA.
So HFC Bank, yesterday closed at the support level of around 1800, and then there's next at 1760, which was a gap up which happened on the 25th of November. So I think with the negative setup, I think we might see another 50-point cut, and 1760 is the likely target area. And Reliance, I think, Reliance bounced back from 1215 odd levels when it made the low in third week of November. And that bounce back seems to be complete. So a retest of 1210 is definitely on the cards. In case we start breaking below this 1220, 1210 zone, then I think I'll look at 1150 as the target.
Got it. Okay. All right. Thanks a lot for that, Mitesh, as well as Sudarshan. But let's talk about the big sector that was in focus all of this week. That's the metal index. It's been under pressure because of data coming out from China. And yesterday, we had an issue of our own with regard to the mining in Karnataka, where the proposal is that duties/tariffs are likely to move up, taxation as well as duties. To help us out with an analysis, we have Amit Dixit, analyst at ICICI Securities, joins us on the show. Hi, Amit. Over the last 10 years or so that we have been in touch, well, we've seen this numerous times, right? Some flip-flop from one government or the other, and ultimately better sense does prevail. So give us a few details first. NMDC was a stock that got slammed back yesterday because they mined close to 30-35% of its total volumes from Karnataka. Now, given the proposal that they have to go ahead and increase duties/taxes, give us a few numbers. The current taxes they pay is what? Around 40-43%, which is expected to go up to 65% plus. If it moves up to that level, it'll make it unviable, right? They won't make any money at all.
Yeah, so it's a very precarious situation for NMDC and a lot of other miners in Karnataka. So the kind of royalty or the mining tax that we are talking about, first of all, they are citing the Supreme Court judgment on 25th of July. So just to give the broad numbers, the current royalty rate, if you look at it, it is 15.5%. Now, NMDC got its license renewed by paying 150x the premium. So essentially the dead rent for them was 22.5. So already they were paying somewhere around 37.5. Now the draft that is being circulated warrants an increase of another 1.5 times the royalty. So essentially you move up to roughly 60 to 62%, and then add on it the 10% of revenue that they have to pay anyways to the SPB. So the total taxation actually works out to 70%. Now a miner, let us say, even if you assume an IBM price of 4,000 rupees, the realization of 4,000, and 70% of it goes in taxes and duties. So you have 2,800 that goes away. And a prudent miner, the cost of mining would be anywhere between 600 to 800 rupees. So essentially you are looking at a single-digit EBITDA margin, which is nowhere in the world any mining company makes these kind of a margin. And in fact, for companies like NMDC and all who might have higher overheads, they might not make any money in Karnataka at all in the revised framework that is being discussed.
Okay, got it. Amit, just to clarify that number, it's moving up to 70%. From what level? 40 to 43%?
The additional thing is 22.5. So if you include that 10% SPV also as a part of mining tax, then it moves to roughly 72%.
72% from what level?
47.
47% to around 70%. That's what, the rough increases, and they may not make any money. So that's about the prospective basis. The fear is that there could be a retrospective tax as well that could be included by Karnataka government, which will be actually very, very negative for NMDC. Do you think they have a strong case though?
Well, the Supreme Court does, allow companies to levy the retrospective tax. But my understanding in this and my view is that, first of all, the state should have made a demand for that in the past. And if there is no demand, then it would be difficult to prove. But, things under MMRDA and the Supreme Court judgment is not very, very clear in this regard. So we still have to wait for the things to evolve. However, in case of retrospective, for example, certain states like Odisha, they have Odisha that was passed in the state assembly. So there the case is more watertight. But in case of Karnataka, where to my understanding there has been no demand in the past, they would have to prove it in the court, definitely. my view is that people might just go for litigation in case of retrospective application of this.
And just to clear the air, for JSW Steel, the maximum they pay is 100 rupees per ton, right? Because they have got it via the auction route.
Yes, so auction route JSW actually has paid a very
high premium.
Yeah, very high premium, whatever they have paid. So the incremental impact is 100 rupees a ton.
Okay. Very quickly, Amit, just we want to squeeze this in. 25% of safeguard duty is being proposed, and in all probability, it's being looked at. Is it enough? If they get the 25% safeguard duty, what do prices of steel move up by? Very quickly.
So 25% safeguard duty means if you look at let us say the international price is roughly $500. So you are getting essentially a protection of 25% over that. That is $100 roughly. Now steel prices won't move up to that limit definitely because nobody wants to create an inflationary situation in the country, and the demand also might suffer. However, having said that, if you are thinking that, iron ore prices would be allowed to move up as a result of this particular proposed amendment, and steel prices would move up, ultimately, you are encouraging inflationary environment in steel in India, which is not good for infrastructure projects, not good for the growth prospects in general.
Amit, thank you very much for joining us early in the morning. It's 9:10. Sudarshan is now with us for his 9:10 call. Sudarshan.
Well, consider going short in L&T Finance. Keep a stop which is about 2% from your entry price.
Okay. Mitesh, yours?
I'll go with a sell on Tata Motors for target of 720.
Thank you very much for that. Let's get to some interesting stocks you should have on your radar as we get ready for market opening. Now, Swiggy has been one of the best performing stocks over the last, at least this month, it's up nearly 20%. Hormus is now joining in. Hormus, JP Morgan has now initiated coverage on Swiggy, and this is the highest target price so far.
Indeed, and some bullish commentary coming in, but I wonder how much would that matter today. But nonetheless, JP Morgan overweight rating on Swiggy, a 730 rupee target, 27% potential upside. The stock is already up almost 50% from its IPO price of 390. What they're saying is that they're seeing Swiggy catch up across both the food delivery and the quick commerce segment because of their renowned focus and improved execution, and that is going to improve their catch up across both of these segments. Now, at 1.8 times enterprise value to GOV and 6.1 times enterprise value to revenue for FY26. This is a steep discount to Zomato, which according to JP Morgan is extremely pessimistic, is what they have to say. And they say that Swiggy will emerge as an underappreciated winner in this local services ecosystem, and that is what is driving their overweight stance on the stock and a 730 rupee price target.
You've got they're weighing in on Motilal as well, Hormus, quickly?
Yes, there is a brokerage, there is an initiation on Motilal Oswal as well. Investec is initiated with a buy recommendation, a 1200 rupee target. That's also a 27% upside. They've called Motilal Oswal a levered play on Indian equities, and all of their operating businesses, be it broking, wealth management, all of them are well positioned to gain market share, and they're expecting a 31% profit CAGR over the next 3 years.
All right, Hormus, thanks very much. Dr. Reddy's is what we're going to focus on. Vinny's got details here. Vinny, morning.
Good morning. So yes, Nomura has upgraded the stock to a buy and a target price of 1,500 rupees per share. Yes, there was an underperformance in the stock because this included Revlimid generic sales as well. So higher contribution of that was keeping the stock in the weakness and subdued state. But now going forward, what Nomura is highlighting that the company has actually stepped up their investments in the GLP-1 opportunity, and the capex has almost doubled on that front. So that is why they're positive on the stock, and they expect a lot of positives coming in for the GLP-1 opportunity for the company.
All right, Vinny, thank you very much for that. So, we'll have the first rates come up in just a bit from now. 320 points lower on the Nifty. The Sensex is down about 1,150 odd points. So it's everything down. At least at the beginning, is everything down kind of a day, and it's a little over 1% cut on the Nifty, and about 1.2, 1.3% cut on the Nifty Bank as well. So we'll have the rates come up as far as indices go, and then we'll look at individual names, individual stocks, etc. As well. 1.3 Nifty Bank Nifty. The Sensex is down 1.4. The mid-cap index is down about 1.7%. 23,883, 23,900. So the first support is 23,900 on the downside, and we're opening exactly there with this 300-point knock. 23,263 is the next one, but that's some distance away. I think the Nifty Bank is also at about 51,500, which is around where the I think 51,300 something is the 61.8% retracement of the full rise that we saw recently from the lows to the high. Everything is down, right? I mean, look at that. So you've got 5 names in the green, and 45 out of the 50 stocks which are opening in the red. I think already I'm seeing some recovery. From the lows, I think it's about a 70-80 odd point bounce, but this is the first minute. And we're down about 1%. So this is in line, as I was saying earlier, in line with Asia, which was not exactly selling off in panic like what we saw last night. It was more orderly, 0.75 to 1% kind of cut across Asian markets. And I think we are opening somewhere there as well. So 250 lower, 23,937. Let's see if some of these levels hold. Rima.
Well, down for the 4th day in a row now for the benchmark indices. Metals is taking the biggest knock today. The metal index is slumped close to about 2%. The dollar index is at a 2-year high at 108. That's weighing on stocks like Hindalco. Hindalco is now the top Nifty loser, and it's pretty much erased all its year-to-date gains too. So year-to-date, Hindalco is now absolutely flat. IT's been on the back foot through this week. The Nifty IT index is also underperforming the benchmark indices, 2% gone at open for the Nifty IT index. Names like Wipro, Infosys, HCL Tech under pressure. In the banking pack, again, banks too have lost. The Nifty banking index is down nearly 4% this week now, with a 1.5% cut that we're staring at. It's SBI, so PSU is under pressure. ICICI Bank, Axis Bank, Kotak Mahindra Bank, all down over 1%. BEL is weak in trade. On the way up, you've got Dr. Reddy's after the Nomura upgrade. That's a slim gain of about 0.3%. HUL ITC. So the only 3 stocks in the green. One is Dr. Reddy's on that upgrade, and then you've got FMCGs. A little bit of a defensive tilt there.
Well, Rima, the good news is that I don't think the breadth of the market can get worse than what we're seeing right now. Only 170 points that are rising in the first few minutes. That compares with nearly around 2,000 stocks that are declining. So hopefully by the time we wind up in closing bell, we'll be talking about a better breadth for the market. So let's see how that goes. Stocks that are gaining, though, since there are a few of them, IOL Chemicals. That's because they'll be considering a stock split on December 27th. So that's one stock that's done pretty well in today's trading session. And the other one, I think, is Yatat. That they're going to be raising some money via the QIP route, 700 crores. Issue price at a discount, but for the time being, Yatat has opened up in the grade. The Nifty is now moved down to around the 23,900 odd mark. So that's going to be one of the crucial levels that we're looking at. What's under some pressure today? Well, we have a few more stocks that are moving around in trade. Let's just pull up a few of them. You have DOMS that's under pressure. Invero Infra, the stock went to around 370 a few sessions ago, and now that's pulled back close to around 15% from the peak. So keep an eye out on that one. Post its numbers, which didn't look too bad, but it's coming for profit taking. Edelweiss Financial had a 10% move in the last 2 sessions. It's given all of them up. And PG Electroplast, one of those big movers, well, that one as well has come in for profit taking. So it's a down start to trading session. The hope is by the time we are wounding up trade today, that the Nifty will not be down close to 300 points, and the advanced decline ratio will improve from only 162 stocks that are advancing right now. Prashant.
Absolutely. And well, we'll keep our fingers crossed and see how things really pan out. Maybe just it's everything down. So, I mean, I can go on with more names here, but just assume that everything is down between 3 and 5%. At least stuff which is trading with large volumes is down by that much. And lots of these newer listings, right? I mean, there are so many new listings because the primary market is red hot. Sai Life, by the way, ended 40% higher yesterday. It opened 20% higher. It ended with another 20% gains. Let's just look at Vishal Megamart as well, which ended with a 40% gain. These are all sort of day one pops, 40%, right? And 30% oversubscription, 40% pops. That's been the way of the market recently. It's up 1%, once again, 112 rupees. Came to the market at a market cap of 35,000 crores and add all these gains since then. And of course, MobiKwik is the other one, which listed yesterday, which I think also, of course, went up, I think ended 90% higher on top of the issue price, although they cut the size by 75% of what they intended to earlier. That's another 6.5% up. So, well, some green and on your screens, and these are recent listings which we are kind of referring to. It's easier to count winners on a day like today, so let me do that. So Swiggy is up 0.5%. We highlighted that call, brokerage call is up at about 580. It's done very well. Come up from 400 to 600 rupees very quickly. There is Garuda. Garuda, I'm not sure. It's up coming up with a 9% pop. It's got very large volumes, and that's why I'm mentioning this. The stock's at 112 rupees. There's something like a Westlife, which is the McDonald's franchise. It's up 3%, 860 or so. And there's IOL Chemicals, which is up 4% as well. So 421 on IOL Chemicals that's Westlife. And then let's just put up IOL as well. So putting out some green out there, going against the wind. Where the wind is blowing southwards. 23,916 is where we are at. Well, let's welcome in, Krishna Sangvi, who's with us. Krishna, great to have you with us here. Thank you very much for your time. And we also have Robert Sokin from Citi, who's now with us on the program. Gentlemen, both of you, thank you for being here on CNBC TV18. Since it's a sort of global-driven day, Robert, let me just start with you first. What is your own sense? Markets, of course, panicked a little bit. Seems like the Fed changed the game. September, and we were discussing this earlier, September data was strong, but the Fed cut. Data is strong now, but the Fed sounded much more hawkish. How would you read this? Is this transient? Will the market settle down quickly? Or there will be some turbulence?
Yeah, it's a great set of questions. And I think what we saw from Chair Powell today is a bit more cautiousness on the outlook related to inflation. Some of that is due to stronger inflation that we've seen in some recent prints, but probably more broadly underneath the surface, it's more some anticipation of some potential upside inflation risk that may come from the second Trump administration when it comes into office next year. I mean, the good news in the background of all of this is the U.S. economy continues to be very resilient, grow very robustly. That soft landing looks very much on track. But I think given that they're less concerned about downside risk to the economy, it's natural that they shift a bit to worried about risk to inflation again. And I think as this is digested, for one, the Fed has signaled additional rate cuts next year. But most importantly, they said it's going to depend on the news on the ground and what happens with the data. And so if inflation continues to move down towards target, and if some of Trump's more inflationary policies are not necessarily put into play, I think you could potentially see even more cuts from the Fed next year. But it's very much going to depend on what happens with the data and what happens with the administration in 2025.
Robert, but considering that U.S. equities have had such a strong run, the S&P 500 is on course to end the year with a 25% kind of gain. The positioning, the valuations are sort of stretched. So what is the base case scenario for U.S. equities, given the restrictive monetary policy that perhaps we could see going into 2025 compared to earlier, and the uncertainty surrounding policies? Robert?
Oh, is this for me? Sorry, I thought
Yes.
it was other guests. It's a real challenging environment potentially to navigate the equity landscape. On the one hand, as mentioned, we have a very positive growth backdrop in the U.S. Earnings growth has continued to be very strong throughout the cycle, and our equity strategist base case is that you'll get a significant leg up still from here, somewhere into the mid 6,000 range. So I think, broadly speaking, the backdrop from equities is positive. But I come back to the Trump 2.0 potential risks on the tariff front, in that tariffs not only tend to have negative effects on the economy, but they tend to be very negative for specific companies, especially sectors that are heavily dependent on China, heavily dependent on certain supply chains. And so you could see some challenges in specific companies and sectors depending on how the tariff landscape evolves. So I'd say, broadly speaking, very constructive overall on equities, but we're watching the tariff risks very closely, both for the economy and for the equity market.
Hi, good morning, Krishna, and thanks a lot, Robert, for staying up for us. Let's come back home then. We spoke about the global landscape. What about the RBI? Out here, domestic people are optimistic that the RBI goes ahead and cuts rates. But now the Fed is indicating that we'll have lower number of rates in comparison to what we were anticipating earlier. What are you factoring in with regard to RBI action here in India?
Sure, I think what you correctly said, global linkage is pretty much relevant on, monetary policy. So to that extent, what happens to India monetary policy, maybe rate cut is partly linked to US. Our sense really is that we'll have rate cuts coming up in CY25. At this juncture, is really difficult to judge whether it's going to be first half or second half, because let's look at it this way. Data points keep on coming. Pretty short frequency. Almost every month you got inflation data point, whether it's India or global. Monetary policy meets, typically once in 2 months in India, maybe 45 days US. So some of these things are slightly, difficult to judge in terms of actual timing. Yeah, directionally, some sort of a rate cut support to economy can come in CY25 should be the base case. Intensity is slightly difficult because that's where again, the global linkage of rates maybe, comes into hurt the markets.
Okay, all right, Robert, what about you? What are you factoring in with regard to central bank action here in India?
Well, I think the key thing to focus on from our perspective is we are looking for rates to continue to move down. Broadly speaking, in India, emerging markets, developed markets, this is a global central bank rate cutting cycle that we're in the midst of for the global economy, with a few minor, relatively minor exceptions. Bank of Japan, Bank of Brazil are in different cycles. But in terms of the major players in the developed market space, the Fed, the ECB, in rate cutting mode, and India as well. But the key, I think, to focus on is even though the Fed cut rates at their recent meeting and signal a few more rate cuts to come, there's the potential for them to stay higher for longer. Again, coming back down to what happens with the economic backdrop and inflation next year. And if the Fed stays higher for longer, that's going to create challenges for all of these other central banks to ease policy as much as we expect in our base case. So right now we have rate cuts, as I said, broadly coming down across most major jurisdictions. But the extent to which they're going to be able to cut rates depends on their domestic factors, but is also, I think, going to depend on how much they're able and willing to deviate from the Fed. And again, we've seen in the past that the Fed stays high for longer, other central banks tend to rethink the extent to which they're able to cut rates.
Robert, once again, I want to say thanks for staying up. What time is it there? Midnight?
Almost 11 p.m.
Okay. Well, thank you very much. And, it must have been a very long day, starting with, of course, the Fed and the market and all that has happened and questions from clients. So thank you once again. So just one more thing, Robert, with the slightly global, and this is largely US, right? So Elon Musk was an important part of not part of the government, but very, very important constituency now. He said he wants to cut $2 trillion in federal spending. I think the consensus is that he won't be able to. There's not $2 trillion to find. But the people also generally agree that, well, if anyone can do it, he can do it. We've got this standoff on government spending in the US, right? The government shuts down on Friday. Now, that has happened many times in the past over the years, and you always kind of cross that hump. But, how do you, as a economist, how do you account for something like this? Mr. Musk is on X saying that, well, anybody who votes for this bill should be voted out. You've got the administration, Trump, and the incoming vice president wanting an increase in spending now and to be debated and passed now, not in March. So what does it mean for asset markets in the US? Is there a clear view?
Absolutely. I think to me, the most important point is that the US fiscal situation is one of very high deficits for the foreseeable future and rising debt to levels that we have not seen since World War II, and then we'll soon surpass that level in a few years. Right now, it's forecast to be deficits of around 6% of GDP for the foreseeable future per year. And those are very large numbers. And I think what we're seeing with Musk and Ramaswamy, with the DOGE effort, I think on the one hand, that should be applauded. It's always good to try and find efficiency gains where we can. However, I am skeptical that they'll be able to find substantial cost savings, given that the vast majority of government spending is either covered by mandatory spending, so things like Social Security, interest on the debt, and defense-related spending. The non-defense discretionary component of the budget is only about 15%. And so it's not quite clear where you'll be able to find substantial savings. On top of that, some of Trump's policies that he's proposed, such as extending his tax cuts, they're expiring in 2025, are very expensive. I think he'll find ways to pay for most of it. But the bottom line is I think we're going to be in a large deficit world for the foreseeable future. And I'm hopeful that we'll be able to get on a more sustainable trajectory, but I'm skeptical that we'll be able to get deficits down significantly, even with the DOGE and the creative thinkers behind it. So it's a challenging environment. That means probably some additional upward pressure on treasuries than you would have otherwise, given that markets have to absorb all of this debt. So I think that's the world we're in for at least the foreseeable future.
Just on US 10-year yield, you think we'll be north of 5% through 2025, Robert?
You know, our strategy team, our rate strategy team, has around a 4.2% forecast. That was before today's meeting. But I think if the Fed stays higher for longer, you could get a little bit of upward pressure on that. Again, it's going to depend on how the Fed rate cutting environment evolves and how much people are concerned about the long-term fiscal trajectory and other factors under Trump that gets baked into the longer-term yields. But that being said, I would be very surprised if we ended up near the 5% levels. And I think the factors that are in play that are just not in play to really get to those extent. But we are seeing more upward pressure on yields since the Fed's decision. And if we get a lot of inflationary type of policies out of the administration, you could see additional upward pressure from there. So it's something we're watching closely. But I think something in the low fours is much more likely than something close to 5.
Because if it's closer to 5, then that's got an important signaling effect on not just, rates around the world, etc., but equities as well. Krishna, come in there. I was just looking at something like a Vishal Mega, right, which is listed. 35,000 crores in market cap. This morning it's reached 50,000 crores. They did a little north of 600 crores in net profits last year. Say they do 1,000 crores in 2 years' time. It's at 50 times earnings. Now that's a retail business, but just what's your thought on valuations broadly if rates in the US continue to stay? Basically push higher. Robert's saying it's closer to 4 than to 5, but north of 4. But if it's closer to 5, what do you think? What does it do, Krishna, to valuations here, and what kind of businesses?
I think it's the last decade, especially last 4 years of post-COVID, has clearly laid a nice linkage between the monetary policy, the lower rates, higher liquidity combination to the equity market valuations, which is what has led to some of those, excesses of valuation where we look at macro level, maybe market cap to GDP for a country or for an individual sector or company, those, higher levels vis-a-vis the historical past. And let's look at this way, clearly you need finally some, money to buy stocks. And as long as liquidity keeps on coming in, either by a fresh supply of money or, cheaper cost of money, some sort of, liquidity support to valuations is playing out not only in India, even globally. And that's difficult to call whether it switches at half percentage point change in the US 10-year or it's a longer number. And, let's look at it this way. Exactly 2 years back, we actually had a 5%, US 10-year trading. Maybe sometime back it was 375, maybe 360. So those, fluctuations on rates on either US or maybe Indian, they do keep on playing out. The challenge really is, the monetary policy's ability to influence markets on a shorter end has gone up materially. Even if you step back 4 months back, we had a BOJ, event, and the entire market had a nice a negative downplay volatility in a just sharp period of 2 days because something changed in the world in one central bank decides to change the rates. And so the implications on financial market, I think on this cross rates, cross monetary policy moves are pretty severe. And that's where, some of these volatilities are part of it. Stroke, high valuations are perhaps supported by lower cost of money and easy availability of money combination.
Krishna, once again, markets are giving you that near 10% correction from the top. Would you go out there and buy anything in India right now? And what are the big themes going into 2025?
Yeah, I think markets, again, luckily, we don't have to buy markets. We have to finally buy some companies which are doing well or some, companies or sectors where incremental change is likely to be better. So to that extent, yes, some of these, corrections in markets does give those opportunity to start, adding stocks. I think on a very big picture basis, perhaps valuation comfort when I integrate, large cap looks attractive. The only challenge right now is in market is that large cap, while valuation was attractive, you got challenge of flows, because FPI flows typically has been negative they've been more selling the large caps. So if you look at the flow argument, perhaps, yeah, small and mid caps are still getting money in India as from, flows angle, but yeah, valuation comfort lies in large cap. I think sectorally, it's slightly difficult in the sense that we've seen quite a few divergences across sectors. In same sector, there are a couple of companies doing exceedingly well, some doing reasonably weaker. So that's a little bit challenging to call out sectors, but clearly, stock-specific moves are more likely to dominate at least for next 6 months period is my sense.
Thank you, gentlemen, for joining in. And Robert, once again, thank you for staying up. And Krishna, thank you for joining in. If you don't speak before the year closes, have a good one.
And have a good night's sleep.
Yeah.
And thank you for staying up. I mean, really appreciate it.
Oh, well, he's suited up at 11 p.m., right? That's commitment to work and TV. But let's focus now on the sugar stocks now. Sugar mills are likely to see dual setback as sources tell CNBC Awaaz that OMCs will prefer cooperative sugar mills for ethanol purchase. And the second one is the increase in ethanol prices could be lower than what was hoped and proposed. To discuss the implications, Atul Chaturvedi, the executive chairman, and Sri Renuka Sugars is now with us on the show now. Mr. Chaturvedi, thank you for joining in. First, let's talk about the pricing bit, because after lifting the restrictions on ethanol production, the industry was optimistic about a hike in ethanol prices. But now sources seem to be suggesting that the price hike could be lower than anticipated. According to you, what was the hike that you have proposed, and what are you hearing? What may actually come?
We've been hearing about ethanol price increase since September, but somehow or the other, it has not seen the light of the day. And now your sources are saying that the increase could be only marginal at around 1.5 rupees or somewhere around that. We were expecting that the difference between maize ethanol, which is currently priced at around 71.86, and cane juice ethanol will be bridged this time around. And we still are hopeful because we've still not heard the final word on what the new ethanol prices would be. But if it is 1.5 rupees or thereabouts, I'm sure it will be a big disappointment as far as the sugar sector is concerned. Let's face the fact that the FRP of sugar has actually gone up. And this year, the industry is going to be paying much higher for the cane which they will be buying. So there's no reason why cane juice should be priced lower than maize. In fact, we were expecting that this bridge, the difference between the two would be bridged. But your report seems to suggest otherwise. Let's see what is lying in store for us.
Okay, but you've not officially heard anything from the government as of now on the pricing, but assume it comes at 1 to 1.5 rupees. What would be the margins? Will the operations be viable, and what would your profitability look like?
No, in fact, at this point of time, at the current prices, what realization we get from ethanol equivalent to sugar is anything between 36 and a half. And if it is 1.5 rupees, in fact, you would probably see returns from sugar equivalent would probably go up marginally by about ₹1. So which means it could go up to 37.5 or thereabouts. But the industry will continue to not do well if the increase is only marginal. And there's no reason why maize ethanol should be priced at around 72 and sugar so low. It really beats any logical this thing. It beats me. Yeah.
All right. Hi, Mr. Chaturvedi, and thanks a lot for joining in. Could you help us out with what's the total amount of tendering that's happened from the OMCs? And if you could give us the broad breakup between cooperative mills and private companies, what is it currently?
No, it will be difficult for us to put a number on what the cooperative mills have supplied. But we are also hearing on your ticker as well that there is some move that the cooperative mills would be given preference over private sector. I see no reason why that should be the case because cooperative mills have also invested and so have the private sector. So I think it should be fair and square for both the sectors, and there's no reason why you should differentiate between cooperative and private. Sugar mill is a sugar mill, whether it's a private or a cooperative one. So let's hope this does not happen because in any case, private sector has also invested quite a lot in putting up, scaling up the distilleries in the country.
All right. So, Mr. Chaturvedi, the tendering activity has been okay from OMCs is what you're saying, but you can't give us the breakup about what's the mix as of now. Is that correct?
Yeah, as of today, it's difficult to put a number on that because we have not seen this kind of differentiation between cooperative and private till now. Why it is coming down, why it is being talked about now, I really don't know.
Okay, all right. If you could quickly tell us before we let you go, what is your current utilization levels? And what is the volumes you're looking at, say, for this year as well as the next?
In terms of ethanol?
Yes.
If you really look at the ethanol scenario, what the Niti Aayog had actually suggested was that 55% of the ethanol should be coming from the sugar sector and about 45% from the grain sector. This was the original plan basis which all the expansions have taken place. But now what we are seeing is the positions have turned absolutely upside down. Now, grain sector is supplying something like about 60% of whatever the OMCs are buying, and sugar sector, which was at the forefront of this campaign, is now doing only about 40%. So in terms of quantity to be supplied by the sugar sector, I think this year we would be supplying or rather diverting about 4 million tons of sugar equivalent towards ethanol. So that would be close to about 4 billion liters as well.
Mr. Chaturvedi, good morning. Prashant here. Just one, to come back to that cooperatives point, you said, well, mill is a mill, right? So there should be no difference. But what could be the motivation? Do you think, if it were to be done, can you think of any reason why it would be done that way?
I really have no reason to believe that the government should be differentiating between cooperative and private. A mill is a mill, and both are servicing the farmers, and both are buying cane from the farmers, and both are actually operating the same scenario. So why should one be differentiated with the other? That actually beats my imagination. I don't see any reason why that should be done.
It doesn't go down that road. Thank you very much, Mr. Chaturvedi, for joining us. It's a pleasure having you here on CNBC-TV18. We'll speak soon again. The market, by the way, I think is recovering a little bit. It's a little volatile, but we're firmly down. But for now, I think it's a big green candle. We've come up and we're trading above where we sort of opened at. We opened at 23,870. We're at about 23,990. And even as we speak, we are coming up a little bit. So I think with a 4% NASDAQ cut, you're able to get away with a 1%, under 1% cut here. I think that will be a pretty good outcome all told. We'll take a quick commercial break here. The primary market is red hot, and we'll have the management of Transrail Lighting join us as their IPO opens today. So all the details you want to know, that's coming up with the top team. Stay with us.
Well, time for some primary market action then. Transrail Writings, the 840 crore IPO opens today for subscription. To talk you through the offering, we have with us the management in the studio. Hi, gentlemen. Thanks a lot for joining in. Well, the first basic question, right? You're raising some money. Could you tell us where is it going to be utilized?
So we are raising around 839 crores, out of which 400 is primary.
Okay.
And in this, we're looking at 250 crores for our working capital, 90 crores for our capex to expand our 2 tower factories and 1 conductor factory, and 90 crores is for general corporate purpose.
Okay, all right. Just a quick couple of follow-up questions then. With this 250 crores of working capital, how does it ease things for you, in terms of number of days or in terms of working capital requirement, point number 1. And on this 90 crores of capex, what is the typical asset turn that you'll have?
Okay. So for this, what we are looking at working capital, this will be purely used for working capital. So our net debt situation remains the same.
Okay.
And our incremental capex required will improve our factory capacity by 25 to 30%.
Okay.
So that is a brownfield project which we are in an existing factory looking at expansions.
Can you give us, do we have the order book number which you've shared as per the RHP, 10,200 crore? But that's of course not, it's a little post-dated, right, till September. What is the latest order book and your L1 position?
Ma'am, the numbers we have is as of 30th June.
Yes.
So it's around 10,100 odd crores, which is the order book, plus there's a 3,200 crores of L1.
Okay, but this was as of June.
Yeah.
So as of, say, November end, what would the number look like?
Ma'am, we can't kind of, talk about the future numbers, but we are in a good zone, all I can say.
Good zone would be L1, a pipeline could be quite good. So what are the projects that your L1, if you could quantify that? All in line with the regulations, sir.
Yeah. So L1 is 3,200. 90% of it is T&D,
okay,
which is a core business, transmission and distribution. And out of that, around 50% is around international, 50% is domestic.
Okay. So last year you grew pretty well. Your revenues went up by more than 30%. Is this the historical growth rate that the company has enjoyed? I just want to understand that if that's something that can continue, and if you can break up between domestic and exports, the international business, how are both those two segments growing for you? And is there any issue of receivables with either?
So we've been growing historically in the last 3 years with around 30% CAGR, which is something which we are very proud of. We have a very healthy mix of domestic and international. 60% is international, 40% is domestic, and both our segments are growing. International a bit more and domestic a bit less, but we see that both segments will continue to grow as what we see in the past.
And receivables?
Receivables are very much in control. Our net working capital days is around 75 to 80 days, which is as per the industry standards.
Okay, all right. Give us a few more details. Last year, if I look at it, the total revenues were around 4,100 crores is what you did. Now you have some capex that's coming on stream as well. So in line with regulations, you could tell us what is the revenue potential of the company as of now, post this capex. So 4,000 crores is what you've delivered, but maybe you have a potential of 5,000-6,000 crores. That gives us a sense about how you can grow without incurring any more capex. So if you'd give us that number.
So
I think we can safely go up to 8,000 crores of turnover with the increased capex and also the increased working capital, which we are going to have. So safely it will go.
Okay.
So no need to incur any more capex. If the orders come, execution can safely go through. You can compound at a good rate in terms of revenue growth.
Yeah.
Okay. Are you confident about 30% sustaining over the medium term, at least that kind of run rate that you've enjoyed in the past? And also, if you could explain what led to the margin improvement. Now, FY23 margins were 9.5%, FY24 expanded to 11.7%, and in Q1 it's further gone up to 13.3%. So both those two, if you could talk about it.
Okay. So just to explain, we are fully backward integrated, which means that we make towers and conductors, which is around 60% of the requirement of a EPC job. Now, conductors is unique to us. Most of our peers do not manufacture conductors except one who's just started. And this gives us a competitive edge. Also, our international book is very healthy, as I said, 60-odd%, where we have a margin profile better than the domestic profile.
How much better is it?
Well, if you see a margin profile at 13%, there would be notch or two better.
So international versus domestic is around 100-200 basis points better?
Yeah.
Okay, all right.
Can you continue to expand margins?
I think our guidance is as per last year, around we did 11.77, first quarter is around 13, so it will be somewhere in between.
Somewhere in between.
So the strategic shift from predominantly domestic to international, where in 2020-21 we were doing only 20% of the revenue from the international market, and actually picking up the jobs internationally has actually helped us to improve our margin.
Correct.
Because almost all the jobs of international are multilateral funded and also having a price variation clauses. So any commodity increase, that has actually taken care. And actually we are very much engineering focused company. As a EPC T&D company, we are focusing on all the three important EPC, means engineering we are very strong. Procurement, we have got 60% of our own product which to used in our project, and construction again is a very much under our control. So we are actually controlling 90% of the cost.
Okay. And the ideal mix going ahead would be 50% each, or do you think, as you mentioned, sir, that you're at 20%, which has now moved higher in terms of international revenue mix? Do you see that ratio even improving further in favor of international, or do you expect it to stabilize around
We
here?
think it's going to be balanced 50-50, because the domestic market also in T&D is growing, and that gives us a very good opportunity to look at project focused bidding, where we look at the margin profile, and that's our focus. We believe that rather than looking at revenue alone, we look at the complete risk matrix. So how do we improve our margins?
Got it. Okay, all right. Just one more quick question from an industry perspective as well. We hear that at various parts of the globe, there is some supply side issues. Now, you clarify that you all are partly backward integrated, which helps you all in terms of margins. Are there still supply side issues both for your company as well as on, for other competitors as well? Or are most of those supply side issues getting sorted?
Well, from a transmission point of view, we don't see any supply issues, either domestic or international. However, for substations, transformers, there has been a certain amount of supply-demand imbalance, which I am sure that the Indian industry is catching up in terms of capacities, and so would be the international markets. So it's going to get balanced out in the next few months.
Okay, just a quick word. There's an offer for sale of about 440 crore rupees. Promoters are bringing down their holding. By how much? What would the current promoter stake stand at after the reduction, and why the monetization?
So the promoters today have about 82.5% holding, and after the post IPO, the promoters holding will get reduced to 71%.
Okay, got it. Thank you. Thank you very much, for joining in, and wish you all the very best.
Thank you so much for your time, and pleasure being here.
Well, and on the listing, we re-invite you all to join us, and at that point of time, we'll push you all a little bit more for a guidance from here on. But all the best, and we look forward to being in chat with both of you all.
Thank you. Thank you.
Well, getting back to the markets, when we're having that chat with the new IPO that opens up, well, take a look at the markets. There's a bit of a recovery that was seen on the headline index because the Nifty went down to around 23,900 odd. From there, we have bounced 60, 70 points. Sustaining this kind of a bounce is going to be important. And also the breadth of the market. I think, Rima, that's something that will help portfolios feel much better. When we started off trade in the first few minutes, there were only 160 stocks that were advancing. That number has gone up to nearly around 600 odd. So the bulls will be feeling a little bit better close to 45 minutes into this trading session.
Okay, let's focus now on the real estate sector. Now, the sector in H1 FY25, which is basically April to the September period, saw fewer launches. Can the launches improve in the second half? And how is the inventory overhang? And what is in store for the realty sector going into 2025? To discuss all this, we have Anuj Puri, Chairman of Anurag Property Consultants, and Rajat Katuria, CEO at Signature Global India, joining us on the show now. Anuj, just to set the context first, give us the numbers. What were H1 launches like? Why was it lower? Can we expect a pickup in H2? What is the forecast going ahead?
Good morning, Rima, to you and to Nigel. If you were to look at the top 11 listed developers, they had given an indication of about 250 million square feet that they were going to be able to launch this year. By virtue of that, if you were to look at the first half, it should have been about 125 million, but it has been only about 53 million, which is 23% of the guidance that the top 11 listed players had given in terms of the launches. Now, there's several reasons why the launches have got delayed, none of which has been the demand, fortunately, but majority of them has been really the approval and the regulatory delays, largely led by the elections, both at the center and at the state level. Fortunately, the demand continues to remain strong. Many of these listed developers have done QIPs. If you were to look at the real estate index, that continues to remain strong. And not only that, many of the developers have really reduced their debt to equity, which at one stage, if I recall, in 2019 used to be 0.9, now it is 0.5. So clearly, if you were to look at it from a money perspective, there is no problem with the developers. From the demand perspective, that continues to remain very high. I think it is just that they are unable to get in the regulatory approvals and being able to launch. I do feel is that H2 is going to be very strong. And you will be able to see more launches and demand picking up. I'll just say one other thing is because you touched upon this point, Rima, is that the inventory overhang, it is at its lowest ever that we have seen, which is less than 14 months under construction. Usually, it hovers as a neutral between 20 to 22 months. And I do feel is that there has to be more inventory, because if more inventory doesn't come in, the price rise will start to happen. And that's where my fear is that if the price rise happens very quickly, that is where, the affordability index may start to breach. So important that supply comes up in H2.
But do you think by the end of the year, the 11 listed developers will be able to achieve their guidance of 250 million square feet of launches? Question number one. And is there a geographical breakup? Because we hear of tech issues at registration offices, particularly in Bangalore.
It is true, Rima, that the e-Khatha is taking a very long time to be able to, get in the registration of the sold apartments even is. The majority of this supply is going to come in Maharashtra. If you were to speak with these top 11 listed developers, and, Rajat is there from Signature Global, and they are sort of the number 2 guy who had given the guidance in terms of the square foot that they were going to launch. My guess is about 25 million that they had given guidance. I do feel is when you speak with these 11 listed guys, they have a game plan and they should be able to deliver on the guidance that they had given at the start of this year.
Okay, all right, Mr. Puri, got that. So let's get in Rajat then into the discussion. Rajat, the 29 million is on.
So good morning. I think to everyone, and congratulations to the Anurag team for coming up with a very well researched paper. So, see, our position is that we've upward revised the launch pipeline. So it's actually gone up to about 35 million, of which 9 million has been launched over the last 9 months. We intend to do launches worth 16,000 crores for this financial year, and this was our guidance, and we are very comfortable positioned to achieving it during the course of this year.
Okay, so you'll do more than actually what you earlier thought you were doing, in spite of having a softest start, in comparison, if I look at it mathematically. Got that, Rajat? Mr. Puri, then what do you say? 250 million is what you thought at the start. Only 57 was done at the first half, at the end of the first half. Realistically, what should we end this year with?
My guess is, Nigel, we should be about 225 to 250. Again, I say is that I've met up with these top 11 listed players. Prestige is the number one. Out of the 250, about 75 million square feet is coming from there itself is. They are very confident that they should be able to deliver on the guidance. And it's a delight to hear, Rajat, that he is actually moving ahead of the 29 million square feet guidance that they had given. So I would say is that we should be in the ballpark, to answer your question, Nigel, between sort of 5-10% of the numbers that they had given at the start of the year.
Anuj, in your conversation then with the developers, what are they talking about for 2025 in terms of launches, in terms of execution? You spoke about fundraise. Is it largely done for all these companies, or next year could see more fundraise?
So, Rima, I'm sure that next year we'll see more fundraise. There are a number of developers who are wanting to get into the listed space, so they will be raising more capital. Majority of these listed developers are at a very comfortable position. If you were to look at DLF, Godrej, even Prestige, they are almost at net zero debt. So their ability to go out and buy larger land parcels is very high. On the other hand, demand continues to remain very strong if you go in the mid and luxury and premium levels. And so, they are there's a huge amount of enthusiasm that demand is strong. They are well capitalized and they have the ability to execute. I think the only trouble is how do you get in this approval and regulatory sort of clearances quicker? The rest of it is all sort of well-oiled.
Rajat, would you be looking to raise money? I know you did your IPO just last year, about 14 months back, but is there a fundraise on the anvil for you?
So, Rima, there's no fundraise plan as of now. The operating cash flows tend to be supporting the growth of the company. So our operating cash flows are fairly healthy. For this year, we intend to collect close to 6,000 crores, and the budgeted operating surplus is almost 45%, which should give us about 2,500 crores of operating cash post payment of taxes, which will either go into acquiring new land parcels or will go into debt reduction. And if you look at even the industry, the broader trend is that a lot of the growth is being funded either through equity infusions, because these are listed companies. I think equity markets have been kind. The balance sheet of all these companies put together are looking much healthier than what they used to look about 3 to 4 years ago. So a lot of the growth is being funded either through operating cash flows or through equity infusions. But for Signature Global, we have no plans as yet to raise any equity in the next year.
Anuj, just one word. I think as of September, real estate companies had raised close to 12,800 crore via QIP. What's the number as we close out the year?
So till September, it was 12,500. I don't have, Rima, what the current number is on the QIPs.
Okay, all right, gentlemen. Thanks a lot, Rajat, as well as Anuj, for joining in. If we don't speak before the end of this calendar year, wishing you all a good end to the year and looking forward to chatting up with both of you all in 2025.
Thank you, Nigel.
Thanks a lot.
Well, let's move on then and let's talk about the markets. There's been a bit of a recovery. The breadth of the market, I think those crisscross lines should come up for you on the screen. It's perked up a little bit, still holding about 500 stocks that are advancing right now. So a little bit better in comparison to 30-40 minutes ago. Mitesh Thakkar is back with us. Mitesh, the temptation is always going to be there, right, to go ahead and buy the first dip. The question is whether or not it will sustain or not, because, the weak hands will get cleaned out otherwise. And today's expiry day, so we're expecting more volatility than normal, like we saw in the previous 2 Thursdays as well. Your take?
No, Nigel, there's no temptation to buy. I think the chart structure is very weak. I talked about the fact that around 23,900 cover your short positions. I think that's worked well. But the structure doesn't warrant any long positions. So, if you booked your short positions, we had some index put spreads. I think, time to take fresh spreads with, maybe around the money strike. You buy 24,000 strike put and sell about 23,700 or 600 strike puts and hold for the next 7 days, which is till the December expiry. My sense is that I think you might get a bounce back if you're lucky enough to about 24,050 odd levels. But beyond that, it looks very difficult in the short term and more likely that, we will possibly test the 200 average area, which is around 23,800. We break that, another 100, 120 points would happen very quickly. So I would be on the negative side. The only place, I had a buy call today morning was Dr. Reddy's, which is Pharma. That's doing well. And I have one more Pharma stock right now. That's Aurobindo Pharma. I think that's reversing from oversold levels. So buy here with a stop at 1240 for targets of 1310. And on the selling side, I have Kotak Bank. That's a sell with a stop at about 1780 for targets of around 1720, 1715.
Okay, Mitesh, just want to clear that view. As you advised earlier, if you have short calls, you cover it at around 23,900 odd earlier today, which has worked out well. And the fresh strategy you gave us was writing the 23,700 put. Was that correct?
No, buying the 24,000 put and against that selling the 23,700 or 23,600.
Got it. All right. Well, thanks a lot, Mitesh, for joining in and giving us that. We'll keep touching base with you. But for now, Mitesh is, not sounding very, very optimistic about a bounce from these levels. He believes there's more pain in store. For the time being, though, let's focus on the IPO market, the new listing, another one. Well, we have got 4 and 4. Yesterday, 3 blockbuster listings. And this is the 4th one, IKS, listing with a gain of more than 40% as we speak. So those who have got allocated these shares, they'll clearly be quite happy, Rima.
The subscription was more than 50 times for IKS Health. The issue price was 1,329 and the stock has opened at 1869. And this is a company which provides a lot of tech products for, to US physicians, clinics, doctors. So not the large hospitals, but some of the smaller doctors and physicians and clinics. So they provide services which help them manage their revenues. They help them manage the entire revenue cycle, help them in transcribing some of, the documentation to make sure you digitize a lot of the paperwork that doctors need to do. And the company has seen some very strong revenues. I think last year, the company's top line grew to 1,800 crore rupees from just 1,000 crore rupees, and it's backed by Rekha Jhunjhunwala. That's about IKS Health, very strong debut. Get into a break. On the other side, we'll call Manisha Gupta to talk about commodities.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Welcome back. Let's turn our attention now to the commodity markets. Manisha is with us. Manisha, hi.
Hi, thank you for that, Reema. Well, I'm looking at overall commodities as a sector because it is absolutely not doing well, especially after the US Fed meeting, where we did see 25 basis point of a rate cut on expected lines, but fewer cuts in 2025 is the sentiment that's weighing onto the space. So with that, you have the dollar index, which is trading at a 2-year highs, and that's weighing onto the markets. So if you look at the crude oil prices, we've seen prices slip by nearly a percentage point, and while it is trading below 73 for Brent, it's trading below 70 for the WTI prices there. And this is even as the US crude stocks have declined by 1 million barrels. That is what is bothering the space. The precious metals were the hardest hit, with the dollar index now at a 2-year highs. We saw the gold prices decline nearly 2.5% overnight. That one is trading at a 1-month lows, and the silver prices were even sharper on the lower side. We saw nearly 4.5% of a decline onto that one. That one is trading at a 5-week lows. The base metal prices also saw sharp declines. The strength in US dollar won, and second, we saw weak manufacturing activity come in from China and US. That was a botheration. And third thing is there's a lack of complete detail on the kind of stimulus measures or fiscal spend that China would do for the calendar year 2025, and that's weighing onto the markets as well. So if you look at the copper prices, it was a sharp cut onto that one, and with that 1.5% of a decline, copper is now trading at a 3-month lows. It's a multi-month lows also coming in for aluminum, zinc, lead. We saw the prices decline to a 1-month lows overnight, and there is still some decline coming in for the Chinese markets there. When you look at the silver especially, it is about weak China demand from industrial metals. It is overproduction of photovoltaic coming in from China, and especially with expectation of US tariffs coming in, the silver demand could perhaps decline in China from industrial sector. That again is putting pressure. For the ferrous metals also, it wasn't such a great night. We saw iron ore prices decline by a percentage point. Steel rebar is now trading at a 1-month lows as well. So even as for the year, many of these metal prices are trading in the positive. But when you look at the week-on-week chart, well, everything is trading in the negative. We have the gold prices down by 3%, silver down 5% on week-on-week basis. Same is the case with the metal prices, where copper is down 4%. 3 to 3.5% of decline coming in for zinc and aluminum, and a couple of percentage point decline for the ferrous metals as well.
Thank you very much for that. For the Nifty, we'd gone to levels of 23,000, almost 24,000. But from there, again, we've slipped. So things continue to remain very, very tenuous. News coming in, the Tatas, they were looking to recalibrate the kind of store openings that they will do in 2025. But, there is clarification now coming in from Tata Consumer. Get into a break. On the other side, it's a special segment. It's the economy. Lata will be in conversation with Mithul Kotecha of Barclays and Neeraj Gambhir of Axis Bank to discuss the impact of Fed's hawkish commentary on emerging markets, currencies and rates.
Create effective strategies with insightful expert opinions. On the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Fed's impact is loud and clear in currencies and rate markets too. The rupee has crossed 85 per dollar as expected, and currencies across Asia are down between 15 basis and 75 basis points just today, between 0.5% and 3 percentage points. Only for the month of December, Indian yields have gone up by 10 basis points in December alone, today by about 3-4 basis points, with the US yields jumping beyond 4.5 for the 10-year. The Reserve Bank, this rise in yields in India is happening despite Reserve Bank cutting the CRR and widely expected to cut repo rates as well in its next meeting in February. But how does the Fed change the Reserve Bank's plans? How does it impact currencies, rupee? Mithul Kotecha, Head of FX and EM Macro Strategy Asia at Barclays, and Neeraj Gambhir, Group Executive Head Treasury Markets and Wholesale Banking Products at Axis Bank, join us. Mithul, Neeraj, thank you very much indeed for your time for what would be a busy morning at your own trading desks. Mithul, first up, how do we interpret this? I mean, 108 on the dollar index. I read your report of day before yesterday. I'm not quoting it, but you had already written that 107 is not the highest for the dollar index. It's gone to 108. Have we seen the worst, or, you know, can we see the dollar rising even more?
I think the answer to that question is we can see the dollar rising more. Our view is that there is clearly going into next year more upside risk. I know we've had this knee-jerk reaction of the dollar to the Fed. But that said, next year in January, we have a very big event, the inauguration of President-elect Trump, and potentially very significant tariffs placed on China and the rest of the world. And the US economy continues to outperform from a growth perspective. You know, China's economy is still fairly weak. The rest of the world is still flagging in terms of its growth. So all of that seems to show that the US is attracting capital from elsewhere. And that means the dollar upside continues to see momentum here. So while it's not going to be a straight line dollar appreciation, we do, and again, a lot will depend on Trump's policies. We do think the direction of travel is still for a higher US dollar into the first half of next year.
Thanks, Dan. And what about yields, Mithul? This 4.5 was not expected. Many people, of course, expected that the Fed will tone down rate cuts next year. 2 was definitely not. 4 getting reduced to 2 by the FOMC's dot plot was perhaps not in the price. But 4.5 on the 10-year, where do we go from here?
It does feel like the market's gone too far in terms of yields. And really, if you look what's being priced in for a terminal rate now, it looks a little high. It seems, in our view, that even 10-year yields have probably backed up a lot in the current range. We were looking at a 4.25%, 4.5% range. Look, I think the Fed has moved into line with our view for next year, that we expect 2 cuts next year. And the dot plots now are showing that. But I think there is still room, ultimately, for the interest rates in the US to continue to decline gradually. The labor market is starting to loosen up a little bit now. Inflation, although it has been a bit sticky, is moving lower in the US and to the Fed's target. So there shouldn't be much really in the way of further reduction in rates. So I think this move in interest rates appears to be a little bit more aggressive, and it's a knee-jerk reaction. Our interest rate strategists have actually taken the opposite view. They've gone long 1-year, 2-year US rates, and of the view that market is a little bit too hawkish in terms of what they're pricing.
Okay, I guess the market is also staring at this potential government shutdown, considering the tweets that are coming from Elon Musk and to some extent even from President Trump. And therefore, perhaps worries about the fiscal deficit going overboard. But Neeraj, this makes the Reserve Bank's position a little tough. I mean, let's assume for argument's sake that the 4.5 continues when the RBI meets in February. They will already have had the Jan 20 inauguration. So, does this change the position in terms of the expected rate cut?
So if you look at the Fed policy, I think there are 3 things that the RBI would want to focus on. One is obviously growth. We've had much slower growth as compared to expectations. The second is currency. I think currency is clearly weak, although rupee continues to be one of the strongest currencies on a relative terms as compared to even currencies like Singapore dollar and Indonesian rupiah. So while currency is weak, there is pressure on the currency, but Reserve Bank continues to manage the volatility in the market. And third, obviously, is the overall inflation outlook. We've had stronger than expected inflation in some senses. Food and vegetable price inflation continues to exert upward pressure. And between now and February, we'll need to see how each of these 3 variables actually play out. We should see some normalization on growth as the government spending has kicked in and as the Reserve Bank has actually induced more liquidity into the system. On inflation front, I think the key driver will be what happens to the food and vegetable prices. So far in December, there hasn't been much respite. So if the inflation print continues to be higher than what the market expects, then that is something which speaks against a potential rate cut in February. And obviously, as the dollar strength continues, the currency pressure will be there. So I think all in all, it is still a possibility that Reserve Bank might cut rates. So February is live in that sense. But I think the pressure on RBI to cut rates in February in some senses actually lessened to some extent as Fed has also backed off from its aggressive sort of rate cutting cycle in the next year. So I think a lot can change between now and February, but I think there is lesser pressure on Reserve Bank now to think of a rate cut at this point in time.
Okay, I'm not done with this line of questioning to you, but let me just get the view on the dollar rupee from Mithul. Mithul, it's taken a while for the rupee to cross 85 because of stiff resistance from the Reserve Bank. Where do you all see it now by year end? That's not too many days, but more importantly, by the fiscal year end, March end.
Right. So, I mean, we continue to see depreciation of the rupee. Our view has been that it's been, as you said, there's been aggressive intervention in recent months, and that's probably artificially stopped the currency from weakening to a more natural level. I agree that the rupee will outperform its peers in Asia, but that doesn't mean that we won't continue to depreciate. So, for example, we're forecasting 87 for dollar INR by end of next year, which, given the pace of the move in the dollar, I mean, obviously that forecast is on track as we currently speak. And I think ultimately there's a few factors here. We believe the rupee is rich on a valuation basis, both on a nominal and an effective exchange rate basis. We think we are focusing again on the yuan as a key factor here. If the yuan depreciates more significantly, which we think it may do, that could also exert downward pressure on the Indian rupee. And that trade deficit with China, of course, is quite important. So you've got that, the slowing in growth, the push for exports and manufacturing, and broadly a stronger dollar. So all of those factors play for a dollar rupee higher. The question is what pace, but we think the RBI will continue to control the pace of depreciation, but not stop it or reverse that depreciation trend.
Okay. No, they wouldn't do that, but they have come in for a lot of covert criticism. It's never overt on the RBI. Covert criticism on being unduly smoothing volatility to the disadvantage of even market participants. But Mithul, just very quickly, do you anticipate that the yuan will go all the way to 8? People have been calling in India for 7.3 like round the corner. It's only now that the yuan has gone to 7.29. Is 8 on your cards? And if yes, when?
Okay, so our forecast is 7.5, again, by end of next year. But we have to highlight the fact that there are risks of a much bigger depreciation of the yuan. Our models show that dollar yuan may even get above 840 if we see 60% tariffs on China and some retaliation. Now, again, this is not our forecast, but the reality is that what it does suggest is that there are still quite significant downside risks to the yuan. Look, if we do see 60% tariffs, it's very likely that we see some mitigating devaluation, depreciation of the Chinese currency. Again, the magnitude will really be dependent on to what extent President Trump inflicts tariffs on China.
Okay. Yeah, and there's widespread analysis that the 60% is only a bargaining tool. And I think Goldman Sachs has some model which says that 20% is perhaps the more realistic number. But 7.31, I believe, on the CNH, on the market rate on the CNY as we speak. Neeraj, two questions actually. First one, now the Reserve Bank has also to tackle imported inflation. If the rupee goes indeed towards, 87, as Mithul says, but, earlier, 87 perhaps is year end. Even if it goes to 85.5, there is a fairly serious imported inflation. So will that prey on the Reserve Bank's decision? And what's your own rupee target?
So I think another maybe about 2 to 2.5% depreciation over the next 12 months is quite possible, which is pretty much in line with what Mithul has talked about. Yes, as rupee depreciates, there is a imported inflation or cost push inflation factor that comes into play. But I think that is, in some senses, less relevant in the current context. I think what is more relevant in the current context is how much disinflation do we see in the vegetable and food prices. Because remember, the core inflation in India still continues to be close to 4% or slightly below 4%. So that's not a real worry at this point in time. I think what's giving the inflation its upward trajectory is the fact that food prices and some of the edible oil prices and those kind of prices have actually been on the higher trajectory. Yes, weaker rupee means higher, prices for edible oils, imported edible oils, etc. But I think all in all, it is the overall food complex inflation which will determine the trend of inflation going forward and whether Reserve Bank feels comfortable, with the trajectory of the inflation.
Okay, 2.5 is how much in dollar rupee? You're looking at 85.50?
Basically you can say that whatever is the implied forward rate currently, the forwards are trading at about, 2% or thereabouts. I think so, or slightly higher than that. So I think that's the level of depreciation we should expect. So effectively the forward curve gets realized.
Okay, so effectively probably 86 is very much around the corner. 87 a distance away. Now that is the big message I want to give viewers, that we are looking at a rupee very, very different color. 86 and 87 is freely being forecast both by the forward market and by analysts, and I want to get that message across to everyone. Mithul, Neeraj, I know we have just warmed up. We have to have a more detailed discussion on currencies and rates on a later day. Thank you very much indeed for your time. But do remember, there is also an expected Chinese dumping because they will not be able to enter US markets. Will that impact inflation? There are lots of issues to discuss over here, but that on another day. Wrap up on Bazaar on the note that it's a very tense morning, both for equities and for currencies and fixed income. After a break, Chartbusters will take the action for.
मिनट पर नीलकमल नाम की एक जो प्रवासी वेसल थी उसको नौदल की एक बोट टकराने से एक बहुत बड़ा अपघात हुआ है, एक्सीडेंट हुआ है। इन 13 लोगों में 10 सिविलियंस है और 3 नेवी के लोग हैं जिनकी मृत्यु हुई है। जिन लोगों की मृत्यु हुई है उनको सीएम रिलीफ फंड से 5 लाख रुपए दिए जाएंगे और ये जो पूरी घटना है, इस घटना की तफ्तीश ये पुलिस भी करेगी और नेवी भी करेगी।
जब लक्ष्मण मूर्छित हुए थे तो हनुमान जी उनके लिए संजीवनी बूटी लेके आए थे। तो आज दिल्ली के बुजुर्गों के लिए मैं संजीवनी योजना का ऐलान करने जा रहा हूं कि 60 साल से ऊपर के हमारे जितने बुजुर्ग हैं उन बुजुर्गों का पूरा इलाज फ्री करवाया जाएगा। इसकी चुनाव के बाद हम योजना लेके आएंगे, योजना पारित करेंगे। वो चाहे सरकारी अस्पताल में इलाज कराना चाहें, चाहे प्राइवेट अस्पताल में इलाज कराना चाहें, उनका पूरा इलाज फ्री कराया जाएगा। इसमें कोई बीपीएल, एपीएल, टीपीएल, आरपीएल कोई लिमिट नहीं होगी। सबका इलाज, चाहे अमीर हो चाहे गरीब हो, सबका इलाज मुफ्त कराया जाएगा और कोई अपर लिमिट नहीं होगी। आप जितना आपका बीमारी पे खर्चा आएगा उसका सारा खर्चा दिल्ली सरकार वहन करेगी।
Nifty and the Sensex open with sharp cuts as the US Fed's hawkish outlook for 2025 weighs on the market. IT and metals are the biggest losers so far.
Asian Paints is down 2%, declining to its lowest level since April 2021 on the back of two leadership exits. Both Vishu Goel as well as Shyam Swami cite personal reasons as the cause of their exit.
Dr. Reddy's Laboratories buzzing in trade after a Nomura upgrade coming in. They've upgraded the stock to buy from a neutral call with a target price of 1,500 rupees.
DOM slips nearly 4% after 4.5% equity changes hands worth around 808 crore rupees. The change of hands happens at around 2,899 rupees. Sources say that Fila is likely to be the seller.
CNBC-TV18 News confirmed as Zaggle launches a QIP with an issue size of up to 750 crore. Sources say the indicative price is set at a 523 rupees a share, stock down nearly 2.5%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. With me is Mangala Malu. And as we speak, well, as you can see to the top of your screen, the markets are still in the red. However, the good news is we've seen a bit of recovery from the low point of the day. And Mangala, I'll tell you what, the bulls will be clutching onto these data points. They'll be hoping that in the near term, we could see some bit of oversold levels. And that's why we're seeing a bit of a bounce. But I'll tell you what, more than the Nifty, what is impressive right now is in the first 10 minutes of trade, the advance decline ratio had only around 160 stocks that were advancing. That number has moved to around 650. So let's see whether or not the breadth of the market can improve. For the time being, at least those crisscross lines are getting a little bit closer to each other.
We're seeing that in a lot of individual stocks as well. You know, this morning, if you look at something like a Trent, it had been weak over the last couple of fortnights, and now it's coming back once again. So Trent's moved to the high point of trade. Lower oil prices overnight meant that some of these refiners could do well. So BPCL is higher, oil marketing companies. So just keep an eye out on BPCL. And then you also have Castrol, which uses crude oil as an input. So we'll keep an eye out on that one. That too has moved to the high point of trade. And seeing some traction on a couple of names like 63 Moons, etc., which continue to do their up move. This week itself, the stock is up around 20% So a bunch of stocks doing well. Swiggy, for instance, continues to move higher, closing in on a record high level. And Shoppers top 2. Yesterday, Amazon sold their 4% stake, so maybe the supply overhang having gone away has taken the stock higher by about 2.5%. So a bunch of stocks which are advancing in an otherwise gloomy market. The good part is that the Nifty is held on to that 200-day moving average a little over that 23,800 mark itself. So let's get in Vinay Rajani of HDFC Securities for a quick technical check on the market. Vinay, we've made the lows of the day. Do you think we will revisit that and go perhaps lower? Or maybe for now, the 200-day moving average remains an important support zone to track?
Yeah, good morning, Mangalam, and thanks for having me on the show. So definitely there was a support at 23,900, which happens to be the previous swing low, and this low was made on 28th November, and today's low is exactly around that level. 23,870 is a low, and the put call ratio at the beginning of the day was 0.55. So after the opening, that put call ratio, which was oversold, has actually seen a bounce. Now it is currently placed at 0.65. So after a gap down opening, the put call ratio started rising. That means more puts have been written than the calls. That's a good sign. So we may expect an intraday recovery from here. But yes, yesterday we saw a short build-up in the Nifty and Bank Nifty both. So positional trend could remain down. On the higher side, 24,100 is a strong resistance, which is derived from the downward sloping trend line, which was acting as a support previously. Now it is expected to act as a resistance. So 24,100 is a strong resistance around which I think intraday traders should exit the long positions, and uncertainty will remain there because it's an expiry day. And last 4 days have been a bearish for the markets. So overall, I feel that intraday bounce could come, but traders should exit the long position around 24,100. And at the lower level, if today's low is again broken, then we can expect a next target of 23,700. So it's a conditional buy or sell, but yes, there could be a pullback rally in the intraday up to 24,100.
Got it. Okay. All right. Vinay, good morning and welcome to the show. You've given us a view on the index. I think you're saying the trends still seem to be weakish, but don't rule out a bounce from these oversold levels. Tell us about individual stocks, though. What are the trades you have for us?
Yeah, so in this kind of scenario, I think pharma sector can outperform. So one of the stock which is looking very strong on the chart is the Torrent Pharma, which has given a breakout from the consolidation. So Torrent Pharma can be bought around 3,400. Stop loss can be kept at 3,325, and upside target can be kept at 3,525. So this is a 1 or 2 days trade. And another trade I would like to go for is the short side. So Axis Bank closed on a weaker note yesterday, and today also it is showing weakness. So Axis Bank December future can be shorted around 1115 and stop loss can be kept at 1135. On the downside we can expect a target of 1085. So one long on the in the Torrent Pharma and one short in the Axis Bank December future.
All right, long in Torrent Pharma, short in Axis Bank. Just keep an eye out on India VIX now. That's moving lower as well. So that's a positive sign. The market's recovering from the lows of trade. Broader markets doing a lot better. And the India VIX coming down along with the put call ratio improving to 0.65 versus 0.55 as Vinay put out as well. So those are a couple of factors we'll keep an eye out on. But speaking about ideas for profit coming in from our colleagues at Money Control Pro, let's get you one with Khushbu Rai, who joins in to talk about a stock.
In today's idea for profit, we have Home First Finance Company. Home First is a technology-driven housing finance company that operates in the affordable segment, targeting first-time home buyers. The company aims to keep its productivity at par by using tech and digital innovation. If we look at the recent earnings, Home First has been a consistent performer despite intense competition. In terms of scalability, the company has crossed key milestone backed by buoyant demand from Tier 2 and 3 cities and strong policy thrust. The company is gearing up for future growth with increasing penetration in core regions and addition of new territories. Also, more co-lending tie-ups and increase in ticket size will drive asset growth in the coming period. Moreover, the company expects a meaningful impact from Pradhan Mantri Awas Yojana CLSS scheme in FY25. We believe that affordable housing sector will be a key focus area of the government. Therefore, Home First will stand to benefit given robust loan growth and stable asset quality. Investors should consider adding the stock on dips with a long-term view.
All right, with that, we'll take a short break. Come back on the other side. We'll focus on the primary markets. Paresh Dattani, Chairman and Managing Director, and Samir Dattani, who's the Director at Sanatan Textiles, joins in to discuss their IPO that opens today.
But the word reciprocal is important because if somebody charges us, India, we don't have to talk about own, if India charges us 100% and we charge them nothing for the same, they send in a bicycle and we send them a bicycle, they charge us 100 and 200, India charges a lot, Brazil charges a lot. If they want to charge us, that's fine, but we're going to charge them the same thing.
Hello and welcome back. You're watching us here on Chartbusters. Let's shift focus to the primary market action. Yarn manufacturer Sanatan Textiles 550 crore IPO opens for subscription today, closes on the 23rd of November. It's 400 crore of fresh issue, 150 crore of offer for sale. We do have Mr. Paresh Dattani, who's the chairman and managing director of the company, and Sameer Dattani, who's the director of Sanatan Textiles, joining us in the studio. Thanks a lot, gentlemen, for joining in. Welcome to the stock markets, as they say. The important part, while you have you raise the money that you do, you have a lot of responsibility towards your shareholders, etc. as well. Two things in particular I want to ask. From the 400 crore rupees that you're raising, about 300 crore looks like it is going towards debt repayment, and 100 crores is for general corporate purposes. So the obvious question is, what is your consolidated debt right now? How much does it reduce by? And 100 crores in general corporate purposes, can you specify? Because 25% of your offer for sale going in for general corporate purposes is something that the street wants clarity on. How much will you spend where?
See, we have a 400 crore primary issue. Out of that, 300 crores we'll be paying back the debt. The peak debt that we'll have post the expansion that we are on, we are more than doubling our capacity. Once that comes into post, the peak debt will be about 1,400 and odd crores. We'll be paying up 300 crores, so we'll come to a peak debt of about 1,100 crores.
Okay, all right.
And the general corporate purpose expenses, we'll be using it mainly to fund our working capital margins.
Got it. All right. Welcome to the stock market, guys, and thanks a lot for coming down to the studio. So you'll have 1,100 crores approximately of consolidated debt post this payment. So your rough interest cost outgo would be at a percentage of what, 7 to 8% is what you're borrowing? So it'll be approximately
about 75 to 80 crores.
75 to 80 crores.
And when does the debt peak? As in, where do we see the peak debt numbers reflecting on your books?
Peak debt numbers, once we commission the plant, I mean, this will be, it'll be coming in the first quarter, FY26.
Got it. All right. Hi, Sameer. Welcome to the show as well.
Hi.
Tell us, in terms of capacities, you're going to be doubling your capacity, I understand. As of last year, you did roughly around revenues of around 3,000 crores. If you're going to be doubling capacities and you're functioning at optimum levels, is there a potential that your revenues as well, optimum levels, you could do double the revenues, which effectively would be that around 6 to around 7,000 crores?
It makes sense, right? Because our current yarn capacity is 223,000 tons per annum.
Okay.
And over the next 3 years in a phased manner, we will be at 550,000 tons plus.
Okay.
And all of this expansion is planned. It's on ground. The first phase will start in April 2025.
Okay. So you're saying that, you have the potential, but do you think demand will be such that you could move towards that peak revenue number that you're talking about?
So there are two factors. First of all, the India demand is growing. The textile industry, as reported, is expected to grow at a CAGR of 7%. There is a massive PLI incentives the government of India has given. And all of that is mainly for downstream, for our customers, the fabric and garment manufacturers. Now, all of that will require a lot more yarns. And let's not forget, we have the Bangladesh opportunity for the Indian textile industry, which I think we will be able to convert. And plus adding to more exports of garments and fabrics requiring more yarns.
So, two factors to that. You said one is the strong demand from the end users of your products, and secondly, the opportunity is coming by. With you actually going ahead and increasing your capacity, there would be some operational efficiencies that you would generate as well, and the value-added products, which I see at around 50% of your overall sales. If you could give us a sense on your margins, because I look at your margins, they're all over the place. FY22, they were around 17%. Last year, they ran down 8% with increase in value-added products, increase in capacity, etc. What is the sustainable margin that one should look at? Revenue, you've told me approximately, it could be close to around 6,000, 6,500 odd crores. What is the margin that everyone should work with?
See, we have consistently, if you look at 3 years, 5 years or 7 years, we have done about 10.5 to 11% EBITDA over the last 3 to 7 years average.
Yeah.
We don't look at it year-wise because post the COVID, the pent-up demand, that was 1 year, and then the geopolitical situations impacted the margins because of the exports. But over the last 3, 7, 10 years, we have consistently done 10.5 to 11% EBITDA.
So that should be more realistic. The 17% was an aberration, and on the downside, even 8% is an aberration.
And I must tell you here also that with the expansion, we are going closer to the consuming centers.
Got it.
And we're going to be, at the moment, the only supplier there locally there.
Mangalam also asked you about, value-added products as a percentage of the total mix. Where do you see that number headed? And also, geographically, how do you see things change? I think exports are still smaller. Do do you see a potential of that as well going up? So percentage on both VAP as well as exports.
Our exports have typically, if over the years, ranged between 5% to 16%. This we move according to better netback margins. If we get better netback margins locally, we move here. We are not in a compulsion because we were stressing our assets fully. We were in a sold position. We didn't have material to supply. So that choice we always had to move whichever way we wanted.
Just a final question. You did say that your volumes would increase by a certain amount when your capacity increases. I'm just looking at it from a simple, this is the money that I put in and this is what I get in terms of return. So your capex plan is close to around that 1800 crore mark.
That's right.
Typically, what is the asset turn on a business like that?
On an asset turn of polyester filament yarn, it's about 2.1 to 2.2 asset turn. And the cotton yarn gives you an asset turn of 1 to 1.1.
So roughly, this implies a revenue potential of 3600 odd crores?
In the first phase. And overall, when we complete all the all the phases, it will come to about 4,400 crores revenue.
So currently, you're doing about 3,000 odd crores, right. 4,400 crores. Say 3 years from now, we're looking at revenue of almost $1 billion with 10% margins. Is that a possibility?
That's a possibility.
Okay. Very quickly, what about your return ratios? What is typical ROCE you'll work with?
Over the years, we have consistently got ROCEs of north of 20%.
Okay. And, from a stock market perspective, they are a little uncomfortable with companies having a large debt. So do you think with the cash that you will generate over the next few years, you'll be able to repay this debt down from around 11,100 crores? Will the aspiration be that, say, in the next 4 years, that you'll virtually be debt-free? Could that be the direction?
Oh, if you look back at our history, whatever debt we have taken, we have always prepaid the debts and never restructured any debt. And this debt also, we intend to pay it off earlier.
Okay.
Right. And also, I would like to add, even at the peak debt, our debt equity will be at about 0.7, 0.8.
We'll hold all to some of these numbers. And on listing, we request you all to rejoin on the channel and, in fact, give us more concrete numbers. But all the best, gentlemen. Thanks a lot for coming
Thank you very much.
Thank you. To the studio as well.
Thank you.
Well, for the time being, though, I think we'll slip into that short break, come back, continue our focus on markets and stock-specific action.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai.
Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports.
We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make investing.
Welcome back. Well, the markets are still down, recovered a little bit from the lows, but from the broader markets, plenty of stocks are doing well. Pull up Stovecraft. That stock has moved to the high point of the day, and for this week itself, it's done quite well. Keep in mind, it's been a relative underperformer post its listing because the stock nearly doubled, and from there it saw a sharp correction, but now it's pulling back in style at around 915 rupees. Vascon's another stock that's been an underperformer, but that as well has seen some kind of buying from around that 50-51 rupee odd mark. So keep an eye out on that stock as well. Vascon is the stock that we're talking about. And NMDC got smacked yesterday. Yeah. The street seems to be wondering whether or not, what the Karnataka government is saying, whether it can be rationally implemented, because otherwise the miners make no money. For the time being, the stock is up 0.5%.
Keep an eye out on a couple of these other stocks as well from the broader markets, like you spoke about. AGI Greenpack is one. Opened with a sharp cut. From there, that dip was bought into, and it's recovered about 8% from the lows. So AGI Greenpack currently at the high point of trade, sitting with a gain of almost 2%. It's been a good month for them, up around 30% in this month itself. The other one is Zinka Logistics. Recent listing this month itself, the stock is up 80% from its issue price or opening price itself. And now currently sitting with a gain of almost 8% and 5-Star Business Finance. That's another recent listing that too has moved to the high point of trade. So a bunch of motley group of cash stocks doing extremely well, even as the markets are slightly under pressure, though recovering. What we'll do is take a short break on that note, wrap up on this edition of Chartbusters. But as we do wrap up, here's some good news for you. To Nigel's right, you will see that a phone comes up because that's where the CNBC-TV18 app is. India business news leader is now just a click away. That's the all-new CNBC-TV18 app. You use your phone, you get instant access to all the in-depth analysis, news, articles from the financial world, updates on your fingertips. All you got to do is download this app on either the Apple Store or Google Play Store, depending on the operating system that you use on your phone. And then go ahead, use that, get all the updates on your fingertips in real time.
Comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Good morning. Welcome to Trading Hour. Still no meaningful recovery for the markets inside, down over 1% on the benchmark indices. The Nifty struggling below 24,000, and we're in a sea of red across the rest of the global markets too. Mid-caps too under pressure now, down close to about 0.6%. IT, banks, metals, these are the problem pockets for the day. I'm Reema Tendulkar. With me over the next 1 hour is Sonal. Hi, Sonal.
Hey, Reema. And you named the sector and it is in the red, barring Pharma today. Yet again, it's the Pharma space which is doing well. And that continues to be the trend that we've seen. You know, that index is at the day's high when we are looking at markets falling below that 24,000 mark. The mid-caps continue to suck, though they are relatively outperforming the benchmarks. They're down just 0.6%. Bank Nifty is putting a lot of pressure. We do have the FMCG index, which is under pressure. But financials, metals and the banking index, they continue to be the big drag on the market as well. So we'll keep chatting about this and discussing it with our guests on the show as well. But for now, if you look at some of the stocks which are bucking the trend, BPCL, for instance, is up around 1.5% as we speak. So this oil marketing space today is in the green in an otherwise very weak market. We have Dr. Reddy's, which is the top Nifty gainer today. That index is up around 3%. Cipla is the other one, which is up around 1%. Trend did make a recovery from the lows yesterday, and today as well it continues its trend. So that stock is up around 1%. But other than that, we have losers, the likes of Asian Paints that continues its down move. We have Bajaj Fin. The metal index did come for some profit taking towards the second half of trade yesterday. That continues to be the trend today as well. So JSW Steel is down around 2.5%. But you know, it's also a day of listing. We did see 3 listings yesterday. Today as well, we have Inventurous Knowledge Solutions that made a strong debut on the exchanges. The stock listed at a 43% premium at 1900. This versus an issue price of 1329. Winnie is joining us with more on the company, the stock and the outlook going forward. Winnie.
Absolutely. So an interesting day, 43% uptick in terms of the listing premium that we saw coming in for IKS Health. Now, obviously in this, some of the promoters had gotten out and sold some of the stake in the company. This company is actually an interesting one. It is a technology-based healthcare solution provider, and they mainly cater to clients that are more like physicians and clinics is what they focus on in the US market, and they provide services in terms of technology to such clients. So yes, making their day-to-day jobs easy is what IKS Health focus on. Other than that, when you look at it, there's no listed player in India which is a direct comparison to it. And today a strong listing coming in. So in terms of the FY26 PE that one would look at would be somewhere around the 54-55 times mark for FY26. So that'll be interesting to watch out for at the current price that we're comparing. So yes, that is something to watch out for. Other than that, in terms of CAGR growth, the company has managed to see good growth over the last few years in terms of revenue, 54% growth in terms of CAGR over the last FY22 to FY24, profits growing at 26% for the same period of time. So good listing coming in, an interesting one to watch out for going forward.
Thank you very much for that. We chatted with the management during the IPO. Listen in to what they had to say about the growth going ahead.
The reason they dropped to 31% last year was because we acquired a company called Acuity Solutions, which has a very large customer base. IKS traditionally had about 35,000 physicians under management. There are 900,000 physicians in America. IKS had 35,000 physicians under management. We acquired Acuity last year that actually has 120,000 physicians under management. So together that's 155,000 physicians, which is 18% of all of America's physicians. That becomes now our captive customer base into which we can cross-sell our entire platform, which forms the growth thesis for the next 10, 15 years. As we cross-sell our platform across these 155,000 physicians, it creates a captive opportunity of up to $28 to $29 billion. We're seeing margins in the range of early to mid-30s as we stabilize. Outsourced TAM is growing at 12%. If you look at our historical growth rates from FY22 to 24, it's, on a standalone basis, we're 27%. So when you look at the outsourced TAM growing at 12%, our historic growth rates, our acquisition of Acuity and the massive customer base in which we can cross-sell, we feel very confident that we will far outpace the outsourced TAM growth rate of 12%.
Okay, all right. That is the word coming in from this new listing. But with that, let's move on now and get into the Growth Code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed investment decisions. This week, CNBC-TV18's Nigel D'Souza sat down with Vishal Mehta, CMT and founder Market Scanner, to understand why trading during low liquidity periods is risky. Let's listen in.
Why is trading, in a low liquidity market rather risky, especially in the F&O market?
Indian markets are the most liquid ones. Like Indian options market are considered to be the most traded contracts in the world. We have introduced next 45 stocks in the future segment. But liquidity is always when you are entering.
Yeah.
The problem is when you want to exit in a panic scenario, the liquidity dries up. So the more important part is you trade the liquid counters. And because I've seen in my personal experience, the stocks which were liquid, all of a sudden turn illiquid and you do not get proper exit. And in this scenario, the only thing that can save you in the derivatives market is a hedge position, because you know that this is the maximum loss that I'm going to incur.
बजकर 55 मिनट पर नीलकमल नाम की एक जो प्रवासी वेसल थी उसको नौदल की एक बोट टकराने से एक बहुत बड़ा अपघात हुआ है, एक्सीडेंट हुआ है। इन 13 लोगों में 10 सिविलियंस है और 3 नेवी के लोग हैं जिनकी मृत्यु हुई है। जिन लोगों की मृत्यु हुई है उनको सीएम रिलीफ फंड से 5 लाख रुपए दिए जाएंगे और ये जो पूरी घटना है, इस घटना की तफ्तीश ये पुलिस भी करेगी और नेवी भी करेगी।
जब लक्ष्मण मूर्छित हुए थे तो हनुमान जी उनके लिए संजीवनी बूटी लेके आए थे। तो आज दिल्ली के बुजुर्गों के लिए मैं संजीवनी योजना का ऐलान करने जा रहा हूं कि 60 साल से ऊपर के हमारे जितने बुजुर्ग हैं उन बुजुर्गों का पूरा इलाज फ्री करवाया जाएगा। इसकी चुनाव के बाद हम योजना लेके आएंगे, योजना पारित करेंगे। वो चाहे सरकारी अस्पताल में इलाज कराना चाहें, चाहे प्राइवेट अस्पताल में इलाज कराना चाहें, उनका पूरा इलाज फ्री कराया जाएगा। इसमें कोई बीपीएल, एपीएल, टीपीएल, आरपीएल कोई लिमिट नहीं होगी। सबका इलाज, चाहे अमीर हो चाहे गरीब हो, सबका इलाज मुफ्त कराया जाएगा। और कोई अपर लिमिट नहीं होगी। आप जितना आपका बीमारी पे खर्चा आएगा उसका सारा खर्चा दिल्ली सरकार वहन करेगी।
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Well, markets continue to sell, so it's a good time to get in a technical check on the markets. Vishal Malkan joins us for just that. Vishal, it's the expiry day. Do you think we'll see some reversal because there's no respite from the lows?
Yeah, I think the way markets are behaving today looks like a kind of a retracement from the previous upswing. We are exactly at like 61% retracement of the previous level. So I think around this 23,900 and 950, there is an important support for Nifty as well as Bank Nifty around 51,500. So this can be an important support, and we should look for some kind of bounce back from here today or tomorrow, which could be a good sign that okay, the bottom is locked. But specifically, stock specific should not be a problem.
And the stock specific calls would be, Vishal?
Yeah, clearly the winners for today are pharma sector, and that's been outperforming sector since the last few months. And in the last few days also, when the correction started, some of the stocks didn't correct that much. So that shows that outperformance. So first one would be Lupin, which is sustaining above that 2050 level. So I'll go with the buy on that with the stop of 2075 for targets of 2200 and 2250 in the next few trading sessions. And the second one, again from the pharma sector, would be Zydus Life, which is kind of making double bottom at the same level since last few days, forming a reversal pattern on the upside. So I'll go with the buy on that with the stop of 965 for targets of 1010 and 1030.
Okay, all right. Thank you so much, Vishal, for joining in. So that's the technical check on the markets, but it's time to also focus on the commodity space. Manisha Gupta joins us now, and gold is in focus again. Manisha, tell us what's happening here.
Well, it is, and not for prices, but the kind of import data that we have been reacting to for last couple of days. Now, we all do know, and we've been talking about it, that the month of November has seen record import of gold into the country. But the problem is with the kind of quantum that we perhaps are looking at. Well, the Ministry of Commerce has put out a data suggesting that we've seen an import of around 173 tons for the month of November. While Metal Focus, it's an agency which provides data to World Gold Council and collects and delivers data in 9 countries, has come out with a figure of 136 tons. Well, Metal Focus and various other gold guys in India have been telling us that the numbers seem slightly off the mark, especially coming in from the ministry. And that is because perhaps 40 tons, or the difference that is there, has been reported twice, is the reason the ministry data has been on the higher side. Well, that conversation went on all day yesterday. And by the evening, we do understand that the government is now looking, or rather DGCIS is now looking at a detailed examination of the November import data, and that the data reconciliation will be done with the customs numbers, CBIC numbers that is, and we will see a final number or a final calculation perhaps coming into the markets right now. But even with that, we have seen that the gold imports into the country, and for the month of November, even at 136 tons, if you're looking at that, is on the higher side. Since the time we've seen a duty cut come in the month of July, and the prices came off its all-time highs, and of course ahead of the festival and the wedding season, the import into the country have been on the higher side.
Thank you very much for that. Get into a break. On the other side, we've got an important discussion lined up. So Moin Ladda from Khaitan & Co and Sandeep Parekh from FinSec Law Advisors will join in to talk about SEBI's new SME IPO framework.
But the word reciprocal is important because if somebody charges us, India, we don't have to talk about own, if India charges us 100% and we charge them nothing for the same, they send in a bicycle and we send them a bicycle, they charge us 100 and 200, India charges a lot, Brazil charges a lot. If they want to charge us, that's fine, but we're going to charge them the same thing.
Welcome back. In its latest board meeting, market regulator SEBI has approved a series of key measures which are aimed at protecting investor interest and improving the various aspects of market regulation. Yash is here with the key highlights. Yash.
Well, Rima, a total of 19 items got SEBI's approval in yesterday's board meeting. The three most important out of them, and to start with the most important out of those three as well, was with respect to the regulations that came as far as the SME IPO, the small and medium enterprises IPO side is concerned. Multiple things got approved, things like companies seeking an approval from SEBI should have an operating profit of 1 crore for the preceding 2 years out of 3 last years. OFS portion, that is offer for sale, cannot exceed 20% of the issue size. Promoters looking to repay any of the debt through funds raised via IPO will not get approval. Selling shareholders cannot sell 50%, more than 50% of their holding. Promoter lock-in in excess of the minimum promoter contribution will be released 50% after the first year and the balance 50% after 2 years. Allocation under NII category, that is the HNI category, will be via draw of lot method. And finally, related party transactions or RPT norms will be applicable on SME as well. Merchant bankers, a few restrictions came on that side as well with respect to the businesses that they can do under SEBI's purview. For other businesses which are not permitted, they'll have to register a separate brand, separate entity, get the approval from the respective regulator, and only then they can do those businesses as well. Insider trading regulations also saw some of the approvals coming in. Importantly, 17 new items got added to the definition of unpublished price sensitive information. These 17 new items will now require disclosure from the management going forward as well.
Okay, all right. Yash, thank you so much for telling us and summarizing the big takeaways from the SEBI board outcome yesterday. But to discuss more on this, Sandeep Parekh, Managing Partner and Founder of FinSec Law Advisors, and Moin Ladda, the partner at Khaitan and Company, is joining us now. Gentlemen, good morning. Thank you so much for joining in. Sandeep, let me start with you. Just the first reaction specifically on the SME bit. Do you think this largely addresses the issue that the regulator has, or more was needed and this is slightly softer for the industry than what was expected?
Hi. So I think it's actually, if you look at it from the SME IPO norms, they've tightened it very, very significantly. It's a lot of tough love for people who kind of going in for these alternate listings that we call SME listing. So a lot of restrictions in terms of profitability, what, you know, how you can enter, the kind of lock-ins. The RPT has been kind of tightened a lot because, again, a lot of it must be coming from experience. But it certainly appears like, you know, they're not happy with what has been happening in the SME IPO route, and therefore they're kind of significantly tightening who can come, how much they can raise, how long they get capped up for, and then also bringing in many of the norms of related party which are applicable to main board companies. So I would say it'll make life much, much tougher for, justifiably or not, of course, we can discuss, but it will make life much tougher for people who want to come for an SME IPO.
Sandeep, let's talk about the justification, right? Tough love, as you called it, for SME IPOs. And we've seen some crazy subscriptions for many of the companies that got listed on the SME board last year. According to you, which of the regulations or restrictions are a little excessive, you know, maybe unnecessary or, you know, excessive, according to you?
So, I mean, see, there are two ways of looking at it. My perspective is, you know, regulator's job is not to remove foolishness from the market. It's to remove kind of ignorance. So this is, you know, these are very substantive changes. And again, you know, there'll always be two camps, two philosophies which will battle whether to kind of curb these kind of IPOs by substantive restrictions and kind of what you can do, what you can't do, which is what we had before 1988, which is a merit-based system in which people, in fact, you know, pre-1988, companies had to ask the government that they want to raise X amount of capital at Y price. So I think SEBI obviously has been unhappy with the kind of the excess froth which has been, but, you know, again, like I said, is this the correct way to do it? I'm not very sure about that, because ultimately, you know, people will have to learned that there is no free money in the world, and SME IPOs. We've had one example where a small workshop with like 8 employees or 12 employees got multiple times subscription for literally 2 shops that he ran. So I mean, we've had a lot of craziness that's bound to go away in any case. But I think restricting is there are 2 ways to do it. One is to improve disclosures, the other is to kind of have substantive restrictions, which is what I think SEBI seems to have chosen route number 2.
Okay. Moin, coming on this, your thoughts on this? Do you think something else that can be added? There were a lot of issues raised by the regulator as well. Do you think all of it and most of it has been addressed?
I think, as Sandeep mentioned, right, one cannot completely comment on whether all the issues have been addressed, but going to why SEBI has done this, there have been some strange, sort of success stories of SME IPOs. There's been a suspicion of, money being raised and diverted in some other way, repaid to the promoter, pending loans. All of these seems to have now been attempted to be dealt with, but we will only know how this shapes up, whether this takes away the bullishness, takes away the opportunity from the SMEs, really. But my personal view really is that these seem to be positive steps. We've evolved even in the general main board listing rules. There used to be times when object or end use of IPO proceeds was not very clear. And all of these things coming in, gapping up some of these, related party-related conditions, also having clear requirements not to sort of use the IPO proceeds only to repay loans, or having stricter norms around that, I think is a positive step taken by SEBI, really.
But some of the conditions that have now been approved, for instance, operating profit for 2 out of the 3 years, that's not even there for the main board IPO. Now it's been introduced for the SME IPO, Moin. So comment on that. Do you think any of them could have been avoided? Has SEBI gone a little too far?
I think that condition is something that does make it unattractive and may make it restrictive for many companies who want to do this. However, there are other, other sort of proposals, like the lock-in, for example, restriction on how much can be used for general corporate purposes, restriction on how much of OFS can be really added. Those seem to be sort of logical changes, but I do agree that just having an operating profit for the last 3 years, if I'm not wrong, 2 out of 3 financial years, is something that's market-driven, industry-driven, and that's not something that rules out even companies listing on the main board, as you rightly mentioned.
Okay. Sandeep, then what do you think? There are some restrictions, as of course, we spoke about profits, right? Some of the restrictions that we've seen in the SME IPOs that should and could be applied to main board IPOs as well, because we also have seen a lot of main board IPOs which are not profitable, but they do make substantial listing gains.
No. I'm completely not in that camp at all. I think the problem with SME IPOs has been there's too much froth, and it's been pretty crazy. So I think this is kind of may not be the best way to, but this is the way SEBI is handling it. To restrict main board companies to have profits for 2 out of 3 years is kind of really bad move. And again, goes back to that pre-1988 move of government or some kind of bureaucrat or regulator trying to control the flow of capital. So long as it goes through a book building process, people are coming in with the eyes open. I really don't see that should come into the main board at all. People should be free to invest in loss-making companies, so long as many of these have long gestation periods, and therefore it's good to have those companies raise capital, scale up. We've seen a lot of that money. We're beneficiaries of that, right? Every time you get your 10-minute delivery, it's probably come because of valuation which the kind of capital many of these companies have raised through IPOs. So I think it's a lot of it can be productive. So I don't think many of these restrictions ought to be imposed on the main board.
Out of time, but we had some more questions on even the changes made to the unpublished sensitive information. But for another time, Sandeep Mohan, thank you very much for joining in on CNBC TV 18. Get into a break. On the other side, we'll talk fundamentals. Santosh Singh from Motilal Oswal Asset Management joins in.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC TV18, Mumbai.
Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC TV18.
Celebrating 25 years of CNBC TV18.
From sharp insights in the political arena to all the excitement from the world of sports.
We are here at the CNBC TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC TV18.
The markets are betting big on affordable housing. Look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more.
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. It's time to talk fundamentals now. Santosh Singh from Motilal Oswal Asset Management is joining us now to discuss the market fundamentals, the top sectoral bets as well. Santosh, good morning. Thank you so much for joining in. Well, we've seen days of recovery in the month of December and then again that fall. What is the trend now that you are witnessing? Do you think we'll continue to see consolidation for some more months, even though Q3 has seen the recovery that we have spoken about? What are some of the sectors that you are focusing on now?
So see, firstly, I don't expect the markets to sort of go up in the near term. One, because the Fed policy, yesterday, the policy you've seen, right, that moved towards a slightly sort of hawkish stance. Right, and then the second part is we need a recovery in our own sort of fundamentals, right? The earnings recovery, which is needed now. So we are expecting that something can happen in Q3, but let's see how it turns, Q3 and Q4 turns out. So that's going to be the key trigger if we are talking about the market recovery. Definitely on the sectoral side, we see a lot of opportunity. We still see a lot of growth into the non-lending financials. We still see some sort of good sort of upside in the IT companies, and that's specifically on the mid-cap IT side of it. So we still see some opportunity. We still see capital goods doing well. Manufacturing is doing well. So we still see these areas doing well for in the near term as well.
Santosh, hi, morning. I know in the past we've spoken about insurance and you did hold some life insurance companies too. Now, increasingly, what CNBC is learning from sources is that maybe the regulator is looking to limit the dependence of insurance companies on their parent bank or the bank assurance channel. And stocks have slumped because of these fears. Are you worried about your holding in insurance companies? If someone is a shareholder, what should they do? Should they just ride it out, or it's a manageable risk according to you?
So just to sort of correct that, my holdings are mainly in health insurance companies, not the life insurance companies. And the main reason behind that has been the regulatory sort of I would say too many regulations coming up on the life insurance side of it. That's the reason we are holding very little of life insurance companies for some time now. We like that segment, but till the time the regulations don't settle down, for a shareholder, money making is difficult. Although I believe that most of the regulations which you are talking about is not going to fundamentally affect these companies, but the stock price might not move till the time we see a settling down of regulations. So that's where I think at least it needs a year or two where we don't see too much regulations, we don't see new things coming in, right? For the shareholders to make money.
You did own HDFC Life, right, in the focused fund? So is that holding still there, or you've exited it?
So we have around 1%. We used to own a couple of % of the fund. So although we have large insurance holdings, but HDFC Life was around couple of % there. So and then we exited most of it because of the because of a lot of noise which is happening. So with noise, it's very difficult. The fundamentals of the company are excellent. They are growing despite all the noise. But the problem is if you have too many regulatory noise, how would you make money out of it?
Santosh, in a market like today, the pharma space is the one which is doing really well. It did that yesterday as well. Do you think tide is turning here? There are some triggers which are working for the space. Would you look at it?
So, see, so there are two parts to it. One is from a allocation point of view, it makes sense to sort of allocate to some part into pharma, some into IT, or incrementally even a little bit into consumer side of it. It makes sense. So because the cyclical part or the capital goods part of the market have seen significant sort of re-rating, and we have not. And if we leave apart the last 5-6 months, we didn't see that happening in most of the segments of pharma as well. So I would think it really makes sense to be part of in some of the stocks. I would still not be significantly overweight on the sector, but yes, it makes sense to be in this sector.
Auto components was one of your big bets. Are you still as bullish, or considering the noise that we're hearing that global growth may slow down, particularly in Europe, and many of the Indian listed auto component players have exposure to Europe, there could be challenges going ahead?
So there are two regions. So our auto component holding is dependent on two things. One is the auto growth, and second is we only hold a couple of companies, right? And then one is one actually benefits from any global weakening because they are an acquisitive company, and second one which we hold is more of a India-based sort of autocom company, and yes, there has been some share price impact because of this. But my belief is that see the global growth, yes, may remain under pressure for some time, and then we are not seeing a lot of revival there. So yes, the global growth may see some sort of for the global guys, it might be some trouble. But if you are saying that the capital goods part of the market might do well, then the CVs in the next year should start seeing recovery. And if that is going to happen, that autocoms, which are dependent on the CV industry, should see a good recovery going forward.
Okay, all right, Santosh, take that point. So that's the market view coming in from Motilal Oswal AMC. Thank you so much for joining in today with your thoughts. Time for a short break now. Siddhartha Siet, Joint Managing Director at Vishnu Chemicals, will join in next to discuss the outlook for second half of FY25.
Celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
बजकर 55 मिनट पर नीलकमल नाम की एक जो प्रवासी वेसल थी उसको नौदल की एक बोट टकराने से एक बहुत बड़ा अपघात हुआ है, एक्सीडेंट हुआ है। इन 13 लोगों में 10 सिविलियंस है और 3 नेवी के लोग हैं जिनकी मृत्यु हुई है। जिन लोगों की मृत्यु हुई है उनको सीएम रिलीफ फंड से 5 लाख रुपए दिए जाएंगे और ये जो पूरी घटना है, इस घटना की तफ्तीश ये पुलिस भी करेगी और नेवी भी करेगी।
Welcome back. You're still tuned into Trading Hour. Let's focus on Vishnu Chemicals, the outlook for the company and more. Siddhartha, the Joint Managing Director at the company, is joining us now to answer a few questions on what demand is looking like right now. Siddhartha, good morning. Thank you so much for joining in. Well, Q2 did see some impact of some shutdowns. There were freight costs which were higher. Tell us how Q3 has panned out so far. We are towards the end of Q3 as well. Did things look better versus Q2? What about volumes, both in your barium and chromium segments? Did they see a recovery?
Good morning, Sonal. Thank you very much for having me. I can share with you what we are witnessing now is this better visibility over the last few quarters. What we have seen visibility when I'm talking about in terms of order book visibility, in terms of the raw material cost visibility, in terms of operating levels at the plant, and we are quite positive in this quarter as well as the quarters to come, because we are seeing a lot more visibility both in terms of domestic market as well as the export market, I would say.
But the freight rates had gone up quite a bit, I think 70% in Q2. Is it still, how much higher has it gone, say, in Q3 so far compared to Q2 and compared to a year ago? And is that pressuring your exports?
It did. Over the last 2 quarters, there has been impact on the sea freight. The freights towards the west have increased by 5-folds post Red Sea crisis. The good news is the freights have corrected quite a bit, not back to the Red Sea levels, but more at a workable levels where we are able to pass on those freight increases. And the kind of feedback what we got from the logistics team is we are not going to see any more freight increases. Rather, they would go down in the quarters to come.
Is that freight rates could go down in quarters to come. It would not be as bad as what we saw in Q2. So Siddhartha, if you can quantify what was the growth in the first half in both your exports and domestic business, and if you'll be able to improve onto that, because exports were under pressure, right, because of the geopolitical issues. Do you think second half growth will be much higher? If yes, by how much will you improve?
I would say that our domestic market has been relatively resilient. So with that being said, our volumes have not been impacted. That's already reflecting in the revenue growth over a year-on-year basis. There's a 12% growth in the revenue. The major impact has come because of the sea freight and substantial increase in the raw material cost. Coming back to your question about the volume growth in exports, with the support of the sea freights, adjustments, we definitely going to see a lot more customer wins, because we were the most impacted when it comes to the logistics cost versus our peers, which are in Turkey and US. They were not, or maybe marginally impacted because of that.
So what was the growth? I'm just asking both volume and pricing growth in the first half in both exports and domestic markets, or was it a degrowth? Will you be able to reverse it in second half? Is it a fair assumption?
To look at it, there's a significant volume growth in our barium business, and we are as we move towards the Q4, we are even more positive. Within this year, we're going to see almost 20-25% of volume growth in the barium business, and revenue growth over 50% over the last year. And this is going to continue in the years to come. In terms of our chrome business, we are expecting a volume growth of close to 8% and a value growth of close to 10% in the FY26.
Okay. You had made two acquisitions, one in the chrome space itself, the other one was in the pharmaceutical company. Tell us, by when will that get commercialized? When will it start contributing to your revenues? Did you have to take up some debt or fundraise for this?
So we have signed a definitive agreement to acquire a coal mine in South Africa. This decision, there's quite a bit of rationality behind it. This is something which was on the horizon for over 15 years now, and we are glad that finally it's happening. And we'll be on ground mining and operating the processing plant in the next 6 to 9 months from now. With this acquisition, we have the raw material covered for the next 30 years. And what's also going to support this is, when it comes to the processing of this mineral into the chemicals, is also going to improve our yields as well as productivity at the plant level. And with respect to Jainshri Pharma, again, I'd like to correct the nomenclature. The idea for us is to produce an import replacement product, which is strontium derivatives, which perfectly fits into our portfolio of inorganic chemistry. And this, we are expecting it to start operating by Q2 FY26.
Okay, Q2 FY26 is when you expect the pharma bit to start contributing as well. On the barium side as well, you have added P-based capacity. So what was the capacity utilization there, and how much did it aid to overall growth? What is the outlook on that one? Because that is something that the street wants some numbers on as well.
Indeed, it's quite exciting in general. Within 1 year of operations, we are operating currently at 70% levels, and we're expecting it to go up to 90% during FY26. There is a volume growth, and also there is a value growth. Given that it's a complete import replacement, and we have got approvals from all the major paint companies in India and outside India.
Okay, all right. Siddharth, thank you so much for joining in. A lot more questions, but we are out of time, so we'll take it up some other time. We'll speak to you after your Q3 results for more details on the outlook as well. With that, it's time for a break. When we come back, we'll get you more on the markets on the other side. Stay tuned for that.
जब लक्ष्मण मूर्छित हुए थे तो हनुमान जी उनके लिए संजीवनी बूटी लेके आए थे। तो आज दिल्ली के बुजुर्गों के लिए मैं संजीवनी योजना का ऐलान करने जा रहा हूं कि 60 साल से ऊपर के हमारे जितने बुजुर्ग हैं, उन बुजुर्गों का पूरा इलाज फ्री करवाया जाएगा। इसकी चुनाव के बाद हम योजना लेके आएंगे, योजना पारित करेंगे। वो चाहे सरकारी अस्पताल में इलाज कराना चाहें, चाहे प्राइवेट अस्पताल में इलाज कराना चाहें, उनका पूरा इलाज फ्री कराया जाएगा। इसमें कोई बीपीएल, एपीएल, टीपीएल, आरपीएल कोई लिमिट नहीं होगी। सबका इलाज, चाहे अमीर हो चाहे गरीब हो, सबका इलाज मुफ्त कराया जाएगा। और कोई अपर लिमिट नहीं होगी। आप जितना आपका बीमारी पे खर्चा आएगा, उसका सारा खर्चा दिल्ली सरकार वहन करेगी।
But the word reciprocal is important because if somebody charges us, India, we don't have to talk about own. If India charges us 100% and we charge them nothing for the same, they send in a bicycle and we send them a bicycle, they charge us 100 and 200. India charges a lot. Brazil charges a lot. If they want to charge us, that's fine, but we're going to charge them the same thing.
Welcome back. Still down nearly 1%. There's been no recovery in the last 1 hour. In fact, there was a little bit of a recovery that we had in the morning itself when the Nifty tried to get to 24,000. But we've not managed to build on that. We've been hovering between 23,900 to 24,000 since morning. Swiggy, though, is holding up smartly. JP Morgan has initiated coverage. Their target price is 730, and this is the highest target price so far on Swiggy, by the sell side community. This month itself, Swiggy has seen a rally of close to about 25%. Lupin's also been a big mover. It rallied yesterday and it's moved up a little bit more today. So that's a stock which deserves mention. Outside of that, on the way down, you've got cuts in Zaggle Prepaid as they look to raise some money. On DOMS, where Fila was going to do a block deal and sell about 4.5% stake, continues to remain under pressure. On Brainbees Solution, that's First Cry, there was an initiating coverage. There was a bullish note, but that's not done too much to help the stock. It's still down close to about 5%. Ipca Laboratories, MTAR Tech, Motilal Oswal has initiated coverage today, so that's pushed the stock higher. It's a wrap on trading hour from the entire team. Thank you for watching.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai.
Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports.
The Dow Jones slides over 1,100 points or of over 3.5% following hawkish indications from the US Fed. The Indian equities slip in sympathy but seem more resilient ahead of the FNO expiry later today. Metals, financials and realty are the big drags.
The rupee sinks to a historic low of 85 to a dollar after a sharp rally in the greenback overnight on expectations of fewer cuts in 2025. The rupee had breached the 84 mark just 2 months ago.
Gold and silver prices also see sharp drops overnight as the dollar surges. Base metals too take a knock, with copper falling to a 3-month low and aluminum and zinc hitting lows for the month. No positive cues from China too add to the gloom.
Asian Paints sees 2 sales and marketing executives depart at one go immediately after their resignations. In an unusual development, the company replaces the senior personnel with internal candidates.
And SEBI has tightened the criteria for SME IPOs to safeguard the interest of investors. It has also set new turf rules for merchant bankers and expands the span of unpublished price-sensitive information to curb insider trading.
Good afternoon. You're watching us here on Halftime Report. The market's down this morning, but not particularly out. From lows, we've seen a bit of a recovery and almost 100 points. But as you can see on the top of your screen, gloom coming in from Wall Street overnight has percolated down to our markets as well. The only solace is that we've recovered from the lows and the broader markets are falling relatively less than what we've seen in the other parts of the market overall. So let's see what the second half holds for you, largely because it's also the weekly options expiry. I'm Manglam Malu. With me as always, Hormaz Fatakia. Hormaz, what can one say? Down but not out would be meaning that, it's a big recovery that we've seen. We're down, but we haven't fallen much.
We haven't fallen much indeed, and that's the point, right? Because we have an all-important second half of the session coming in, and historical evidence is always proof that the second half has always been the more volatile one, especially when it comes to the weekly expiry or the day after the weekly expiry. So we'll see if there is any recovery that comes in from the lows during the second half of the trading session. But as Manglam highlighted, the broader markets are seeing a recovery that is a lot better than the benchmark indices. The mid-cap and the small-cap index now has around 65 stocks that are down in the red compared to at one point when there were almost 85 to 90 stocks that were trading with losses. Even the Nifty 500 index at one point had almost 420 stocks trading lower. They too are now down to around 350 stocks. So there is some recovery that is being seen in the broader markets, and it is also the rupee hitting a historic low today, but the IT stocks are not doing too well in today's session. The IT index continues to trade lower by 1.5%. But we are counting down to the end of the year. There is travel season, and of course, there is a lot of travel demand. So who better than a travel service provider to tell us more on that?
Take that point, and if you're traveling by train, then there may be some benefit coming for you as well. That's the focus of the conversation that we're going to have with La Travenews Tech, popularly known as ixigo. They've launched a travel guarantee feature for train travelers, a new feature that provides 3x refund if a waitlisted ticket fails to confirm. Remember, 1x of the fare will be credited to the original payment mode and 2x will be refunded as a travel guarantee coupon, for which you have to pay a nominal fee. Saurabh Devendra Singh, who's the group CFO of ixigo, joins us to discuss this development and more so the general travel trends itself. Saurabh, this travel guarantee scheme that you've brought about, if you could give us some more details. What are the charges from this scheme and how much do you expect to garner from it? Because there's as good as an insurance premium that one is paying for the waitlisted ticket. If that isn't confirmed, then you give back coupons, etc. Just trying to understand the financial implications of this.
So, one, good morning. Thanks for this and thanks for talking about this as a product. But remember, it's not, if you see the product, it's not about, let me talk about the ideological reason of why the product was introduced. We as a company believe that people would be traveling across different modes as we go about. And if you see, the reason why we are giving 3x is that suppose you're trying to get your tickets booked, you're not getting it booked. We want to give you an option of flying on a flight or a bus using this. So it kind of helps you get to where you want to be. Say you've planned a holiday, you're on a waiting list, we'll ensure that you get to your destination one way or the other. So don't, as in, and like what we think about all our products, the first part of the product is trying to solve a customer problem. And in this case, the customer problem was that your vacation, in case you don't get a ticket, your vacation is spoiled. And our idea was we'll try and ensure that it's not spoiled. Commercially, this ticket type or this product, again, remember it's something where we will be looking at the data, we'll be growing the product, but it's a forward-looking thing, so I won't be able to comment on how it affects me going on in the future. But largely, it's a convenience product, how we see it, and it's a product which is apt for this time when people have been. So take a case of Delhi Lucknow. You'll end up, you can reach Delhi Lucknow through all the three modes, and all the three modes are equally comparable and equally comfortable in traveling.
Saurabh, good afternoon. Thank you for joining in. Is there a financial implication of this? If you could elaborate more on that.
So there would be, it's a product, yeah, but guiding to the market on any kind of financial implication before I tell, as a public company, it would be, it won't be there. But look, what we always say is that for these ticket types, what we, and let me help you out with kind of looking at the financial implication without being on the wrong side of telling any forward-looking information. Think of it this way, right? We as a company believe that Indians have a value bias. You give them value, they'll be willing to pay for that value. We believe this is a product where there is a need statement, it's out there. And it's a value that...
right. No, we get that point. We understand that Indians are value biased. We understand the offering, so to say, and the fact that, you know, if the tickets are not confirmed, there is an option to go ahead and book a flight as well. But what I'm trying to understand is the business implication of the same for you. From a customer standpoint, what is this nominal charge that you are going to ask of them for a ticket of, say, 100 odd rupees? How much more does one have to pay? And what is the probability of that ticket getting confirmed, not getting confirmed? We're just trying to understand your working behind launching a product like this. And then if you're giving 2x the ticket price via coupons, that implies that you will be giving them discounts for whatever bookings that they're making on the flights as well. So all of that would cost you some sort of money, for which you will probably get a bit of a nominal charge. What we're trying to understand is how much do you, in your model, expected it to cost you?
So the first thing is, on any kind of pricing, remember all our pricing are done by our data models, which is personalized for customers, where we always reward loyalty and routes. And we have an idea of routes and what is the probability of the ticket getting confirmed for that particular route, which is there. So let's look at it mathematically. What are the different variables involved in any product like such? There is a element of attach rate. There is element of the cost, which is being charged. The cost is, so there'll be 5 people in a room. The cost will be different for 5 people in a room, depending on the model is pricing it, pricing that cost. And then there is a cost of the probability of things not actually confirming. And then there is what you're paying. So it's 4 variables which are there in this. There is 1 revenue variable and 3 variables which contribute to the cost. So net, it will be a formula-based output. What you have to realize is the pricing, because it's dynamic, because it's being done by our AI/data model, will be a dynamic for people, for routes, for the probabilities which we believe are there to confirm.
Saurabh, getting on to some numbers now, if you could fill us in with some details. How has the quarter been so far? We are coming to the end of the third quarter. We are starting off on the holiday season, midway through it. How has the quarter been? How have bookings turned out so far? What is your target for the end of the year, if you could share some of those details?
So again, forward-looking, I'll try and help you out with more qualitative ideas on this rather than going on numbers. So again, think of it this way. If you ask me, do we see what we talked about and what we have quite openly talked about as what we see as growth and where we see us growing, we see strong growth across all our verticals are growing well. And it fits in with what we see as a long-term plan of growth. Has anything been worth highlighting? I think what is being worth highlighting probably would be our international flight growth continues to grow very strongly. Domestic also does, but international for me is something that if you'd asked me about 3 years ago, whether we expected international to grow and evolve this way, it's done far better. So yes, we are we are happy with the quarter, if I would say that, and on the long run, it fits in with what we've been talking about over the next 2-3 years on how our growth should look.
All right, we take that point, but we'll leave you with the promise to join us after your third quarter numbers so that you can give us more details into how the quarter was, along with some sort of outlook into what the business is likely to do as well. In the middle of the quarter, I understand you are bound by not wanting to give any sort of forward-looking guidance, but I don't think that would put you in any sort of regulatory risk in any case. So, we're happy to hear your qualitative comments.
As a young company, yes. I'm probably erring on, as in I always have this phrase
on the side of caution. We understand that.
On the side of caution, or Jesus, or Caesar's wife has to be above suspicion. So if anything, I think as a public company, I'm Caesar's wife, so I have to be above suspicion on any case. So I'll err on the side of caution. Having said that, what I'm saying is, the great thing is, people in our world are wanting to travel. People are seeing travel as a great thing. And what I've been surprised by, people are doing a lot more spiritual travel. If I look at places like Varanasi and the growth in those areas, across modes that we are in, I'm seeing very, very heavy growth in spiritual travel.
We totally get that. And I mean, we don't need to look at people. We just need to, look at everyone around us itself for us to get that sense of anecdotal, jump in travel preferences. But we'll leave you on that note and speak to you after the third quarter numbers as well. Thanks a lot for joining in. With that, let's move on. Let's talk about the Growth Code, an initiative coming in with CNBC-TV18 and Grow, offers valuable insights and strategies to help you make well-informed investment decisions. This week, our colleague Nigel D'Souza sat down with Vishal Mehta, who's the CMT and founder Market Scanner, to understand why trading during low liquidity periods is risky. Let's listen in.
Why is trading, in a low liquidity market rather risky, especially in the F&O market?
Indian markets are the most liquid ones. Like Indian options market are considered to be the most traded contracts in the world. We have introduced next 45 stocks in the future segment. But liquidity is always when you are entering.
Yeah.
The problem is when you want to exit in a panic scenario, the liquidity dries up. So the more important part is you trade the liquid counters. And because I've seen in my personal experience, the stocks which were liquid, all of a sudden turn illiquid and you do not get proper exit. And in this scenario, the only thing that can save you in the derivatives market is a hedge position, because you know that this is the maximum loss that I'm going to incur.
We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. The Nifty looking to crawl back towards that mark of 24,000 while most of the stocks are still in the red. A stock that is bucking the trend though is Dr. Reddy's, and that is on the back of bullish commentary that is coming in from Nomura. Vinny is here to fill us in with the details. Vinny.
Yes, so we have Nomura has actually upgraded Dr. Reddy's to a buy and given a target price of 1,500 rupees per share. What is keeping them so positive on the stock is that one, there was an underperformance that came in from the stock in this year than we saw coming in. That was mainly because there was a high contribution of a generic Revlimid drug, which is for most other companies as well. Now, what they believe is that this concern is already priced into the stock fall that we've seen in the recent times. They believe going forward that how the company has been shaping up in the last few years as well. They've stepped up their investment, especially in the biosimilar front in FY25. Around 2,500 crores is the investment that they've made and will be looking to make by the end of this year. So that is an important one, and biosimilars is something that could be a growth strategy for the company. Plus the GLP-1 opportunity, that is a big one, and that is not yet factored in completely. So that is something that will lead to the growth, and maybe that is why they've upgraded the stock, expecting a bit of an up move on this front.
All right, we take that point, but the stock under pressure today is Asian Paints. It's uncharacteristic of senior executives for Asian Paints to leave, and that too citing personal reasons with immediate effect, and that at a time when there is a fair amount of competition in the space itself. So just keeping an eye out on Asian Paints largely because yesterday in the evening there were announcements to the stock exchange where Vishnu Goyal resigned as the AVP Retail Sales and Commercial, and also Shyam Swami resigned as the VP Home Improvement, Decor Services and Retail. Both of them citing personal reasons as cause for exit with immediate effect. Remember, very recently, last week itself, we had a commentary coming in from Birla Opus saying that, industry in the second quarter was impacted by consumer sentiment and competition from us itself. So at a time when things are heating up in the paint industry, senior leadership leaving from the incumbent or from the leader itself is something that the street is a little perturbed about, but nothing really to worry, largely because Asian Paints also immediately replaced these candidates with internal candidates. Ashish Ray, the current AVP Project Sales and AVP, has been replaced to be the AVP Retail Sales, Marketing and Commercial, and Mr. Gagandeep Singh Kalsi, who's the AVP Strategy Business Development, will also now handle Decor and Services. So those positions have been filled, but the reasons for their exit are still not known beyond the personal reasons without any without any notice period. So we'll keep an eye out on where these gentlemen do go ahead after Asian Paints as well. On that note, we'll take a short break, come back. Aditya Agarwal of Invest for Edu will join in with some trading strategies. Stay with us.
One. Hello, welcome to Young Turks Reloaded. I'm Shireen Bhan. Hi, thank you so much.
What have been the big insights that, or the course corrections, the mistakes that you made at Upgrad that you would like to undo, redo with this one?
I always felt that India talent, there's a very large talent pool available. And I think if we do not tap into this talent, whatever we call as demographic dividend will end up being demographic disaster.
Do you believe that entrepreneurship is inherently a lonely journey?
I mean, absolutely it is, Shireen. And it's fair because, you're sort of, in some sense, already living in the future.
It is a lonely journey. I mean, you have your spouse, you have your partner, you have your co-founders, but in many cases, you end up being very lonely. You don't want to be seen as very weak. I've had instances where you are sitting in the office and then you rush to the loo, you have to throw up and then come back and you feel relieved. 55 मिनट पर नीलकमल नाम की एक जो प्रवासी वेसल थी उसको नौदल की एक बोट टकराने से एक बहुत बड़ा अपघात हुआ है, एक्सीडेंट हुआ है। इन 13 लोगों में 10 सिविलियंस है और 3 नेवी के लोग हैं जिनकी मृत्यु हुई है। जिन लोगों की मृत्यु हुई है उनको सीएम रिलीफ फंड से 5 लाख रुपए दिए जाएंगे। और ये जो पूरी घटना है, इस घटना की तफ्तीश ये पुलिस भी करेगी और नेवी भी करेगी।
जब लक्ष्मण मूर्छित हुए थे तो हनुमान जी उनके लिए संजीवनी बूटी लेके आए थे। तो आज दिल्ली के बुजुर्गों के लिए मैं संजीवनी योजना का ऐलान करने जा रहा हूं कि 60 साल से ऊपर के हमारे जितने बुजुर्ग हैं उन बुजुर्गों का पूरा इलाज फ्री करवाया जाएगा। इसकी चुनाव के बाद हम योजना लेके आएंगे, योजना पारित करेंगे। वो चाहे सरकारी अस्पताल में इलाज कराना चाहें, चाहे प्राइवेट अस्पताल में इलाज कराना चाहें, उनका पूरा इलाज फ्री कराया जाएगा। इसमें कोई बीपीएल, एपीएल, टीपीएल, आरपीएल कोई लिमिट नहीं होगी। सबका इलाज, चाहे अमीर हो चाहे गरीब हो, सबका इलाज मुफ्त कराया जाएगा। और कोई अपर
You're watching us here on Halftime Report. Perfect time to get you the market update at midday itself. I'm just looking at a couple of things which tell you that maybe we're in for a bit of an up move as we move towards the end of trade. Why do I say that? Because the Nifty's off lows, almost about 100 odd points. The Nifty Bank is just down by about 500 points. The mid-cap index is doing a lot better. If you look at a couple of other internals as well, and they come up for you, the Nifty day's low today is 23,870. The 200-day moving average, 23,816. Remember, it was just last Friday where going into 50 points with the 200-day moving average, the Nifty saw a big move itself. The other couple of factors that we're looking at, the India VIX is coming down as well. The advanced decline, these lines are coming narrower with more stocks advancing and the number of stocks declining itself. The third part that we're looking at is the India VIX coming down. Remember, over the last couple of trading sessions, the India VIX moved to levels closer to that 15. And with the market seeing a recovery from the lows, the India VIX coming down is a positive. Why does that sound like a positive? Because one, we have seen put writing. So the put call ratio, which this morning was 0.54, has inched higher to 0.7, which implies that ahead of expiry, more puts are being written than calls, and that's exactly what is taking place as well. So the 24,000 call which expires today has a premium of 23. If the Nifty crosses that 24,000 mark and stays above that 24,023 mark, then all these call writers will have to run for covering their positions. Put writers have begun to unwind their positions already. Put buyers, they've made their money and they're out of the market here, 23,900. And we are seeing some action at the 23,950 put for a premium of 13 odd rupees, telling you that maybe 23,940 would be an important support to track. A bunch of stocks that I'm keeping an eye out on in today's trading session. A lot of long positions added on Dr. Reddy's, that Nomura upgrade has come by. A lot of short positions added in the IT space. One stock that stands out in particular is LTI Mindtree. And a couple of stocks which may exit F&O ban today. One of them is Nalco, the other one is Chambal Fertilizers. So keep an eye out on both of them. They may exit F&O ban today.
We'll definitely be hoping for some recovery, the bulls in the second half, and Mangalam has pointed to some data in that regard. Let's ask that to Aditya Agarwala of Investor Radio, who's joining in. Aditya, good afternoon. Thank you for joining in. Do you anticipate a recovery in the second half? It's a weekly expiry, known for extremes. Do you see another such sharp move on the upside in the second half? What's the data indicating for the index, and couple that up with your stock recommendations as well?
Hi, good afternoon, Mas. Good afternoon, Mangalam. Thanks for coming to the show. I do believe that, and Mangalam has put all the points on the table, which points towards a short covering rally. I was closely monitoring the VIX, the India VIX, which actually hasn't moved up significantly despite the fact that the market has corrected. So that tells that there could be a short covering rally in the offering. Plus, if I flip the charts into a shorter term time frame, like an hourly or a 2-hourly time frame chart, it clearly shows a positive divergence building up on the hourly and 2-hourly time frame charts with respect to RSI. So that tells me that there is a bit of a short covering rally for sure. The first instance of a test of 200 DMA will held and is held, and then markets can see a recovery from here on. The question is till what levels the markets will recover. That is the biggest question. So I think 24,300 to 24,400 is the first resistance zone for the Nifty if we do see a good short covering rally in the market going ahead. And as far as Bank Nifty is concerned, I think 52,500 will be a major hurdle for the Bank Nifty to cross from here on. But yes, for the day, I think we could be in for a short covering rally. Not only today, Thomas, I think today and tomorrow could be a couple of trading sessions where we could see a short covering rally. But I'm not too sure till what level this short covering rally will hold. Anyways, as we approach near to year end, volumes do decline and markets see very choppy and narrow band movement. So that is something that has to be monitored.
Totally take that point
talking
on
of
the
stock specific. Yeah.
Right, no,
Yeah,
you were taking that point on, the markets being choppy and moving in a narrow band. But at the same time, because of low liquidity, the impact cost also moves higher. So a little bit of short covering moves into a big up move, or a little bit of downtick moves into a big down move as well. As we were speaking, the stocks which were not doing very well this morning, we had the IT pack. And now we are seeing signs of recovery in the mid-cap end of things. So if you pull up something like a Coforge, that has seen a recovery of 5% from the lows, currently at the high point of trade. If you pull up something like Oracle as well, that too from the lows has seen a bit of a recovery. So the IT index by itself has seen a recovery in today's trading session and led by mid-cap IT, Oracle and Coforge. You were talking about stocks. Aditya, go ahead.
Yes, I've got a couple of buy recommendations because I do feel that there could be a short covering rally. So I've picked up Pharma stock within that short covering rally bucket list. Lupin is looking interesting to me. Mangalam has held its ground, a strong looking chart setup. At current levels, I'll be a buyer in the stock for a target of 2,300 with a stop loss at 2,070 on the downside. The second stock is Tata Consumer. I think this is also one stock which has seen a lot of correction. And in the recent 2 or 3 days of correction, stock has actually not seen a lot of a correction. In fact, it's held its ground and seeing a lot of consolidation. So I see a good short covering rally coming into Tata Consumer from current levels. So for a target of 965, I'll be a buy here with a stop loss around 900 on the downside. Offers an excellent risk to reward as well, given it is entered into a consolidation phase. And yes, rightly pointed out by you, a lot of mid-cap IT stocks are seeing first signs of short covering rally. I think you can add one more name to it, Persistent Systems, Coforge, both and OFSS. All three stocks do look like there could be in for a short covering rally from here on.
All right, Aditya, thank you so much for joining in and sharing with us your views on the index and on specific stocks as well. As we slip into a short break, here's some good news for your viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. And get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store.
आप जितना आपका बीमारी पे खर्चा आएगा उसका सारा खर्चा दिल्ली सरकार वहन करेगी।
But the word reciprocal is important because if somebody charges us, India, we don't have to talk about own. If India charges us 100% and we charge them nothing for the same, they send in a bicycle and we send them a bicycle, they charge us 100 and 200. India charges a lot. Brazil charges a lot. If they want to charge us, that's fine, but we're going to charge them the same thing.
Welcome back. Shifting focus now to the mutual fund space. Now, the funds raised via new fund offers or NFOs in 2024 till November stood at over 1 lakh crore rupees, which is 63% higher than 2023. Sonal Bhutra gives us a lowdown on the big NFO rush in 2024 and the categories which have been in focus.
2024 saw a lot of action in the mutual fund space, and funds raised via NFOs has definitely been one of them. Let's look at the numbers. Funds raised by NFOs or new fund offers stood at 1.04 lakh crores in 2024. This is still the month of November. And we have more NFOs in the month of December that has not been accounted for here. That is an uptick of 63% versus funds raised in 2023 at around 63,800 crore rupees. Now, this was slightly lower than 2022. That time, the number was 67,336 crore rupees. But 2021 also saw massive inflows. This was double the amount versus 2020, when the amount raised was around 53,700 crore rupees. Now, if we talk about the number of NFOs, 2022 still tops the list. So far in 2024, we've seen 205 NFOs which have been issued till November. This compares with 212 in 2023, 246 in 2022, 140 in 21, and around 81 in 2020. Some of the categories that saw high flows: multi-cap funds getting in 6,300 crore rupees of money, and other ETFs at around 1,400 crore rupees. But the real star of this year had to be sectoral funds. 40 sectoral or thematic funds have seen the highest flows that we've seen in the last 5 years. Sectoral funds garnered around 67,772 crore rupees in 2024 so far, which is more than the flows in this space from 2020 to 2023. In this period, sectoral funds garnered around 52,165 crore rupees. This is via 59 NFOs. Even index funds actually saw a lot of interest. 76 NFOs in the index fund space, raising 12,147 crore rupees, which is the highest that we've seen in at least 5 years. Index funds have always seen a lot of interest, and more so in the last 3 years, with more focus on passive investing. In 2023, 53 index funds were launched, garnering around 2,700 crore rupees. This compares with 85 in 2022, and these numbers were very low in 2021 and 2020, as you can see on your screen. Interestingly, no mid-cap funds were launched in 2023 and 2024. This space did see a big rally, but did not see a new product here, but saw massive flows in the existing names. Also, only one small cap fund was launched in 2024. And now we are towards the end of 2024, and December also has seen a lot of action in the NFO space. But will this continue in 2025? Will there be new products by mutual funds houses to diversify their portfolio? Well, time will tell.
All right, interesting one. Sonal, thanks a lot for that. You can catch the detailed discussion on the big NFO rush today at Mutual Fund Corner at 2 p.m. only on CNBC-TV18. With that, we take a short break, come back. On the other side, we get you markets and a lot of stock-specific action.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports.
We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Welcome back. The broader markets, we're seeing some, up move. Alembic Pharma, it's actually like a big up move that we're seeing in the entire pharma space. So if you pull up the pharmaceutical index, you would see there is a big recovery, and it's led by a bunch of names. During going into the break, we were just looking at Lupin, Hormaz was pointing that up. That stock has seen a big up move. Pharmaceutical index is at the high point of trade. Typically IT and pharma benefit from the weakness in the rupee. In the IT stocks, we didn't see that until now because that also is impacted by the weakness in the US macros. But pharma, no such problems. We are seeing a recovery out there. Along with, an up move on Lupin, we're seeing that on Ipca Labs, Biocon, and the others as well. And Dr. Reddy's, of course, has been among the top gainers in the pharmaceutical index since morning. What we'll do is take a short break, come back on the other side. We speak about a bunch of commodities which are under pressure because of the strength in the US dollar overnight. Prabir Chatterjee, the Secretary General of Tea Association of India, joins in with Manisha Gupta.
With comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. Joining us now on the show is Prabir Bhattacharjee. He's Secretary General at Tea Association of India. Mr. Bhattacharjee, hi, thank you so much for joining us. And this has been one of those years where we have seen the tea prices also gain up in double digit. Also, when we look at the numbers until the month of September, the output clearly has been much lower. There's a lot of crop damage that has been reported. What has been your sense when you look at the overall crop situation for this year, the output that is?
Right. Thank you, Manisha, and good afternoon to you. It's always a pleasure to be with you. Actually, going straight to the production side, this year, we are having a production loss of around about 60 million kg as of now. Now, I must mention one particular fact over here. There has been a decision taken by the tea board and the Ministry of Commerce that there will be no plucking, beyond 30th of November. Now, when you take that into account, what actually we're seeing or visualizing is that there will be a crop loss of around 120 million kgs. Now, that's quite a huge, the downfall of the crop that is going to take place. Now, you will also appreciate that in the month of November, although it's a late season, what generally happens is that in the month of December, that is after 30th of November, if there is a closure, there is a loss of around about 7% of the crop, of the North India. So therefore, that tantamount to around 60 million kgs. So you have in the pipeline 60 million kgs drop lost in the production till October 2024. Add another 60 million kgs that's going to take place beyond, because of the closure beyond 30th November. So add it up, it's going to become 120 million kgs downfall in the crop position this year.
Oh, wow, that's a big number, isn't it, Mr. Bhattacharjee? So what has it done to prices then? And we've already seen a huge run-up in this year. Are you looking at further gains? And I want to get your sense as well. How much of price rise have we seen in tea in this calendar year until now? What is your sense? And in the next 3 or 6 months, what is the kind of price rise we might anticipate?
Yes, Manisha, actually, to be very frank, there has been a price rise. Not that there has not been a price rise over there. But if you analyze it a little bit, closely, what you're going to find is this, that, if there are 50 sales that has taken place up till now, there was a price rise from sale number, 15 to 45. And beyond 45 to 50, the sale is another, picture emerges out of it. So from sale number 15 to 45, there has been increase of the price around about 50, 55 rupees odd, But from sale number 45 to 50, there has been a drop in the prices, Now, this is inexplicable. This is something which we cannot visualize. We cannot even predict how it has happened over there. Because there is a loss in the crop over there. The availability of tea in the market is lost over there. But why there has been a drop, from sale number 45 to 50 is something which goes beyond us, And it is quite an appreciable drop that has taken place. So if there was a rise of, say, 250 rupees was the average price, it has now slipped down to 217 rupees. A loss of 33 rupees in the last 5 sales.
All right. Mr. Bhattacharjee, also, what is kind of... Yeah.
Yeah, and if this trend continues, of course, the euphoria that was there, that will be rise in the prices, that get diminished a little bit.
And that really brings me to the question on how the tea industry really is dealing with all of this. Because as you said, one, we've seen a crop damage. Second, we haven't seen such a huge price rise as well that you would anticipate. So how's the industry dealing with it?
See, actually, the industry is a little bit, in a little bit of a soup, in the sense that how do you manage, with a crop loss of 120 million kgs? See, there has been a price rise. There is no denying the fact. Of course, it has slid down in the later stages. But what is most important is this: the volumes also give you revenue. If the volumes are not there, this cannot be compensated by whatever the increase in the price is there. This is a grim picture. Unfortunately, this is the scenario.
What is generally that we see in sense of consumption growth when it comes to India?
Manisha, we have discussed in the past also. You see, the consumption growth in this country has not been very promising. You see, if the consumption had been there, then the market would have been on fire by this time. You remember what happened in the year 2020? There was a COVID over there, the prices had gone up, But over here, we are going through a situation where there is a loss of crop, The market had risen. Don't deny the fact that the market has risen. But then there is a slippage also in the price point. So this is something which is inexplicable. This is something which is very difficult to analyze or predict.
Since you are with us, Mr. Bhattacharjee, so with the way the industry is going right now, as you said, there's a production loss, the prices haven't gone much higher, consumption growth is not happening. So if there was one thing that the finance minister would give to you during the budget, what would you want?
See, from the finance commerce minister, I must mention over there, we had a very fruitful discussion with the Honorable Commerce Minister on 30th of November. in which his priorities from the commerce minister so where the tea industry is concerned is very clear. He says, I want a safe cup of tea. So obviously the ministry is giving more of stress on production of quality tea, and there has been in the market 60 to 70% of compliant tea that has come to the market. Now that's a huge spin-off. This gives so much of assurance to the consumers concerned. So that is one of the main objectives of the Commerce Ministry concerned. Of course, what we Tea Board and the Ministry of Commerce is this, the subsidy part that was there, which has been many of the funds of the subsidy to the tea industry has been taken off from the organized sector. We can always look forward, or we can appeal to the Commerce Ministry whether the subsidy could be restored, so that in this period of of production loss, we can look to a little bit of a favorable market.
All right, Mr. Bhattacharjee, thank you so much for sparing time and joining us today on the show. Manisha, thank you for joining in as well. With that, it's a wrap on this edition of Halftime Report from Mangalam, me and the team that put this show together. Thank you so much for watching. We leave you with the Nifty at 24,950, 250 points down, the Sensex down 900 points. Business Lunch takes the action forward.
बजकर 55 मिनट पर नीलकमल नाम की एक जो प्रवासी वेसल थी उसको नौदल की एक बोट टकराने से एक बहुत बड़ा अपघात हुआ है, एक्सीडेंट हुआ है। इन 13 लोगों में 10 सिविलियंस है और 3 नेवी के लोग हैं जिनकी मृत्यु हुई है। जिन लोगों की मृत्यु हुई है उनको सीएम रिलीफ फंड से 5 लाख रुपए दिए जाएंगे। और ये जो पूरी घटना है, इस घटना की तफ्तीश ये पुलिस भी करेगी और नेवी भी करेगी। जब लक्ष्मण मूर्छित हुए थे तो हनुमान जी उनके लिए संजीवनी बूटी लेके आए थे। तो आज दिल्ली के बुजुर्गों के लिए मैं संजीवनी योजना का ऐलान करने जा रहा हूं कि 60 साल से ऊपर के हमारे जितने बुजुर्ग हैं उन बुजुर्गों का पूरा इलाज फ्री करवाया जाएगा। इसकी चुनाव के बाद हम योजना लेके आएंगे, योजना पारित करेंगे। वो चाहे सरकारी अस्पताल में इलाज कराना चाहें, चाहे प्राइवेट अस्पताल में इलाज कराना चाहें, उनका पूरा इलाज फ्री कराया जाएगा। इसमें कोई बीपीएल, एपीएल, टीपीएल, आरपीएल कोई लिमिट नहीं होगी। सबका इलाज, चाहे अमीर हो चाहे गरीब हो, सबका इलाज मुफ्त कराया जाएगा। और कोई अपर लिमिट नहीं होगी। आप जितना आपका बीमारी पे खर्चा आएगा उसका सारा खर्चा दिल्ली सरकार वहन करेगी।
But the word reciprocal is important because if somebody charges us, India, we don't have to talk about own. If India charges us 100%, and we charge them nothing for the same, they send in a bicycle and we send them a bicycle, they charge us 100 and 200. India charges a lot. Brazil charges a lot. If they want to charge us, that's fine, but we're going to charge them the same thing.
The Dow slides over 1,100 points or over 3.5% following hawkish indications from the US Fed. Indian equities slip in sympathy but seem more resilient ahead of the F&O expiry today. Metals, financials and realty are the big drags. The rupee sinks to a historic low of 85 to $1 after a sharp rally in the greenback overnight on expectation of fewer rate cuts in 2025. The rupee had breached 84 just 2 months ago. Gold and silver see sharp drops overnight as dollar surges. Base metals too take a knock with copper at a 3-month low and aluminium and zinc hitting lows for the month. No positive cues from China ahead of the gloom. Asian Paint sees 2 sales and marketing executives depart at one go immediately after their resignations in an unusual development. The company replaces the 2 senior personnel with internal candidates. SEBI tightens criteria for SME IPO to safeguard the interest of investors. It also sets new turf rules for merchant bankers and expands the span of unpublished price-sensitive information to curb insider trading. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. A dull day coming in for the markets. Nifty, not any sort of a recovery that we're seeing, just slight, but from the day's lowest point, 23,895 around that level was the low. So we have recovered from that low, but yes, 23,895 to 23,969. So some bit of a recovery over there. But since then, we were just managing to hold on to those levels, not managing to come past and hold past the 24,000 mark for the Nifty. Nifty Bank 2 is as of now down almost 500 points in trade, down almost 1% is what we are watching out for. Mid and small cap today, that's also fallen in trade, but not as much as the benchmark indices. It's down only 0.5% in trade, the Nifty mid cap as well as the small cap. Let's look at some of the green that we're seeing coming on the screen is only from the pharma side. Nifty Pharma is the only sector that is managing to hold on to the green. While on the flip side, what we have is drags coming in from Nifty Metal, IT, clearly the top sectoral losers that we're seeing coming in today's trading session. We had a listing also today, IKS Health, that's seen a bumper listing coming in today. 43% premium is what it's listed at, holding around those levels over there. So yes, interesting day coming in for the markets. We have something like a Keynes Technology that's also managing to hold on to gains in this week market in the broader market fund. So let's watch out for that. But moving on and starting the show and focusing on the top news story of the day. Now, the Federal Reserve cuts interest rate by 25 basis points last night. Now, this move was something that was widely expected by the market. However, the chairman, Jerome Powell, indicated that there would be fewer cuts in 2025. The news of only 2 rate cuts in 2025 versus a consensus expectation of 3 rate cuts is something that weighed on the market worldwide. Let's in fact listen in to what Jerome Powell, the Fed chair, had to say on the policy restrictiveness and the central bank's rate cuts outlook for the next year.
We are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. Today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals, maximum employment and price stability. We see the risks as two-sided, moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation, and that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
Okay, let's also listen into how market experts and economists reacted to the Federal Reserve's decision. Here's a bite.
Coming into this, it was clear that the Fed should be thinking about pausing, and I think he made it clear that that's what's on their mind. The dot plot showed half as much reductions next year as the former dot plot did, which is exactly right. I thought something significant he said was that they have reduced the degree of restrictiveness quite a bit. And I think that's important because I think that's kind of where their mindset is. So I think they're still in a good position here. I think the markets are reacting in a way that's kind of interesting because this was, I think, pretty well expected. But maybe it emphasizes that there is still a lot of uncertainty out there about the economy for next year, including what fiscal policy actions we're going to see.
Yeah, I think they did the right thing. I actually also thought that there was only going to be 2 cuts. I thought the market was overly optimistic about holding to 3. So I'm not surprised at the sell-off. And actually, I think it's healthy because I think this market was sort of in almost a runaway situation, and particularly with the Mag 7 stocks. And I think this brought them to reality that we are just not going to get as low interest rates as we thought we were going to get last summer and fall when the Fed began its cycle of lowering rates.
What we saw from Chair Powell today is a bit more cautiousness on the outlook related to inflation. Some of that is due to stronger inflation that we've seen in some recent prints, but probably more broadly underneath the surface, it's more some anticipation of some potential upside inflation risk that may come from the second Trump administration. So if inflation continues to move down towards target, and if some of Trump's more inflationary policies are not necessarily put into play, I think you could potentially see even more cuts from the Fed next year. If the Fed stays higher for longer, that's going to create challenges for all of these other central banks to ease policy as much as we expect in our base case.
Okay, on that note, let's just slip into a very short break. But after the break, we'll return and we'll tell you how the rate cut outlook taken by the Federal Reserve has impacted Indian rupee as the currency touches fresh lows today. Stay tuned in.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai.
Hello, I'm Surabhi Upadhyay.
Thanks for staying tuned into Business Lunch on CNBC TV18. And now let's move on and talk about rupee, because that's crossed 85 mark to the dollar. And even as all currencies fall in the face of a sharp rise in dollar following the hawkish talk by the Federal Reserve, Lata is joining in with us to tell us what's happening in the currency market. Good afternoon, Lata. 85 is the rupee is what we're watching out for versus dollar.
We've long been waiting for that 85 mark to be crossed, and it looked like only the Reserve Bank was standing in the way. Finally, with the entire globe almost now depreciating before the dollar, the rupee was allowed to depreciate by the RBI as well. The depreciation across the board in Asia has been between 15 and 75 bips, percentage points, as it were, with Chinese yuan almost touching 7.3, and usually India goes in step because you don't want a Chinese influx of goods into your country. The reason is, of course, that the dollar is strong. Dollar index has crossed 108, 108.1 was what it touched, and everyone was saying even at 107 that it was too high. So this was unexpected. Basically, the market was priced for the Fed reducing the number of cuts from 4 forecast for 2025 to 2. But they somehow expected that the Fed won't be in step with the market, and the Fed will actually announce 3, cutting from 4 to 3. So the fact that the Fed just fell in step with the market and reduced it to 2 is something that the market has been surprised by, and that perhaps explains the higher than expected rise in the dollar and fall in other currencies. Now, the long dollar positions in the market in India seems to have gotten settled in morning trade, and the Reserve Bank didn't have to do much heavy lifting, is what dealers tell us. They perhaps were there in the market but did not supply too much, didn't try to stop the depreciation. But now there isn't so much of dollar flows or a demand for dollars anymore. So that 85.07 seems to have been quite a stable point for a better part of the morning trade at least. One must remember that there is a bit of a doubt now over whether the Indian current account trade deficit for November was really as high, because there is a talk that gold may have been overcounted and the import was not $15 billion. That is also adding in favor of the rupee, and the depreciation has not been very sharp in the market. But that is only for the moment. The expectation is that over the quarter, the rupee will gently depreciate towards that 85.50 mark. And for the end of the year, a bunch of brokerages are calling for 87 rupees to the dollar. All that thanks to, of course, expected tariffs and trade disagreements between countries after Jan 20th, when President Trump takes over. I just want to add a word on what's happening in the yield market as well. We've seen the Indian yields, 10-year yield, also rising to about 6.78. Remember, that is a full 10 basis points higher than what the yield was earlier in December. It was 6.67 and now 6.78. That also is because the US yields have gone to 4.5%, something that was not expected. And that again is because the Fed was expected to cut down the number of rate cuts for 2025, but not by so much.
Okay, Lata, thank you so much for that in detailed explanation on rupee, as well as in terms of watching out for yields as well. But let's move on and talk about the Indian story. We have SpiceJet in the aviation space that's in focus today. We've seen it run up in trade. Why? They've settled a dispute with Genesis. Now, this was a dispute they've resolved is around $16 million. What is going to be the settlement here? SpiceJet will be paying Genesis around $6 million in cash, and Genesis will acquire $4 million worth of equity share in SpiceJet at a price of 100 rupees per share. Overall, in the last few months also, we have seen that, SpiceJet has made a lot of effort in terms of clearing a lot of liabilities or settling a lot of cases. Fleet expansion plans is what they've announced as well. What does this mean for the company? This will reduce its financial liabilities, especially this case also. Now, the withdrawal of all ongoing litigations and dispute related to the Genesis matter will be off, so there's nothing on that front, and Genesis will become a stakeholder for the company in and obviously will own some stake in SpiceJet, and that will lead to some growth is what everyone is watching out for in terms of highlights, emphasis on more planes, reinforcing confidence among stakeholders regarding a recovery and a strategy that they have in plan. So a lot of news flows and a lot of positive announcements that we've seen coming in for the company since September, and that is what we're keeping an eye out on, that where this will go going forward in terms of liabilities. Maybe listen in from the management at some point of time and get in their comments on this front. But let's move on and moving on to SEBI. Now, in a latest board meeting, the market regulator has approved a series of key measures aimed at protecting investor interest and improving various aspects of market regulations. Yash is joining in with us with the key highlight from this board meeting. Yash.
Well, Vinny, a total of 19 items have received market regulator SEBI's approval in yesterday's board meeting. Three most important, one of them, and the most important out of those three would be the regulations and rather restrictions around how SME IPO market is expected to function. Who can essentially bring out an SME IPO? Any company which has an operating profit of 1 crore or more in the last 2 of the 3 financial years. SEBI has also said that OFS portion in an SME IPO cannot exceed 20% of the issue size. Also, where promoters are wanting to raise money and pay off debt, those kind of things and those kind of issues won't get SEBI's approval. Apart from that, SEBI said that funds from general corporate purposes would be capped at 15% of the offer size or 10 crore rupees, whichever is lower. Also, selling shareholders can't sell more than 50% of their holding through the OFS part. Promoter lock-in in excess of the minimum promoter contribution will be released after 1 year, and the balance 50% after 2 years. Allocation under the NII or HNI category will be through draw of lot method, and also related party transaction norms will be applicable on SMEs as well. There have been certain restrictions which have come on merchant banking activities as well, essentially tightening the regulations with respect to what are the permitted businesses which they can do and what are the businesses out of the permissible limit, which they will have to make a separate brand, separate company, get the respective regulators' approval to sort of do those businesses. Apart from that, market regulator SEBI has also announced certain changes with respect to insider trading regulations, essentially widening the definition of unpublished price sensitive information. A total of 17 items, new items getting added to that definition of unpublished price sensitive information, and now disclosures would be required from the management on all those 17 items as well. Apart from that, any new activity happening out of the company, the management of the company will be able to sort of defer the disclosure on that by about 48 hours.
Okay, Yash, thank you so much for the latest update coming in on that front and the key highlights from the board meeting of SEBI. But on that note, we're going to slip into a very short break, and after the break, we'll return and we'll get you the latest updates from the ferry accident in Mumbai that killed 13 people. Stay tuned in.
Going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live.
Thanks for staying tuned into Business Lunch on CNBC TV18. Let's move on and get you some national updates. Now, 13 people lost their lives in Mumbai yesterday when a passenger ferry collided with an Indian Navy craft undergoing engine trials and capsized en route to Elephant Islands from Gateway of India. Prime Minister Narendra Modi condoled the death and announced an ex gratia payment of around 2 lakh rupees for the next to the kin of the deceased. Moving on, the 2-day Bihar Business Connect began in Patna today. The event aims to pitch Bihar as the emerging investment destination in India. Through sessions and site visits, investors can explore opportunities, network with industry leaders, and provide feedback to enhance the state's business environment. The businesses met in a particular will focus on textile, leather, food processing, IT, and general manufacturing sectors. And as we wrap up on this edition of Business Lunch on CNBC TV18, we leave you with some visuals of ace of spinner R. Ashwin returning to Chennai, his residency, after retiring from international cricket.
YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
मिनट पर नीलकमल नाम की एक जो प्रवासी वेसल थी उसको नौदल की एक बोट टकराने से एक बहुत बड़ा अपघात हुआ है, एक्सीडेंट हुआ है। इन 13 लोगों में 10 सिविलियंस है और 3 नेवी के लोग हैं जिनकी मृत्यु हुई है। जिन लोगों की मृत्यु हुई है उनको सीएम रिलीफ फंड से 5 लाख रुपए दिए जाएंगे। और ये जो पूरी घटना है, इस घटना की तफ्तीश ये पुलिस भी करेगी और नेवी भी करेगी।
जब लक्ष्मण मूर्छित हुए थे तो हनुमान जी उनके लिए संजीवनी बूटी लेके आए थे।
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me as always is Vivek Iyer. Well, it continues to be a down day. It's a 250-point cut on the Nifty. The midcaps are slightly outperforming. It's a market like this where we are calling a 0.5% a relative outperformance. But other than that, Bank Nifty continues to put pressure on the Nifty, and a lot can be attributed to what we've been seeing in the global markets as well.
Right, absolutely right. Like we mentioned yesterday, 9 days. Yesterday was the 10th straight session where you actually saw the Dow fall significantly, and on the back of that, we are taking those weak cues and also going ahead and seeing quite a bit of a sell-off. The Bank Nifty, like you mentioned, the top laggard. But we have quite a lot lined up in this specific show. Let's start off with the top headlines. The Dow slides over 1,100 points, or over 3.5%, following hawkish indications from the US Fed. Indian equities slip in sympathy but seem more resilient ahead of F&O expiry today. Metals, financials and IT are the big drags. Pharma surges, mid-caps relatively outperform.
DOM slips over 5% after 4.6% equity worth 808 crore rupees change hands at 2899 rupees a piece. Sources say Fila is the likely seller.
Yatharth Hospital surges as sources suggest that the company could raise up to 700 crore rupees via the QIP route. Proceeds to be used for debt repayment and funding part acquisition costs of 2 hospitals in Delhi and Haryana.
CNBC-TV18 Newsbreak is confirmed as Zaggle launches a QIP with an issue size of up to 750 crore rupees. Sources say the indicative price is set at 523.2 rupees a share. Stock is down over 3.5%.
AU Small Finance Bank under pressure post a note from Citi. Brokerage firm issues a neutral call with a target of 684 rupees a share. Says continued muted economic activities pose downside risk to asset quality.
Okay, all right. That's the market headline that we are tracking today. A lot of specific stocks which are on our radar. For now, the Nifty is down 1%. There's not been any recovery so far. We've been consolidating below the 24,000 mark, and that's been the trend since the morning as well. It's the Pharma index which is bucking the trend today. That is the sole gainer as we speak. The PSU banking index did see some recovery, but then again, largely financials are the reason why there's a lot of pressure that we are seeing. It turned into the green, but then again, there was a fall on the PSU banking index. The financials continue to be under pressure. A lot of stocks at a 52-week low level today, some major ones as well. So we'll track all of that. Of course, Hormaz will be joining us in just a bit. But there's no sign of recovery as such. You know, people thought December could see some cheer, but that hasn't come so far.
No Santa rally ahead here. We are clutching at straws here, talking about the fact that there'll be an intraday recovery. But the fact is that, you know, all of the benchmark indices and the headline indices continue to see significant cuts. Like you mentioned, it's the Pharma pack that's doing quite well. Dr. Reddy's on the back of the upgrade of Nomura. You know, it's the one that's the best performing as far as the pharma pack is concerned, and other pharma stocks too doing quite well. But this is a special segment, mid-cap movers. Hormaz is standing by the wall to take us to the mid-caps that are moving around in the session.
Well, nothing can summarize what you just mentioned, that a 0.5% fall is considered outperformance. It shows you the kind of market that we are in right now. But the broader markets has a lot of losers today. DOMS is one of them after the block deal. The lock-in period also ending. At one point was down 7%, so there's a slight recovery from the lows. Craftsman Automation was up 14% yesterday. A sudden spike that was seeing some bit of profit booking right now. Triveni Turbine and Jubilant Ingravia too feature among those losers that are seeing losses between 3 to 5%. As you mentioned, Pharma is the only sectoral index that is holding out, be it large cap pharma, mid cap pharma, all of them doing well. Ipca Laboratories now at the highest point of the day. Promoters selling shares. The stock is up 5.5%. The Torrent Pharma, Abbott and JB Chemicals too seeing healthy gains in today's trading session. Some of the other stocks that are in focus in today's trading session, and Sonata Software, mid-cap IT is slightly mixed. Most of the IT stocks are still lower, but the recovery that we've seen after the gap down in Persistent Systems and Coforge needs a bit of a highlight, and 2% up now are both of these names, and the best performers on the IT index too, mind you. Some of the stocks that are doing well on the back of volumes, and KFin Technologies was moving higher after a brokerage report yesterday. Chennai Petro, Keynes Tech as well at the highest point of the day, 7.5% higher on very strong volumes. And lastly, some stocks that are bucking the trend in today's trading session. Some of the others, of course, apart from these ones, Sirma SGS up at the highest point, as is IFCI, Anantraj and MGL, gains of anywhere between 2 to 6%.
Oh yes, the oil and gas space seems to be coming back, making a comeback, be it OMCs, be it the city gas distribution companies. Thank you so much, Hormuz, for joining us as always and telling us some of these stocks which are on our radar. Moving on now, Parley Products in Britannia has announced price increase across the board. Shilpa is here with more details. So biscuits going to be costlier now, Shilpa?
Well, you know, it's not just biscuits, it's biscuits, rusks, snacking products, cakes, everything that these companies sell. So I'll start off with Parley, which is the latest information that we've gathered, is that, you know, Parley Products is set to roll out price hikes, which will be 5% and above. And these price hikes will be across the board, across its product portfolio, which will be across bread, biscuits, rusk, its cake items, its snacking items. And these will be rolled out in January. And the price hikes, like I said, will be a minimum of 5% and upwards. There also is going to be a grammage cut where the entry and the low unit level price packs, you know, like your Parle G 5 rupee, Parle G 10 rupee and other smaller biscuit, Monaco, Crackjack, all these entry-level packs will also see a grammage cut of anywhere between 5 to 10% depending on the pack size. Now, like we know, this is on the back of rising raw material prices. We've seen prices of wheat flour, of sugar, of cocoa rise, and, you know, more importantly, the import duty on palm oil prices also pushed up inflation for palm oil. Those prices are up nearly 45% is what is the commentary that we've been hearing from companies. And this comes close on the heel of Britannia also saying in the last quarter that they have hiked prices across several product portfolios, and in the next 2 quarters also they are likely to hike their prices by 4 to 5% in the next 2 quarters, and this will be in certain SKUs that they already did not hike prices on. This is to reduce sort of, you know, the inflationary pressure that could come on consumers because of rising prices. But yes, it's not going to be just these. We are going to see price hikes actually across the FMCG portfolio going forward on the back of rising raw material prices. Back to you.
Thank you so much for that, Shilpa. Very important development over there that you've highlighted for us. So to protect the margins, a lot of FMCG companies have resorted to price hikes in order to go ahead and protect the kind of raw material inflationary pressures that they're facing. But moving on, let's now slip into a short break. HS Raghavendra Rao from DCX Systems joins us next to discuss their latest order wins from leading US defense player Lockheed Martin and more. Stay tuned.
आज दिल्ली के बुजुर्गों के लिए मैं संजीवनी योजना का ऐलान करने जा रहा हूं कि 60 साल से ऊपर के हमारे जितने बुजुर्ग हैं उन बुजुर्गों का पूरा इलाज फ्री करवाया जाएगा। इसकी चुनाव के बाद हम योजना लेके आएंगे, योजना पारित करेंगे। वो चाहे सरकारी अस्पताल में इलाज कराना चाहें, चाहे प्राइवेट अस्पताल में इलाज कराना चाहें, उनका पूरा इलाज फ्री कराया जाएगा। इसमें कोई बीपीएल, एपीएल, टीपीएल, आरपीएल कोई लिमिट नहीं होगी। सबका इलाज, चाहे अमीर हो चाहे गरीब हो, सबका इलाज मुफ्त कराया जाएगा। और कोई अपर लिमिट नहीं होगी। आप जितना आपका बीमारी पे खर्चा आएगा उसका सारा खर्चा दिल्ली सरकार वहन करेगी।
But the word reciprocal is important, because if somebody charges us, India, we don't have to talk about own, if India charges us 100% and we charge them nothing for the same, they send in a bicycle and we send them a bicycle, they charge us 100 and 200. India charges a lot. Brazil charges a lot. If they want to charge us, that's fine, but we're going to charge them the same thing.
Welcome back. You're watching Mid Cap Radar. Well, like we promised, we are going to the management of DCX Systems. The stock is in focus as the company recently bagged over 800 crores worth orders from US defense player Lockheed Martin, and this for the supply of electronic assemblies. The company has a strong order book of over 3,000 crore rupees. To discuss this and more, we have H.S. Raghvendra Rao, the founder, Chairman and Managing Director of DCX Systems with us. Good afternoon, Mr. Rao. Thank you so much for joining us. First up, talk to us about this particular order win from Lockheed Martin. At the end of Q2, where was your order book with this particular order win? What is the order inflow for FY25 and where is the order book currently stand at?
Firstly, this Lockheed Martin order, we got totally about $100 million. This has to be executed in 12 months. Of course, this is related to the offset orders. And as on the order book, we have about 3,000 crore plus order book in hand. And going forward, we have a strong pipeline order to be converted to the purchase order. We are expecting to happen very shortly. There are final discussion with customer is happening, various customer as well as India and outside India. And looks very good in the upcoming pipeline orders. We have a lot of good pipeline order has been lined and which has been almost is finalized, yet to get the purchase order from the OEMs. That's what.
So, Mr. Rao, you're talking about strong order pipeline that has come by. This recent order, is it higher margin than what you've been usually making? If we talk about EBITDA margins, the first half didn't look so strong versus the last year. You've seen a degrowth as well. What is the second half looking like in terms of order flows, and especially on this one? Is the margin going to be higher?
See, firstly, as already I mentioned, our company, you cannot measure the quarter wise, like $100 order to be divided by $25 every quarter. This cannot be worked. Our major revenue or profitability come in the last quarter only, because there are constraints on the material supply and margin, NREs, and the BOM variation cost. It will be acquired in the end of the last quarter only. So hence, it will not be a compare for the last quarter, this quarter, and every quarter. And of course, the new upcoming order, we have a better margin. And because of the many things, as you know, we started our own backward integration for Ranil. This giving more backup to improve our EBITDA. That's what I try to put it.
Okay, no, we understand that. What we want to understand from you is that, especially in the last couple of quarters, there's been quite a lot of variation, both in earnings, like you mentioned, lumpy business. But steady state EBITDA margin, if you look at it on an annualized basis, what is it that we can expect? And when you're talking about, the kind of order size that you've received from Lockheed Martin, at what EBITDA margins will you be executing this particular project?
Basically, until I supply and categorized everything, I am not able to disclose the EBITDA margin until we execute the POIs. This POI has been come very recently in the last 2-3 months. We are acquiring all the material. There is a class in the PO also, any upward and downfall for the material variation. Until we execute and ship, will not be able to disclose our EBITDA margin. But one thing, it is a better margin and better program what we have received it now. So I cannot give you the EBITDA margin exactly in the as on today, because all the material is in the pipeline to come and start production. There is a lot of testing, other process has to take place. Presently, I cannot able to define what is the EBITDA, but one thing I'll assure you that we have a better margin in these programs.
Okay, all right. Mr. Rao, we get it. It's a lumpy business, can't compare it quarter to quarter, but year on year, we'll have to compare. That's how we assess whether the company is growing or not, right? Important for investors. First half, you've seen a decline of 30% in revenues, and profits have also declined. Can we say second half will be better than first half? What kind of growth rates are you looking for the full year, FY25, and maybe FY26 as well, if there's some visibility in terms of order pipeline?
See, you can see last 7 years from the DCX side, and the quarter-wise, you cannot compare. But there is a drastically increase in our revenue in the last quarter. And this also we are hoping to have achieve more than the last year revenue and EBITDA margin. That's what the company targeting. And there are possibility on the order book size and upcoming order. Now, mainly on the supply chain got improved. And there's the main constraint. This year, we are not facing, at this moment, we are not facing any challenges.
Mr. Rao,
Yeah.
if you could just interrupt you. You said you're expecting a higher growth for FY25 compared to FY24. Could you give us a guided range, in terms of top line, in terms of EBITDA, in terms of margin and PAT? What is it that we can expect for H2 and also for FY26?
As you know, I have a lot of restriction in giving the guidance number, and that depends. I am not only executing with the one customer. Suppose I have a 4 or 5 PO. We have a different process, different margin. Which one I am going to ship based on the customer, that based on the numbers and based on the program and the process, my EBITDA is going to decide. So presently, I am not able to give guidance number until we have.
Mr. Rao, with the order book that you have in hand, could you give us a directional sense, if it's a mid-teens, if it's a double-digit growth, a single-digit growth, give us a sense of what is it that analysts can pencil in?
To be frank, I cannot able to disclose now on the what is until, see, it is not like when people knows when we get the PO, they know the margin. Because there is a variation in the raw material cost, which we are covered by the customer. So until we purchase and define the material cost, we'll not be able to disclose. Of course, it is not going out of our pocket. It has to be claimed from the customer. That is a contract that is called a BOM guarantee we have. Today, I cannot able to tell you what is the EBITDA margin until I have a supply chain in control. Material has come. I cannot define the margins.
Take that point, Mr. Rao. We tried, but of course, as you said, you will not be able to explain or give details on the margins as well. But after Q3, maybe some more details that will come up, and we'll get to know more about the outlook of the company as well. Thank you so much for joining us today with your insights. That's the word coming in from D6 Systems. But with that, let's dive into the Growth Code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed investment decisions. This week, CNBC-TV18's Nigel D'Souza sat down with Vishal Mehta, CMT and founder, Market Scanner, to understand why trading during low liquidity periods is risky. Let's listen in.
Why is trading, in a low liquidity market rather risky, especially in the F&O market?
Indian markets are the most liquid ones. Like Indian options market are considered to be the most traded contracts in the world. We have introduced next 45 stocks in the future segment. But liquidity is always when you are entering.
Yeah.
The problem is when you want to exit in a panic scenario, the liquidity dries up. So the more important part is you trade the liquid counters. And because I've seen in my personal experience, the stocks which were liquid, all of a sudden turn illiquid and you do not get proper exit. And in this scenario, the only thing that can save you in the derivatives market is a hedge position, because you know that this is the maximum loss that I'm going to incur.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai.
Hello, I'm Surabhi Upadhyay, and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Welcome back to Mid-Cap Radar. Well, there's a bit of a bounce as far as the broader end of the markets are concerned. The oil and gas space today is doing quite well. Some auto stocks have recovered. Bajaj Auto now at today's highest point, significant up move after the kind of sell-off that it saw earlier today. And ICICI General Insurance or ICICI Lombard, that is the one that's doing quite well, up almost over 1%. So these are stocks that have seen a bit of a recovery after the sharp intraday sell-off. But moving on, AU Small Finance Bank is in focus on the back of a note from Citi. Abhishek joins us with more details.
Vivek, Citi has been holding a financial conference with respect to all the lenders under their coverage. And over there, AU Small Finance Bank had come in and mentioned some of the key points to investors. So first of all, Citi has a neutral rating, target price of 684 per share on AU Small Finance Bank. The key takeaway is that there is, given elevated stress in MFI, the bank has actually beefed up their collections. They have had 500 people to actually, go in for collections for early bucket resolutions. They expect the MFI credit cost to be elevated in H2 of FY25. Now, secured rural and secured semi-urban portfolio is doing well. However, given the fact that there might be continued muted economic activity, which actually may pose, downward risk to their asset quality. So they expect the loan growth to be in the range of 23 to 25% in FY25. Remember that the loan growth was about 25% in FY24, but that was before the merger of the South Indian entity that they had taken over. They have maintained their NIM at around 6% for FY25 with better visibility on cost of fund is what they have said. They are hopeful of getting the universal banking license in the next year, that is calendar year 2025. So for them, asset quality actually takes precedence over loan growth in the near term. Back to you.
Thank you so much, Abhishek. And you've been cautioning us as far as the entire lending space is concerned. One particular stock, if you could just highlight, that's the Bombay Stock Exchange, BSE. The last 15-20 minutes of trade, that particular stock has seen a very sharp upsurge. But with that, it's all the time we have on this edition of Mid-Cap Radar Mutual Fund Corner. When we return.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Hello and welcome. You're tuned into MF Corner in the Mumbai studio. I'm Sonal Bhutra. And as we come close to the end of the year, let's talk about some trends that we saw in 2024. In fact, this year saw a lot of action in the mutual fund space, right? And the funds raised by NFOs has definitely been one of them. So let's look at the numbers before we go to our experts on the show today. Funds raised by NFOs or new fund offers stood at 1.04 lakh crore rupees in 2024. This, of course, is still November, and we have more NFOs in the month of December that have not been accounted for here. This is an uptick of 63% versus funds raised in 2023, when funds raised by NFOs were around 63,800 crore rupees, which is slightly lower than 2022. That time the number was 67,336 crore rupees. But 2021 was a strong year for NFOs and the inflows as well, which was double the amount seen in 2020 at 53,703 crore rupees. And if we talk about the number of NFOs, that is, 2022 still tops the list. So far in 2024, 205 NFOs have been issued till November, which compares with 212 in 2023, 246 before that, 140 in 2021, and 81 in 2020. Some of the categories that saw high flows: multi-cap funds getting around 6,400 crore rupees of money, other ETFs at around 1,400 crore rupees. But the real star of this year had to be sectoral funds. 40 sectoral or thematic funds, they saw the highest flows that we've seen in the last 5 years. Sectoral funds garnered around 67,700 crore in 2024 so far, which is more than the flows in the space from 2020 to 2023 itself. And in this period, sectoral funds garnered around 52,165 crores via 59 NFOs. Even index funds saw a lot of interest. 76 NFOs in the index fund space, raising around 12,140 crore rupees, which is the highest that we've seen in at least 5 years. And index funds have seen a lot of interest, more so in last 3 years, with more focus on passive investing. In 2023, 53 index funds were launched, garnering 2,700 crores, and this compares with 85 index funds taking up around 11,240 crores in 2022. These numbers are very low in 2020 and 2021, something that you can see on your screen. Interestingly, no mid-cap funds were launched in 2023 and 24. This space saw a big rally but did not see a new product here, but saw massive flows in the existing names. Also, only one small-cap fund was launched in 2024. And now we are towards the end of 2024. December also has seen a lot of action in the NFO space. But will this continue in 2025? Will there be new products by mutual fund houses to diversify the portfolio? something time will tell, but we have to discuss this phenomenon with our experts on the show today. Neerav Karkera, the head of research at Fisdom, and Mohit Gang, co-founder and CEO Moneyfront, joining us now to discuss the trends going forward and what led to that big rally, I would say the big rush of NFOs in 2024. Gentlemen, thank you so much for joining us. Always a pleasure speaking with the two of you. Mohit, let me start with you first. What explains this big NFO rush and money raised this year via NFOs? This is the highest that we've seen in the last 5 years.
Oh, absolutely, Sonal. Thank you so much for having me on this year-end show. Look, I think money begets money, and it's more like a herd mentality out there on the street. I think there is limited shelf space available with the AMCs on existing categories, right? So they can't any further launch a large cap fund or a mid cap or a small cap fund because they already have one on the shelf, and SEBI doesn't allow them to launch new. So only place where they can perhaps innovate and attract investor fancy is the sectoral and the thematic space, where you don't have any limitation. You can launch as many new ideas as you wish to, right? These ideas sound fancy, they sound quite interesting, esoteric at times, abstract at times, right? So it catches investor fancy. Investors who have been long invested are wanting, really craving for something new in their portfolio, just for the thrill of it sometimes, and sometimes for the right fitment and right placement. But yes, I think getting new money collected in the market becomes extremely easy for the industry per se, for the distributor fraternity per se, and for investors, I think it's just about following the entire pack and just going out and buying something new for the rush of it at most times, and sometimes for the fitment of it.
Okay, all right. Take that point, Mohit. Neerav, come in on this first. Your take on why there has been a big NFO rush. And Mohit mentioned sectoral funds, right? They were the big contributors. But now the markets have come off highs. Most sectors are seeing profit booking. How has this impacted the performance of those NFOs?
So, Sonal, at the outset, one thing I'd like to highlight, of course, we've seen an NFO rush. But I feel this year has been dedicated to an MF rush at a very broader level as well. There's been some sort of a gold rush towards MFs, and this is a part of a structural shift in preference of mutual funds. So there is, of course, financialization of assets, and even within financialization, there is mutual fundization of assets, right? So as a part of this larger shift, NFOs were able to garner a chunky part of capital that has been mobilized towards mutual funds. And this is on account of two things. One, of course, the flows into mutual funds and the interest into mutual funds itself that I just spoke about. The other is the innovative propositions that the industry has been coming up with. Now, of course, in the past half decade, this year alone recorded, very high levels of NFO collections, but you must also appreciate that the most innovative funds also came in this year. In fact, the most innovation came in on both sides of fund management, active as well as passive. In fact, we have seen some phenomenal passive propositions come into the market, right from factor-based to multifactorial funds on the passive side. On the active fund size, we have seen very specific niche themes and sectors being targeted, like energy, for instance, or capital markets on the index side, or we could also talk about automotive as a fund being launched, right? And so these very niche propositions have attracted a lot of investor interest in terms of garnering specific and targeted allocations. So that's one. Second, your second half of the question was around sectoral funds. Like any other sectoral fund, one can expect it to be highly cyclical in nature. Returns are generally lumpy. Declines are generally steep. These are very characteristic of sectoral funds. And by virtue of most NFOs being sectoral in nature and closely followed by thematic in nature, they have also seen a wild bout of profit booking as well as upticks happening, and this is largely aligned with the very fast-paced sector rotation that we have witnessed in the broader markets as well. So somehow portfolios constructed using actively managed funds were also furthermore actively managed. So there was a second layer of active management that was also in play during the year, because the markets were also highly volatile with a series of trigger events, right? So a lot of these optimizations resulted in many NFOs posting a steep redemption as well as a steep decline in performance. So this is largely linked to the specific sector and the sectoral rotation that happened in the broader market.
Okay, we get that point, Nirav. Point well taken. Mohit, then let's talk about NFOs in general, right? Because there have been so many of them and all of them have seen such good demand. But what's your take? Is this something any investor should invest in? What kind of investors would this be a good category for?
So look, I've been pretty vocal about my views on this one, and I'll not mince any words out here. My firm belief is that if a clown enters a palace, he doesn't become a king just by entering the palace. And basically, the palace turns into a circus, right? And that's what I see happening with most of the investor portfolios. The portfolios are turning into a circus with overcrowding of NFOs in the portfolios just for the fancy of it, right? Look, an NFO does make sense. I'm not outright against it, only if it is a true fitment in a long-term allocation of a client's portfolio, fits with his risk appetite, fits with his time tenor, fits with what his financial goals are, basically, right? And if the theme is so robust and solid that otherwise it was not easy to play that theme, right? So there are many themes like that globally. In fact, there are many themes which are available, which is very difficult to play through a multi-cap or a flexi-cap fund, and you would want to play through a sectoral fund. And the last reason for going into sectoral funds could be, let's say, if you really are deeply entrenched with that industry or the sector or the theme, and you know a lot about it, much more than what a normal layman would know, and you know that the prospects are really bright, that's when you really go out and get into those sectoral thematic funds. But otherwise, our first calling is avoid. And only after thorough due diligence and matching with an investor profile is that when we typically go out and give a call on any of the NFOs.
Take that point.
Especially the sectoral ones.
Yes, exactly. So, Mohit, did some of the NFOs stood out for you in 2024? Something that you should have thought that investors could have invested in, not so bad?
Look, again, if I have to pick few names, I think Motilal Oswal Digital Fund, which happened just recently, was a good one. Honestly, I think this entire digitization theme, the theme overall on the IT pack, we've been fairly bullish on the IT pack for some while now, and the overall theme encompassed a much larger canvas. So that was one. There have been few passive factor-based funds which have gone through in the year. Some perhaps on the momentum side and some on the value side. I think on the factor-based investing style, again, I've been pretty vocal on that. We really like the factor investing styles, and out there, momentum plays and value plays. I think those were good NFOs which were available in the year. There was one through ICICI Energy Opportunities Fund, again, a very niche play. If really someone is keenly plugged into that theme and has a large risk appetite to digest some amount of volatility, then that could have been a reasonable play. So these are a few names which caught our fancy.
Okay, interesting names there. Nirav, you want to add on to that some of the NFOs that stood out for you? The energy theme, I think you like that as well.
Yes, so the energy theme, I've been really vocal about my love for energy as a sector across forums. So SBI and ICICI both offered an opportunity to play the energy theme very specifically. SBI and ICICI both, in fact, distinctly on the energy thematic play. Apart from that, on the index-based play, a very recent ones around capital markets is something that I really like. Right, so Tata is doing some good work there. Edelweiss is trying to do some good work around the ETF side of it as well. So capital markets also a wonderful theme. So I feel some highlight themes that this year offered were energy and capital markets. Of course, there have been a slew of innovative themes, but I would put these two at the top of the table.
Okay, take that point. So energy is definitely that is being liked because there's so much anyway happening in that space. But again, valuation something, or the rally that we've already seen, and after that, some of the moves that we've seen is something that is putting a lot of focus on the space. Very interesting chat. I have a lot more questions, but we have to take a quick break. On the other side, we'll continue our discussion with our experts on that big NFO rush and specifically the flows coming in from sectoral funds this year. Stay tuned.
3:55 पर नीलकमल नाम की एक जो प्रवासी वेसल थी उसको नौदल की एक बोट टकराने से एक बहुत बड़ा अपघात हुआ है, एक्सीडेंट हुआ है। इन 13 लोगों में 10 सिविलियंस है और 3 नेवी के लोग हैं जिनकी मृत्यु हुई है। जिन लोगों की मृत्यु हुई है उनको सीएम रिलीफ फंड से 5 लाख रुपए दिए जाएंगे। और ये जो पूरी घटना है, इस घटना की तफ्तीश ये पुलिस भी करेगी और नेवी भी करेगी।
जब लक्ष्मण मूर्छित हुए थे तो हनुमान जी उनके लिए संजीवनी बूटी लेके आए थे। तो आज दिल्ली के बुजुर्गों के लिए मैं संजीवनी योजना का ऐलान करने जा रहा हूं कि 60 साल से ऊपर के हमारे जितने बुजुर्ग हैं उन बुजुर्गों का पूरा इलाज फ्री करवाया जाएगा। इसकी चुनाव के बाद हम योजना लेके आएंगे, योजना पारित करेंगे। वो चाहे सरकारी अस्पताल में इलाज कराना चाहें, चाहे प्राइवेट अस्पताल में इलाज कराना चाहें, उनका पूरा इलाज फ्री कराया जाएगा। इसमें कोई बीपीएल, एपीएल, टीपीएल, आरपीएल कोई लिमिट नहीं होगी। सबका इलाज, चाहे अमीर हो चाहे गरीब हो, सबका इलाज मुफ्त कराया जाएगा। और कोई अपर लिमिट नहीं होगी। आप जितना आपका बीमारी पे खर्चा आएगा उसका सारा खर्चा दिल्ली सरकार वहन करेगी।
Welcome back. You're still tuned into MF Corner. We still have with us Neerav Karkera, the head research, Wisdom, and Mohit Gang, co-founder and CEO of Money Front. Well, we've been discussing what's been causing the NFO rush so far in November, but we still have 12 days of December, and we've seen some NFOs in December as well. Neerav, let me start with you. What are some of the NFOs which are interesting? How would you evaluate them? Especially wanted to talk about SBI Quant Fund and Kotak Conglomerate Fund. How do these look to you?
So SBI Quant and Kotak Conglomerate are, one thing very clearly, it is unique. These are distinct propositions. In fact, there are hardly a few quant-based funds offered by the mutual fund industry. So SBI has joined the very short list that is already out there. In fact, if you look at the asset base of this theme also, it is a very small percentage of the total equity AUM that is being managed by the industry, right? So it is a foray in the right direction. We believe there's a lot of promise that quant as a theme, as a method holds. So SBI's foray into it is very well appreciable. Kotak Conglomerate is playing a very, very distinct theme, and the theme is something that I am particularly very optimistic about. We believe that conglomerates offer an opportunity for value unlocking in the time to come across through various levers. Right, so there is a very strong case for conglomerates. In fact, along with Kotak, a few more AMCs are also working on the same theme. So, and also, goes without saying that some of these conglomerates stand to benefit from, the same factors that benefit the bluest of the blue chips, that is heavyweight balance sheets, clean P&L, strong cash flows, high moats, etc. Right? So, an amazing theme that way. I feel both of these themes are very distinct, but however, at the same time, like my view stands on NFOs in general, there is no need to rush headfirst into an NFO no matter what, unless it is a close-ended fund and there is a super, super strong fitment and an urgent need to make use of this opportunity, because no matter what the fund, you will always get time to enter it, as long as it's an open-ended fund. And there's no harm in waiting for 15 days to a month to wait and see how is its portfolio constructed. At least that is the bare minimum waiting time that an investor should have. So, probably wait till an NFO becomes an FO, and just a fund offering and not necessarily a new fund offering within the NFO period. You'll always have plenty of time to get on board and play the particular theme. At least wait till you get to see the portfolio through the disclosures. And then if you want to be slightly more sane, wait till a few more cycles play out. But if you are in a rush, at least wait till you see the portfolio disclosures. That should give you a higher sense of conviction and clarity in terms of what are you getting into.
Looks like everyone has conviction at the start only, Nirav, and that's why we've seen that kind of, excitement across NFOs, be it the mutual fund investments or stock investments also. That's why we have these discussions, so that experts like yourself can also guide when patience is required and you can just go all out and invest your money. But let's talk about the mid-cap space and the small-cap space. Mohit, let me come to you. No mid-cap NFOs launched in 23-24. There was one small-cap fund launched in 2024. Is this a category largely addressed across AMCs and we won't see a lot happening here? Do you think it's taken care of across the industry?
Look, Sonal, as I said at the start of this conversation, that most of the larger fund houses and AMCs already have a scheme on the shelf in the mid-cap and small-cap category. So as per SEBI rules, they can't have a different scheme on the shelf. Hence, it leaves very limited AMCs who don't have the schemes on the shelf right there to launch a new NFO. That's why we haven't seen a new spate of offerings. Plus, for the newer entrants to come and offer a new NFO in this space, I think it's across the industry, the general view is that mid and small caps have rallied a lot. The valuations are extremely high, and it perhaps might not be the right time to launch a new scheme at this level, right? So I think that's the whole reason why we don't see any mid and small cap NFOs. The larger one being that there is no shelf space available for a new launch in the industry.
Okay. So, Mohit, do you think 2025 could see even higher NFOs versus 2024 in terms of numbers and fundraise?
Look, honestly, Sonal, this is something like there was a time when movies couldn't gross 100 crores at all, right? It was a distant dream. Then came an era where 100 crore, like every third movie catches up with a 100 crore number. Like 500 crores become a reality, and 1,000 crores is something which few movies catch. And so is the case with this NFO bandwagon. I think it's not so much to do with new launches and the money being collected. It's just about to do with the disposable income which is available with the Indians at large and the financialization of savings which is happening in particular. To my mind, I think this is a movement whose time has come, and you can't stop this juggernaut from rolling on. From 200, pretty soon you will see 500 NFOs in a year, and from 1 lakh crore you will see maybe 2 lakh crores and even higher numbers pretty soon. I think that's just the nature of the beast we are dealing with. But my final point here, Sonal, is that every movie, you need not go and watch first day, first show. You can just wait for the reviews and other things to come out. Perhaps you might just want to avoid it once you get the reviews and once you see the noise pass out.
Maybe there'll be an OTT alternative to NFOs as well. Who knows? We are constantly, seeing innovation in the mutual fund industry as well. Nirav, your thoughts and your closing comments on NFOs in general as well.
So I believe 2025 will be yet another year where we will see a lot many innovative NFOs come to market. In fact, I am very hopeful that we will see a lot more innovation on the passive side as well. In fact, I'm expecting the passive side to start offering more innovation beyond slices and dices of factors and multi-factors in various proportions, right? So there's a lot of scope for innovation there. On the active side, I can expect the larger fund houses, considering how they have been around for several cycles, and they have seen various themes and sectors play out very closely. On the active side, we could start seeing some very good thematic offerings, not sectoral as much perhaps, but thematic at least. So that's my expectation. for 2025 in terms of NFO flows. Also on NFOs, the general view would be there is, like I said, there's no need to rush in head first. It's not a train jo chhoot jayega, uske baad pata nahi kab aayega, right? So no need to rush in head first, to wait for the details to come in. The primary, do not forget the basics, right? That's my number one advice, whether it comes to NFO or investing. Do not forget the basics. If you want to invest with deep conviction, and conviction is built through information.
All right, point very well taken, gentlemen. Thank you so much for joining us with your thoughts and insights and guiding the investors on how to go about NFOs in general as well. A pleasure speaking with the two of you. And with that, we'll take your leave on this edition of MF Corner today. Stay tuned for Closing Bell to take you through the last hour of trade.
But the word reciprocal is important, because if somebody charges us, India, we don't have to talk about own, if India charges us 100% and we charge them nothing for the same, they send in a bicycle and we send them a bicycle, they charge us 100 and 200, India charges a lot, Brazil charges a lot. If they want to charge us, that's fine, but we're going to charge them the same thing.
That is why Taiwan index down 1.53%, Hang Seng down 1%.
I think from this point forward, it's appropriate to move cautiously.
23,900 is the sort of first support zone.
I think these sorts of pullbacks could be good buying opportunities.
So the first support is 23,900 on the downside, and we're opening exactly there.
The Fed stays higher for longer,
that's going to create challenges for all of these other central banks.
We have done about 10.5 to 11% EBITDA over the last 3 to 7 years.
Still no meaningful recovery for the markets inside, down over 1% on the benchmark indices.
Total of 19 items got SEBI's approval in yesterday's board meeting.
Long been waiting for that 85 mark to be crossed, and it looked like only the Reserve Bank was standing in the way.
Well, it continues to be a down day. It's a 250-point cut on the Nifty.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, it's been down since the morning, and I think you saw the play out of the day and how it has panned out so far. The good thing, the silver lining, of course, is that we're down about 1% roughly. It's not become worse. It's not accelerated to the downside. So we'll track all of that over the next 60 minutes or so. This is Closing Bell. I'm Prashant with me, my colleagues Nigel and Reema. Guys, hi. Good afternoon.
Hi, afternoon. And largely in line with what the rest of the global markets have done. Asia was also down closer to half to about 1.5%. Europe too right now is down about 1%.
Well, that's right. I think at the start of the trade, if someone said that you'll be down just around 1%, then you would say, I'll take it. And we are absolutely in line with what we have seen at the start of the trading session. That is, if someone shorted at the opening, they would make no money. So that's the kind of picture we have. And I think the brightest spot is when we started off trade this morning, 150 stocks were advancing. Yeah. Now you have 750 stocks that are advancing. So your portfolio will be looking quite good. I think the bulls will be pretty okay with today's outcome.
It's like a normal, I mean, we get lots of 1% down days, right? So, and I think it's one of those. Because, when you woke up, it looked a little ugly, GIFT Nifty, etc. If you remember, 300, 350, and we opened that much down. And then, of course, since then, we've recovered quite a bit. So holding, look at that. It's almost as if all of the action happened in the first 40, 45 minutes. And since then, it's just sort of holding on an even keel. So just straight off the levels, Nifty holding to 23,900. That's the first level we put out. We broke that, came back above it. Or did we break it? I think we almost got to it and then we kind of bounced off it. Not broken since. Nifty Bank is above the 51,353 levels. The numbers will come up on your screen. That's that level on the Nifty Bank is also holding. That is a 61.8% retracement of the recent rise. So again, not broken. The big factor, of course, is the Fed's message that the message is that it'll be on hold in 25 and the bar to cut is high. And of course, in a way, the gut punch for the market is essentially not so much for equities, actually for equities in the US as well, but the rates market, etc. The Fed seems to be saying that they care more once again about inflation rather than growth. Dollar in Asia, I looked at the dollar index, still trading above the 108 odd levels. And there was the other big central bank, right? Bank of Japan. And thankfully, this marginal slight relief, they're on hold. So I think just silver linings in an otherwise down and out kind of a market, at least on the frontline index level. Reema.
Well, a lot more stocks are now in the green in the frontline space compared to where we opened. When we started trade, there were just a handful of stocks, and now we've got about 14 Nifty stocks in the green. The gains are led by the Pharma pack. The Pharma has been the leader so far. The Nifty Pharma Index up 1.7% for the day, 2.5% gains so far this week. So it's significantly outperformed the Nifty, which has seen a cut of about 3.3%. Names like Dr. Reddy's tops the chart, 4% higher. Cipla, Sun Pharma seeing a fair amount of buying, and you add to that Apollo Hospitals, that's also gaining close to about 1%. Outside of that, you've got strength in some two-wheeler, actually all the two-wheeler names. So Hero MotoCorp, Eicher Motors and Bajaj Auto. Gains are not much, but it's a green tick for these stocks. BPCL, SBI Life, Power Grid, Britannia, these are some of the other names which have, bucked the otherwise downward trend in the market. On the way down, real estate, metals, IT, banks, deep cuts across many of these names. But for IT, remember, Accenture comes out with numbers later, so the Indian IT stocks will react only tomorrow. So that's going to be an important watch point. But Bajaj Finserv, Grasim, JSW Steel, Asian Paints, which is weighed down by some senior level exits. Asian Paints is down 2.3%. ICICI Bank has slumped. Reliance Industries Was higher yesterday, but today it's a reversed course.
Just a word on the IPOs, Rima. IKS, the stock is up close to around 40-45% or thereabouts. But take a look at the others. MobiKwik, yesterday it had a big listing. Pull up the intraday chart actually of MobiKwik. The intraday chart comes up for you on the screen. It slipped close to around 6-7% in a matter of 20 minutes, currently at the low point of the day. Sai Life Sciences, massive move is what we saw yesterday. At the start of the hour, the stock was in the green. Pull up the chart. It'll tell you the picture out there. And Vishal Mega Mart as well. A lot of influential names appeared in yesterday's large trades as well. Pull up the chart out there as well. That stock has slipped close to around 6% from the high point of the day. So all of them cooling off a little bit in today's trading session. They have moved up substantially for just a 2-day move, but all of them in the last 30 minutes come in for some profit taking. Let's get it, Mitesh, back on the show. Hi, Mitesh. Good afternoon. What's your view now? You were saying that it's still tilting towards the downside rather than the upside. Holding on to that view?
Good afternoon, Ajit. I think so, yes. We haven't had any kind of bounce back post the gap down. We did touch a low of around 23,877, or 870 rather. Managed to give a very meek 100-point kind of a pullback, but no sign of a reversal or change in the trend. So we must believe that on the upside, 24,050-70 zone might not be cleared, and good chance that we will test the 200 average, which is at about 23,820-25 zone. And in case we start breaking below that, then we'll look at lower levels as well. The only, possibly something which is shining bright or sector which is doing well in this market is the pharma sector. I think we had buys on Dr. Reddy and Arvindo today. I think that's where long positions can be explored, but otherwise it's the market which is most likely, be on the weaker side and likely to test the 200 average.
And stocks, Mitesh?
Yeah. So I do have, Lupin as a buy recommendation. We had Dr. Reddy's yesterday and in the morning today, and then Arvindo Pharma. Lupin is the fresh stock which is given some kind of a reversal sign on the upside. So keep a stop at 21.20. Look for targets of 22.50 or thereabouts. And on the negative side is Apollo Tyres. Actually, I'm just waiting for the pivot of 525 to be taken out. I think sell below 525. Keep a stop at 533, 533.5, and look for a target of 510.
Okay, let's move on now. Dr. Reddy's, that's one of the big winners of the day on the back of bullish commentary from Nomura. Vinny's here with the details. Vinny, what is it that Nomura likes about Dr. Reddy's from here on?
So absolutely this big upgrade, target price of 1,500 rupees for Dr. Reddy's from Nomura. What they like and what they're positive on, the Dr. Reddy's one had not performed during this year. It was underperforming versus other pharma companies, mainly because of the high contribution they had from Revlimid as a drug. Now that they say is already priced in terms of the move that we saw, the down move we saw coming in for Dr. Reddy's. Going forward, the company has made a lot of investments in biosimilars, so that is one positive for them. Plus the GLP-1 opportunity. That's a big one, and that is a big one that will pay out for Dr. Reddy's going forward. And this is not something that is still priced into in terms of the estimates also that everyone has for FY27. And this will just start playing out from next year and onwards. So that is a big opportunity which Nomura is highlighting. And that is why we're seeing the stock also seeing a decent move in today's market.
Thank you very much for that. Devin Choksi is now joining us on the show. Devin, Pharma's really made a comeback. Is it just sectoral churn? Sector leadership changing, or is there anything else? And are any of the stocks on your buy list right now?
Yeah, good afternoon, Rima. Well, I believe the currency depreciation is possibly, I think, adding to the kind of a buying confidence of some of the traders in the marketplace. And that's where I think some amount of revised rating, though it may not be substantially high rating, I think that they have revised it. But still, I think because of the currency depreciation factor is being now factored in. And that's where probably I think the recommendations have started coming on some of the pharma companies. No doubt, I think the other side of the fundamental remains absolutely sure and intact. As far as I think some of the large ones are concerned, like Sun, Cipla, Dr. Reddy. But I believe that I think individual news in some of the companies, including in Dr. Reddy, where I think the prices are today, is also due to the newer development factors like the successful trials on the biosimilar products, I think, which they are planning to launch. So that is where probably I think the market getting little excited. I'm not too sure. I think we have too much of headroom at this point of time, but I believe that I think certain amount of re-rating is happening largely because of this reason.
Okay, let's get to IKS then. It had a very strong debut today, so the market has been otherwise been weak, but IKS has held on to all its gains. 1900 on the stock versus the issue price of 1329. Vinny's still with us. Vinny?
Yes, so bumper listing that's coming in for IKS, and like you're mentioning, 1900 is the price that right now it's holding on to. On the basis of that, if you're just calculating on the back of FY24 calculations, the P would be somewhere around 55 times. So good in terms of the P that is there. Now, when you compare it to listed players, they do not have any peers in the listed space as of now. Sagility is the only one that would be a close call to that, but still not on a like-to-like basis. Now, overall, there's a big market opportunity for IKS, especially in the US market. They're focusing on providing technology to clinics as well as physicians. So that is a very different segment versus other players that are there, and that is why a big opportunity in for IKS versus the other players in the industry. Now, in terms of growth, also the company has managed a CAGR growth over 54% in the last couple of years, EBITDA growth of around 37%, and profits also have seen a good growth. So interesting play to watch out for from IKS Health. A bumper listing is surely that is coming today.
Devin, hi, good afternoon. Vinny, thank you very much for that. There's some news, Rima?
No.
Sorry,
we just thought we'll, get our viewers, the management, speak on IKS.
Okay, all right, let's do that.
Yeah,
let's do that. Let's actually play out the soundbite of IKS, and then we'll come back to Devin with a view on this one.
The reason they dropped to 31% last year was because we acquired a company called Acuity Solutions, which has a very large customer base. IKS traditionally had about 35,000 physicians under management. There are 900,000 physicians in America. IKS had 35,000 physicians under management. We acquired Acuity last year that actually has 120,000 physicians under management. So together that's 155,000 physicians, which is 18% of all of America's physicians. That becomes now our captive customer base into which we can cross-sell our entire platform, which forms the growth thesis for the next 10, 15 years. As we cross-sell our platform across these 155,000 physicians, it creates a captive opportunity of up to $28 to $29 billion. We're seeing margins in the range of early to mid-30s as we stabilize. Outsourced TAM is growing at 12%. If you look at our historical growth rates from FY22 to 24, it's, on a standalone basis, we are 27%. So when you look at the outsourced TAM growing at 12%, our historic growth rates, our acquisition of Acuity and the massive customer base in which we can cross-sell, we feel very confident that we will far outpace the outsourced TAM growth rate of 12%.
All right, well, very impressive sort of discussion when I remember we had with the management, and as Rima said and Vinny said, that not too many listed peers. Maybe there's Sagility, which is the other one, but one works with hospitals, the other works with insurance as the industry, basically, that is. Devin, any thoughts on IKS? I don't know if you have initiation as a house or any views. Devin, if you can hear me, IKS, any thoughts? Okay, I don't think Devin can. Okay, now he can hear me. Devin, I was asking about IKS.
Very happy to see this kind of model emerging into. Yeah, so I think just very happy to see this kind of model emerging into the listed market. On one side, I think they have got the data analytics. On the other side, I think they are providing the solutions to the entire healthcare segment as a vertical. Probably, I think it gives you the confidence that I think the kind of size that they're catering to would only grow further. Currently, I think catering largely to US and the Australia and the Canada. Maybe I think these advanced markets are actually, I think, helping them today at this point of time. But the scope remains quite huge as I see it. Inorganic growth possibilities, I think, which they have started demonstrating, I think is something which one will have to look at, I think, a little bit more systematically. If they end up acquiring in different geographies some of the last mile delivery companies, then probably, I think the business could really work well, because I think the data analytic part of the science is working well, I believe, I think, with this company. Interesting one. We'll have to watch more closely this company before taking any investment call on them.
Were you interested in Vishal Mega Mart, Sai Life Sciences, or even MobiKwik? All three different verticals, but different sizes. But were you interested?
MobiKwik, I think, is appearing to be a little better, but the fact is that I think everything is in price. And the growth rate is not giving me any further direction that I think one should be buying at a premium level. At the same time, I think the competition which is coming from behind, particularly I think the ones which will be coming in largely from, I think, the Reliance Jio, I would think that I think this is where probably this kind of businesses will have to really safeguard themselves. Largely because of the fact that I think only the fintech solution at the front is not working because of whether the margins are less, customer acquisition cost is high. But suppose if this particular solution is integrated with the e-commerce at the back end, which Reliance is having a strong proposition, in such situation, I think your margin is also taken care of, and at the same time, the entire value chain is fully captured. If that proposition gets developed, I think then likes of MobiKwik, I think, would work very well. Paytm did try for, I think, this particular e-commerce to plug in. Probably didn't work. I think here it remains to be seen, I think, whether it is going to be further working. But till that point of time, the valuations are expensive. So immediately, no investment interest. Maybe I think closely watching the technology and the developments around, I think, at this point of time.
Okay, all right. Hi, Deven. Good afternoon. Deven, what to do with these FMCG companies? Very, very high pedigree companies trading at a discount in comparison to what they traded. No growth, market doesn't want them. Nestle, I think, is at a 52-week low. You have Asian Paints, it's made yet another 52-week low. I think Britannia saved the blushes because that's taken a price increase, so that's at the high point of the day. Any of them need to be bought according to you?
Well, corrected prices, definitely, I think they work well for investment for sure. These companies, they are not yet fully ready to show, I think, what kind of growth they would be having in subsequent quarters. But I think one good part is that I think the valuations are now becoming a little bit more affordable than what they were up till now. The fact remains that I think in most of these FMCG companies, on one side, I think there is a cost pressure. On the other side, I think there is a systematic amount of demand, I think, which is growing at a moderate rate, I think, particularly the urban market. When this situation is around, probably the valuations at a high level will not sustain. And that's what is happening in the market. Not too sure whether I think one should be immediately buying into every one of them. But some of the companies would be really interesting to buy, likes of Britannia, likes of Nestle, if the price corrects further.
Some more stocks. KFin Tech, it was a big mover yesterday. It's added on another 7% higher. It's a fresh 52-week high. Remember, just yesterday's Jefferies raised the target price on KFin Tech to 1530. So that's been a big mover. Even in the last 10 minutes, there's been a spike up in KFin Tech. And oil marketing companies across the board are higher by close to about 3%. There is a CLSA note which says that oil marketing companies' integrated diesel and petrol margins suggest a bumper Q3 for IOC, BP and HPCL, and these stocks are up and about. Oil marketing companies, Deve?
Not immediately, I think, any particular view at this point of time. I think host of other stocks in the marketplace which are comparatively less cyclical and comparatively less policy affected companies, they are better off, I think, at this point of time in the foreign market. They are actually, I think, available at a valuation and the price which is quite discounted and which is giving me more comfort. So frankly, I think would not be very keen to buy into something which is OMC or maybe I think largely a commodity one, except I think some steel stocks. But otherwise, I think we believe that the regular ones, they appear really better in the banking space, particularly in some of the manufacturing companies also equally interestingly positioned at this point of time.
All right, Devin, we'll leave it there. Thank you very much for joining us. It's a pleasure having you here. Thank you for taking out the time and so being on the program today. We'll take a quick commercial break here. Markets are what they do. Markets are where they are, down about 1%. Nifty Bank, I think, has given up a little bit more, but largely, I mean, at similar levels, it's been at for the last few hours now. Rashid Talwar is going to be joining us from Ashmore on the other side. That's the next conversation which is coming up. Stay tuned.
One. Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. Hi, thank you so much. Good to be challenges of just getting the team in place to work with technical fabrics and so on and so forth. I mean, what has that experience been like for you as you set this up?
As an early stage entrepreneur, you only have two things. You have momentum and you have conviction. That's it. If you lose one of them, then you have no right to play.
How much of confidence do you have today to say, why the heck not? I just want to do this because I want to do this.
Saying no is strategy, saying yes is execution. And if you are being very, very strategic about what you're doing, you have to say no multiple times.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai.
Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Okay, welcome back. 250 points lower, 23,946 is where we're at. Rashi Talwar is joining us now, partner and portfolio manager at Ashmore. Rashi, good to have you with us here, and thanks very much for joining us. You're joining us on an interesting day. You know, it's we're sort of winding down the year, and we thought that we'll sort of do this nicely without too much volatility, but volatility we have got. So I just want to start by asking you whether you think this is the start of a bit of a correction in global markets, or you think this is going to pass. We had a few gentlemen in the morning, early morning with us, who Ed Yardini and others, who thought that this could be like a 10-15% kind of a pullback in the US. But if that were to come true, I mean, it's unlikely other markets will not feel the pain. So just your thoughts, Rashi.
So, Prashant, we're sitting at all-time high multiples for parts of the market, right? And specifically in the mid and the small cap space. When you are sitting at all-time high multiples, I mean, the mid cap is about 38.5 times 1 year forward. The small cap is also pretty high. The point is, and we're starting to see earnings growth slow down. I don't think there is any debate with that. And the next 2 to 3 quarters will continue to see earnings growth slow down. The way operating leverage works for companies is that the small and the mid-cap companies see much higher operating leverage on the way up when earnings are improving and commodities are coming down, because as a percentage of their raw material cost, etc., commodities are a much higher percentage, etc., all sorts of operating leverage. But it happens the same way on the way down when negative leverage starts to play out. But at the same time, nobody's really gone ahead and cut their earnings growth estimates for a lot of the small and the mid-cap companies. The point I'm trying to make in short is really that I think there is more pain ahead. I think the pain is specifically in the small and mid-cap space because right now you're sitting at all-time high valuations. You're sitting at earnings growth, which is starting to move down. And, people haven't readjusted their estimates and the numbers to that reality. Sometimes it just takes something on the external environment for people to wake up and figure that out. And whether that is the Fed deciding that they will not cut as much as people had thought they would, maybe. I can't tell you that, but that's clearly to me what seems to be happening.
So Rashi, fresh money allocation. Clearly, your bias is towards large caps, but you want to provide some more color on the kind of themes that you prefer going into next year. What would be the top ideas?
So, our top ideas, like you said very accurately, yes, we are far more large cap heavy today than we've been historically. And that will continue in the large cap space. In financials, it's the large private sector banks. We do believe the smaller ones and the NBFCs are going to have their share of issues going ahead. It's already visible and will continue. Pharma is a very big bet for us, and the large pharma space companies, the hospital space as well. So that's a big bet for us. On the tech space, we believe expectations are reasonably beaten down. And as order flow comes through and as you start to see those numbers come through, that's a space that is actually pretty well positioned as well. So that's how we are positioned. We do have some of our unique bottom-up ideas as always, and those continue, and those are reasonably sector agnostic as terms of the way you're looking at it. But that's the color of how we're positioned, and I think I'm going to run that for a bit. There needs to be some serious correction on the small and mid space for me to want to start to reallocating the portfolio back into that space.
All right. Hi, Rashi. Good afternoon. Good to see you in. This is Nigel on this side. Rashi, I want to ask you about the consumer staples. Some very, very high pedigree companies. Y'all are relatively underweight over there. Hence the time that y'all are going to turn that stance. I mean, what are the triggers y'all are looking for? Because y'all are, if I look at it in comparison to the benchmark, y'all are very underweight on that space.
Yeah, so we are. When you look at the large consumer staple companies and they're trading at 45, 50 times earnings and giving you mid-single digit earnings growth, it doesn't cut it as far as we're concerned. We do have one staple company, don't want to name it, but we got it at an opportune time, and it was relatively dependent on the rural economy for its products, etc. And we got it at a time where valuations were attractive, and then after that, rural economy seems to have come back. We do have a bunch of the discretionary stuff, which we feel helps us offset what we don't own on the staple space. And we feel those ideas gave us more opportune times to enter into those stocks and play the rural recovery of demand that we are looking to see.
Got that, Rashi. Yesterday we had a market town hall, and we had 3 mutual funds CIOs with us, and we were trying to get some ideas, right? Pockets or buckets to look in, and micro themes, not the larger conventional themes. And there are so many now which are there, and they're not small exactly. It's not as if they're undiscovered or anything. Actually, if anything, most of these are richly valued, but these are faster growing segments of the market. So as we head into 25, you want to sort of lay out 1 or 2 themes, or just pockets where one should look for ideas in, which are differentiated, which can make one money.
So, like I said, I think if you look at some specific rural recovery stories, I think they're still not priced in fully. And I think that space on the consumption side is starting to see some recovery after quite a while. So there's a catch up of demand that we're expecting to happen. And that is part of what how we're positioned as well. I like the hospital space as well, and I think that has opportunity there with a lot of stocks looking attractive, or at least what we own is looking reasonably attractive in that space as well. Large cap financials, they've done private sector banks, they've done nothing for the longest time, and in a tough environment, in a tough operating environment, where credit costs on unsecured loans and credit cards, etc., starting to inch up, these guys know how to maneuver that field. They're experts at it, right? So you don't see the same kind of hiccups with them that you do with the smaller guys. And I think they continue to have the levers to navigate this environment, and they also have when they come down to fight for deposits on the ground, they make it tough for everybody else. So that's a bet I would continue with as well.
And rural recovery, just narrow it down one level more, one level closer. What exactly? I mean,
so you can look at some of the rural recovery on the staple side, whether you're looking at hair oils, where you can look at rural recovery on the auto side. I don't need to go down where over there. It's indicative enough. There are enough rural recovery plays on that front. Another place, actually, one of the only sectors on the NBFC side, which I think in this environment does really well, is gold financing.
Okay.
Because when you have, unsecured credit, which has become very difficult and tight for in terms of credit growth, when will somebody go out and hypothecate their gold? They're not going to do it if they're getting easy personal loans and easy unsecured loans.
Yeah, no, absolutely. And stocks there have done well. Muthoot, Manappuram, I reckon you're talking about names like Bajaj Healthcare and the hair oil companies, and maybe two-wheelers, because hospitals is pretty obvious. Pharma.
Which are smart enough for that, yeah. You know what I'm talking about, so it's okay.
No, I'm just, for our viewers, I mean, just to, indicate.
Life insurance as well. I think life insurance is another sector which has been reasonably left for dead, and I see that coming back pretty strong as well. So yeah, I think that's.
Have you seen our stories on life insurance? We've broken pretty much every one of them, and it's all. I mean, the regulatory environment has been in a bit of a turmoil over the last 2 years, and there is a lot changing, and I think that's the reason why stocks have not done well. So I don't know how that plays out. Maybe stocks have come into the value zone.
Prashant, that's exactly the point, right? I mean, we discussed this actually on your the Diwali special, that we pick stocks when there is some headwind to the sector, something that's going wrong. That's when you get them at the price that you're looking to get them at, right? Really good businesses going through something difficult. The regulatory environment, you're absolutely right, has been extremely tough for them over the last 24 months. But it's not the same for each company. It will play out in a very different manner for each company, depending on how they are structured, how their book is, how their distribution is, etc. Right? Everybody is not the same. So then that's our job to sit and figure which one of them is actually extremely attractive, and there are more than one. So that's part of the job.
No, absolutely it is. And we wish you the best of luck with that. Ritika, Rashi, thank you very much for joining us. It's a pleasure having you here on the program. And if you're sort of off on leave, happy holidays. Enjoy.
Thank you, Prashant, and Merry Christmas to all of you. And a Happy New Year.
And your team. And see you in the new year. Thank you very much. So that is Rashi from Ashmore with thoughts and some sort of ideas to ponder over. The last one was life insurance, as she put it. Well, we'll take a quick commercial break here, but as we do that, some snippets from a market town hall that I was referring to earlier. So Niket Shah, Rohit Shimpi, and you had Tahir Badshaw weighing in with their thoughts on the market. Slightly top-down. Listen.
As we start 2025, if you look at micro and macro both, so if you look at micro, earnings growth is kind of weakening out. From almost 35-36% earnings growth in mid-cap that we have seen in the last 4 years, we are now down to about 4 to 5%. We don't expect this to meaningfully move up, at least for 25 as such. On the macro side, I think clearly there are challenges as far as US is concerned. US has clearly articulated that there's going to be a $2 trillion cut on spending. And one really needs to see how that really shapes up as well, because that can have a meaningful impact on global markets. So if you look at the macro and micro, it looks like 2025 will be much more tougher year, probably in the last 5 years.
Private capex, that's also something which has been on the cards for a long period of time, especially at the time when we are probably confronted with a slower trajectory of government capex. We don't want it to slip significantly either, but private capex could probably come to the rescue. We've seen some initial signs. If you go by probably the a bottom-up assessment of the BSE 500, then the first half probably indicates that the capex for BSE 500 is actually up 15% year on year.
Earnings have not been very great over the last couple of quarters. We do think that is kind of pulled down by two factors. One is the monsoon issues, some of the election-related slowdown that we've seen. And we are actually hopeful that that comes back over the next few quarters. Typically, a capex upcycle or an earnings upcycle does not fizzle out as soon as we're probably seeing market experts predict at this point. So I think that's a little more durable theme that we're hopeful on. And the third one is sentiment, right? And you can't exactly predict markets, but you can tell the temperature of the room you're sitting in. And clearly for the last few years, last few quarters, markets have been kind of hot, right? If you look at retail investor sentiment or subscriptions in IPOs, etc., that gives us some sense.
Create effective strategies with insightful expert opinions. On the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back. 23,950 on the Nifty. Mitesh is with us for a few BTST calls. Mitesh?
On the index, nothing has happened, but on stocks, there's something which is interesting, and Muthoot is making a fresh high. So, that's something which has caught my attention. Weak market has done very well. So, we'll take a BTST with a very tight stop at 21.20 for targets of 21.75. And the other one which I like is on the negative side is HAL, which I would recommend STBT with a stop about 44.01 for targets of 43.50.
Okay, Muthoot and HAL are the two sort of names, trade-specific names, which Mitesh is recommending. By the way, just a couple of more names, if you will, Mitesh. K Fintech, and market is down 250. K Fintech is up 8%. And I think for the week, it is up some 15%. It should be a new high. Yeah, it is a new high. Any thoughts?
Prashant, it's met the targets on the upside and still going on in an overbought scenario. I think the only thing which I can suggest here is trail your stop losses now to about 1280, and that's still about 150, 10% lower from here. But the IT and the Pharma pack looks the only interesting pack to me. Rest, I think the market is slightly on the weaker side. So KF India, just trail your stop losses. They'll be slightly wider because of the movement which has happened in the last few days, and as you rightly pointed out, 14.5% up already this week. So just trail the stop loss. Let's see how much higher it can go. Difficult to give targets now.
Okay, another one which I think it would be a little difficult to give targets is Bajaj Care. Bajaj Healthcare, I think, right? I mean, say almost 600 now, zooming. And this week is a 40% gain.
See, one disclaimer that, I broke for 2 days back because the market was looking weak and the stock has since then also, rallied very strongly. So this stock, has completed what I would call as a classic rounding formation on the weekly and the monthly charts. The targets are slightly higher. 288, 290 was where the stock had bottomed out in May of 24, and the high was 500. So if you add that, it comes to about 700 plus levels. I did exit because of the Nifty view, but the stock still, I think, is heading towards 700, 720 zones.
Can we just have the stock up, please? It's a Bajaj. Yeah, there you go. That's the one. So maybe overbought, but you're saying Mitesh can head up to about 700 levels or so. Okay, since we're talking stocks, a few more. Chennai Petro, beaten down name, high was about 1300. Basically, it's halved. Today, it is up some 5.5–6%. Any signs of life here?
Prashant, one interesting observation. See, look at the price history. On the 18th of November, we got a closing low of 569 and the same low on 21st of November, 569. So, that was one bottom. And today we got a low of 562. So, it looks like, a very early stage of what is a classic technical double bottom reversal pattern. So the fulcrum is at about levels of 650, so it gets confirmed over 650. But if it clears 650, I think good chance that we are looking at 760, 780 happening over here as a reversal. So the stock is extremely oversold, is showing first signs of reversal. I'll keep this on my radar. Once it gets past 640, 650 zone, I think expect another 20% rally.
Last one, IOL Chemicals, Mitesh. Again, a reversal candidate. I don't know if it will do it, but again, recent low was about 340. It's moved about 100 rupees from there. 3-4 days. IOL.
That's right. There is some reversal for sure. I think again, look at this. The price, historical price movement. 360, 350 is an area where the stock since August of 23 has made about 5 or 6 lows. So it's bouncing back on that level again and again. This time the swing low was around 340, while the weekly closing was about 348. So this 360, 350 level broadly holds. And on the upside in the same period, it's peaked out on multiple times at levels of 500, 510. So I think it's just doing that range. Now maybe heading towards the upper end of the range after hitting the lower end. So heading towards 510.
Okay. All right. Thanks very much, Mitesh, for that. So those are lots of ideas, lots of stocks, trades. But just gives you a sense of setup as Mitesh is seeing it on some of these movers. And these are all, by the way, large volume-led gainers that we have on a day when the market is down about 1% or so. Well, earlier in the day, we spoke with a whole host of experts on perspective for global markets, because that is essentially what is driving at least today's cut. So just playing out some of those sound bites and see you on the other side.
What we saw from Chair Powell today is a bit more cautiousness on the outlook related to inflation. Some of that is due to stronger inflation that we've seen in some recent prints, but probably more broadly underneath the surface, it's more some anticipation of some potential upside inflation risk that may come from the second Trump administration. So if inflation continues to move down towards target, and if some of Trump's more inflationary policies are not necessarily put into play, I think you could potentially see even more cuts from the Fed next year. If the Fed stays higher for longer, that's going to create challenges for all of these other central banks to ease policy as much as we expect in our base case.
I think what maybe the markets got a little bit spooked of was a confirmation by the Fed that inflationary pressures are building, and that the change in the summary of economic projections and the change of the dots is leaning on the more hawkish side. But when I look at the sell-off and I look at what the Fed implications are with the totality to the underlying market thesis, which is earnings growth, the fact that we have broadening earnings growth that really for the past 2 quarters or so has been translating into increased price breadth, the past week or two outstanding, those trends are still there. Economic growth is still there. The reason that the Fed is pulling back a little bit is because growth is still very strong, and we're potentially worried about a combination of more pro-growth policies intersecting with the uncertainty of what tariffs could look like. And so to me, I think these sorts of pullbacks could be good buying opportunities.
I think there is still room ultimately for the interest rates in the US to continue to decline gradually. The labor market is starting to loosen up a little bit now. Inflation, although it has been a bit sticky, is moving lower in the US and to the Fed's target. So there shouldn't be much really in the way of further reduction in rates. So I think this move in interest rates appears to be a little bit more aggressive, and it's a knee-jerk reaction. Rupee will outperform its peers in Asia, but that doesn't mean that we won't continue to depreciate. So, for example, we're forecasting 87 for dollar INR by end of next year, which, given the pace of the move in the dollar, I mean, obviously that forecast is on track as we currently speak. And I think ultimately there's a few factors here. We believe the rupee is rich on a valuation basis.
I think currency is clearly weak, although rupee continues to be one of the strongest currencies on a relative terms as compared to even currencies like Singapore dollar and Indonesian rupiah. So while currency is weak, there is pressure on the currency, but Reserve Bank continues to manage the volatility in the market. It is still a possibility that Reserve Bank might cut rates, so February is live in that sense. But I think the pressure on RBI to cut rates in February in some senses actually lessened to some extent, as Fed has also backed off from its aggressive sort of rate cutting cycle in the next year.
Well, that's some opinion coming in on the markets. For us, Vishal Mega Marts has extended the fall. It's down 6.5% now. Sai Life Sciences, again a listing from yesterday, that's a bit subdued in trade. Paytm is weak. Nykaa is weak. Zomato is under pressure. So some of these new age tech companies are also, under pressure right now. In the large cap action, not too much. The Nifty's been very, very steady after that 1% fall that we had in the morning. Amrish Balika is now with us on the show now. Amrish, every time you come, you help us with one stock recommendation for our viewers. What is it for today?
Rima, today's stock is Schaeffler India. They manufacture high precision component systems, roller and ball bearings for automotives as well as industrial. Sectors which they cater to are automotive, cement, power transmission, mining, wind energy, agri, as well as industrial automation. EVs and railways, in fact, I would say especially Vande Bharat will be of major focus area and drivers for this company going ahead. And in the automotive sector, their products are used across, the internal combustion engines, hybrid, as well as the fully electric drives for their engine systems as well as transmission components. So management has guided that the EV business will be a key driver with a higher content per vehicle going ahead. And if you look at the performance of the company, it's been quite consistent in the last few years, especially the last few quarters, almost debt-free with about 32% dividend payout, which is extremely good. So expecting an EPS of about 98 for the calendar year 26. They follow calendar year and not the financial year. And my target for this company is 4410.
4410. That's the target on Schaeffler India. We'll get into a break. Amrish, do stay on. We'll come back with more.
बजकर 55 मिनट पर नीलकमल नाम की एक जो प्रवासी वेसल थी उसको नौदल की एक बोट टकराने से एक बहुत बड़ा अपघात हुआ है, एक्सीडेंट हुआ है। इन 13 लोगों में 10 सिविलियंस है और 3 नेवी के लोग हैं जिनकी मृत्यु हुई है। जिन लोगों की मृत्यु हुई है उनको सीएम रिलीफ फंड से 5 लाख रुपए दिए जाएंगे और ये जो पूरी घटना है इस घटना की तफ्तीश ये पुलिस भी करेगी और नेवी भी करेगी।
जब लक्ष्मण मूर्छित हुए थे तो हनुमान जी उनके लिए संजीवनी बूटी लेके आए थे। तो आज दिल्ली के बुजुर्गों के लिए मैं संजीवनी योजना का ऐलान करने जा रहा हूं कि 60 साल से ऊपर के हमारे जितने बुजुर्ग हैं उन बुजुर्गों का पूरा इलाज फ्री करवाया जाएगा। इसकी चुनाव के बाद हम योजना लेके आएंगे, योजना पारित करेंगे। वो चाहे सरकारी अस्पताल में इलाज कराना चाहें, चाहे प्राइवेट अस्पताल में इलाज कराना चाहें, उनका पूरा इलाज फ्री कराया जाएगा। इसमें कोई बीपीएल, एपीएल, टीपीएल, आरपीएल कोई लिमिट नहीं होगी। सबका इलाज, चाहे अमीर हो चाहे गरीब हो, सबका इलाज मुफ्त कराया जाएगा। और कोई अपर लिमिट नहीं होगी। आप जितना आपका बीमारी पे खर्चा आएगा उसका सारा खर्चा दिल्ली सरकार वहन करेगी।
Okay, welcome back. There's what, 5 minutes to go for the markets to come to a close, the stock markets. But well, let's talk about the rupee as well, right? Which has now finally crossed the 85 mark to the dollar. Dollars going up and everything else is, of course, under pressure. Lata is here to put this into some context. Lata, what are you picking up?
Well, the rupee should have crossed the 85 mark even earlier, considering the amount of selling that's happened in the equity market and the dollars that have been taken out of the country. But the Reserve Bank was resisting it. It normally doesn't resist when it is a global trend. And that's what happened with the Fed sounding more hawkish than what the market expected. Market was expecting that the number of cuts will go down from 4 to 2, but they were not expecting the Fed to say that. They were expecting the Fed to say 3 for 2025, but the Fed, almost coming in line with the market, has kind of shocked, and you saw the dollar index go to 108 plus, and that led to about 15 to 80 basis point depreciation in all currencies. And the rupee was still the outperformer with about 15-16 basis point cut. It crossed the 85 mark and there was some stability around that 85.07 mark. It appears that most of the long dollar positions got squared off at that point, and further demand for dollars were not there. Also, the fact that probably the trade deficit in November may not be as ugly as was earlier presented because of a possible double counting of gold was also something that worked a little bit in favor of the rupee and against too much of dollar buying. But the trend for the future, for the next quarter, for the next year, quite clearly is still downhill for the dollar. The expectation is that you must see the dollar go at least to 85.50 by the time the fiscal year ends. By then, one will know what are exactly the Trump tariffs. And for the end of the year, 2027, the emerging number is 87, which is about a 2.5% depreciation. The argument being that China in 2018, to counter the US tariffs, had depreciated its currency by 13%. And at that time, there was nothing like 60% tariffs. So now if it is anything as bad as even 20%, you should expect the yuan, renminbi to go to 8 to the dollar, and that would mean a 2.5% depreciation at least for the rupee. So 87 is the new number that the street is looking at.
No, and it's this orderly, maybe orderly kind of a slow-moving, and of course, RBI, as you said,
I think it's more orderly than what the market would like, and what perhaps the real effective exchange rate would indicate. There is a lot of disgruntled noises in the market saying that where is the need for the Reserve Bank to protect the currency so much?
And they're not standing in the way, which is...
They were. Today, they don't usually when it's a global move.
No, as you said, the yuan is, so you've got to stay competitive.
Today
as well.
it is
That's a
in
big one.
step.
Absolutely. Radha, thank you very much for that. Well, that's a currency in picture. By the way, Ambarish, of course, is still with us, and Schaeffler was his pick for today. Ambarish, but there are, I was just reading through a list of winners today. The Nifty is down 250, but there are lots of interesting sort of stocks which are moving. I don't know if they are firm turns really. So look at something like IOL Chemic Pharma. I was doing a technical check with Mitesh earlier. Chennai Petro. These are all stocks. IOL is down 50% from its highs. Chennai Petro is another one which is actually far off the highs, but they're up today. Anything looking interesting on the upside on a day like today?
No, among these two, clearly, I mean, I wouldn't buy at the current levels because I see them as just a sort of a bounce back. Because overall, if you talk of the markets, I mean, the fall which we started from 26,000 plus levels, I mean, we had a good correction, then close to 1,000-point bounce, and now again we started the downward journey. Because I mean, as we are coming closer to the Q3 earnings, which should start by second week January. Again, I think like there'll be a decent amount of disappointments which will come up again, just like the way we saw for Q2. And I don't think we should forget about January 20th, Trump's inauguration day, because that's when you'll have a continuous amount of additional volatility from whatever sort of statements come from there. You don't know as to how the tariffs will play out. So I think all these issues are there, because of which I really don't see much of an upside immediately for the markets. The bounce back is done. I think next we should see possibly either 1,000, 1,200 points correction from these levels.
By the way, do you own or track names like Centum, which I think is also an EMS company, right? Avalon, Centum.
Yeah, but I don't track that, nor do I have that in my portfolio.
I see. This recent one, Black Buck, Amrish, recent listing.
Yeah, in fact, there have been so many new listings, but then what we have been doing is more of investing in the IPO and possibly booking out, because quite a few of them have been giving us extremely good sort of returns within the first couple of days. So this is what I've been, in fact, advising my clients is to apply for the IPOs. If you get a decent allotment, wait for a couple of days, book your profits. We can take a fresh call later on. 40%
is the new listing rule, seems like, right? At least a rule for this week. Everything is up for clockwork, to, 30, 40%. 63 moons, Amrish, any thoughts here? Okay, I think we'll just do the market closing and come back with Amrish on the other side on markets forward, and we'll put some of these questions to him and continue the conversation. So we end down about 240 points on the Nifty. The Bank Nifty ends down about, I think, 500 points or so, actually more, 530 odd points or so. The mid cap and the small cap indices also end lower, but just 0.5% or so. And the small cap is down half. Let me just look at what the mid cap ends down, 0.25%. So nothing actually. Just another regular kind of day, not the scary red, flashing red kind of, morning that we began with. And that's good. The Nifty, by the way, the technical levels, if you're a believer, at least in the near term, in some of these numbers, 23,900 didn't break after the initial kind of swoon. For the Nifty Bank, that 61.8% retracement, we broke it intraday, then came above it, and then never looked back after. Market breadth, again, 1,100 up, 1,700 down, nothing really dramatic in that sense. So all in all, can't really complain in that sense. Although they were, of course, volume-led losers as well, and numerically more down than up. So, but I don't think one has to really, beat oneself up over a day like today. Could have been far worse. This is largely in line with what Asia actually left us with in terms of cuts, etc. So 0.75%, 1%, and we are about in the 1% zone as well. I think we're going to wrap up here on closing bell from all of us here. Goodbye. Thank you for staying with us, but stay with us. Because we'd like to get you markets forward. Rima and I'll take that program forward. Amrish, of course, is with us, so you'll see him on the other side.
But the word reciprocal is important, because if somebody charges us, India, we don't have to talk about own, if India charges us 100% and we charge them nothing for the same, they send in a bicycle and we send them a bicycle, They charge us 100 and 200. India charges a lot. Brazil charges a lot. If they want to charge us, that's fine, but we're going to charge them the same thing.
Stock markets decline across the board and of course across the world as well. The US Fed signaled plans to slow its rate cut plans in 2025. Nifty Sensex decline 1% odd. Broader markets also trade slightly lower, but compared to the large caps, broader markets did much better. The rupee has sunk to a historic low of 85 against the USD. All Asian currencies were also weaker after a sharp rally in the USD.
The US Fed cuts rates by 25 basis points and says it's likely to cut rates only twice in 2025 versus an earlier estimate of 4 cuts. Fed Chair Jerome Powell says central bank would be looking for progress on inflation. Cautious commentary weighs on global equities.
SEBI tightens rules for SME IPO, says only entities with an operating profit in at least 2 of the previous 3 years will be allowed to file for an issue. Caps the offer for sale portion at 20% of the issue size. Also bars companies from raising funds to repay loans to promoter entities. Hello and welcome to a fresh new edition of Markets Forward, your go-to program as we prepare you for the next trading day. Today could have been a lot worse. I'm going with that. Because it could have been, and it was not nearly as bad as what we imagined before markets opened this morning. I'm Prashant. With me, my colleague Rima. Rima, hi.
Hi. So markets slumped nearly 1% on the benchmark indices. The Nifty ending below 24,000. But as you said, after that morning gap up, it didn't recover. After the morning gap down, it didn't recover, but it didn't even fall further.
Yeah,
it stayed where it was.
There was no further damage, really.
No further damage.
And actually, if anything, through the course of the day, you were seeing lots of these mid-caps bouncing. And there was lots of that happening. And we'll get to stocks and what moved with hormones in just a bit. But, I think the intraday is, let's just go back to the Nifty, tells you the story the gap down, first 45 minutes of volatility, and then, of course, it flatlined completely all the way into the close and ended with a 1% cut. The Nifty Bank will come up next, and similar kind of picture. Nifty held 23,900, which is a support which we highlighted in the morning. The Nifty Bank did not. It did break intraday, an important retracement, but then it came above it and then never looked back. Mid cap and small cap much better, relatively speaking. 0.5%, 0.75% cuts there. 1,100 stocks higher, 1,700 stocks lower on the NSE. And it was in line. I wouldn't say just another day, but actually in some ways it was just another day. Some amount of profit booking, but also a day in which there were lots of mid caps which went up on a tremendous amount of volume. So there was that as well. So it was not everything down, although it looked like it was everything down early in the morning. But that was just the first 45 minutes, as I said, and things improved quite a bit.
Indeed, and the advanced decline ratio was not as bad, right? We had about 2 stocks closing in the green for 3 in the red. Pharma was a standout sector on the way up. The Nifty Pharma index ending with a gain of more than 1.5%, with names like Dr. Reddy's, Cipla, Sun Pharma, Apollo Hospitals all higher. BPCL, in fact, all oil marketing companies were also up and about in trade. Two-wheelers saw a little bit of green going for themselves, but on the way down, IT, banks, real estate, metals, all under pressure. But to talk about individual stocks, it's over now to Hormuz for all the stock movers of the day.
Well, it was a day where the broader market staged a bit of a comeback, still ending in the red, but the red is called an outperformance in the market that we had today. But the focus was on tech stocks, considering the sell-off that we had. It was a slightly mixed picture. We'll get to the positives in just a bit, but the stocks that ended in the red, LTI Mindtree was a standout, ending at the lowest point of the day, 5% down today on LTI Mindtree. Emphasis, the heavyweights TCS and Infosys also saw losses of close to 2% in today's session. A sector that held out today was Pharma, opened lower but recovered swiftly into the green and stayed green, ending at the highs of the day. Ipca Laboratories was the top performer there, 5% higher. Positive brokerage commentaries on DRL and Abbott, and also good gains for JB Chemicals and Pharma and Lupin as well. And some news stocks that were impacted due to the news flow. SpiceJet, some news coming in earlier this morning, the stock ending 9% higher. Some positive brokerage commentary on MTAR Tech as well, 5% higher there as well. Mazda was after an order win, ending 6% higher in today's session. DOMS Industries, block deal, lock-in periods ending as well. And Stovecraft, after the partnership with IKEA, saw a bit of a spike but ended off the highs of the day. But stocks that ended at the 52-week low, some big names there. Asian Paints continues to grind lower, as does Nestle and Credit Access Grameen, of course, because of the MFI stress. But on the flip side, there were stocks that ended at record highs despite the fact that the markets were slightly weaker. KFin Tech is one of them. Positive brokerage commentary yesterday, building onto those gains. Oracle Financial and Coforge and the mid-cap IT space that I was mentioning about, these are the stocks among the IT space that outperformed today. And BSE continues to grow from strength to strength. Back to you guys.
Thank you very much for that. IT will be in focus tomorrow because Accenture reports their numbers. It will be the Q2 quarter for. Sorry, it'll be the Q1 quarter for them. They had guided for a 3 to 6% revenue growth for FY25. Will they change that? And even on generative AI, because Accenture gives you generative AI bookings and the kind of revenues that it does. So watch for IT stocks tomorrow. But let's bring in our guests, Amrish Balika, Indian market expert, and Richard Jain, Vice President of Equity Research at Motilal Oswal. Richard, 4 days of losses on the trot. Have you gotten into oversold territory? Should we expect a bit of a rebound now tomorrow?
Yes, very good afternoon, Rima. Very good afternoon to everyone. Well, if you look at last few trading sessions, in fact, in this entire week, we have seen correction in the benchmark indices, but the broader markets have not seen that kind of sell-off. In fact, if you look at week-on-week returns, Nifty is down by around 3% in this week. Bank Nifty is down by around 3.5%, but the mid-cap index is not even 1% down. So this clearly indicates that there has been a good buying interest in the broader markets rather than the benchmark or the frontline stocks. So we do not expect any significant down move in the indices because of this buying interest which has been seen. The 200 EMA last time when the markets corrected, it took support around its 200 EMA, and that 200 EMA is placed around 23,700. So maybe in the near term, 200, 250 points more downside could be seen. But I think that 200 EMS should act as a support, and we should see some momentum resuming from there. So as of now, even we are advising our clients to take a stock-specific approach, I think, where there are better trading opportunities seen rather than the index. And around that 23,700 mark where 200 EMA is placed, if comes, then the risk-reward ratio would become favorable to to take some contra buys in the index as well.
Okay. Those are levels. And gentlemen, good afternoon. Ambrish, the market going to be a little tougher for the next 2 weeks into the end of the year, or you think looks good?
So it looks like I was saying earlier, I think that bounce back is done. We saw a very good, close to 1,000-point bounce from the lower levels which we had seen earlier. I think that is done and dusted. And now, going ahead, especially the Q3 numbers, I don't think we will have any positive surprises. I think it will be more of the negative news there. So I think that is what will create the pressure. And also Trump inauguration on Jan 20th. I think that's something else which most of us will be looking forward to, in the sense with some amount of fear, because you don't know as to how much of volatility he's going to add, and the tariffs which they'll introduce. So I think one needs to just wait and watch for a while. So the way I see it is, I don't see much of an upside from here. We can see a decent downside, but at the same time, I would say utilize that downside to buy and get your portfolio in shape, because possibly if you're talking of the next 2 to 3 years, this could be like a window of opportunity where you can actually buy your favorite stocks at a decent discount.
Okay, let's tell our viewers now what led to the sell-off, the reason behind the sell-off today, and that is the Fed shocker. Now, Federal Reserve, on expected lines, cut interest rates by 25 basis points. But Chairman Jerome Powell indicated that going ahead, there will be fewer rate cuts in 2025. Only 2 rate cuts next year versus, the Fed's own guidance of 4 cuts and consensus expectations of 3 rate cuts. And this weighed on markets worldwide. Steve Leisman joins in.
The Fed did exactly what I guess I said the Fed was going to do, which is the rate cut today and then project 2 more next year. But I think there's an interesting thing setting up. Let's listen to what Powell said about how restrictive he believes the Fed still is now.
I would say we are, though, in a new phase in the process, as I said. So. And that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation.
So he had said earlier that they're significantly less restrictive now than they were before, but still meaningfully restrictive. And this sets up this debate. I'm going to call it Powell and the Fed against Gundlach and the markets, which is that if you think the Fed is meaningfully restrictive, as Powell says he is, then he's going to drive down inflation further and he can do further cuts. But Jeff, obviously, and the market itself expressing some pessimism about whether or not the Fed policy rate is one that will drive down inflation further. I think that's the battle now for 2025.
What we saw from Chair Powell today is a bit more cautiousness on the outlook related to inflation. Some of that is due to stronger inflation that we've seen in some recent prints, but probably more broadly underneath the surface, it's more some anticipation of some potential upside inflation risk that may come from the second Trump administration. So if inflation continues to move down towards target, and if some of Trump's more inflationary policies are not necessarily put into play, I think you could potentially see even more cuts from the Fed next year. If the Fed stays higher for longer, that's going to create challenges for all of these other central banks to ease policy as much as we expect in our base case.
Well, that is Robert Sockin, economist at Citi, with perspective. And of course, Steve Leisman putting the entire Fed action in perspective. That's a global story. A lot of the sort of top stories today are macro-ish and rupee is another one which we want to address. 85 marked to the dollar, even as all currencies fall in the face of a sharp rise in the dollar. The dollar index itself passed the 108 levels. Lata is here with sort of an update on what's happening with the currency and, of course, what the chatter is. Lata, over to you.
Rupee should have crossed the 85 mark even earlier, considering the amount of selling that's happened in the equity market and the dollars that have been taken out of the country. But the Reserve Bank was resisting it. It normally doesn't resist when it is a global trend. And that's what happened with the Fed sounding more hawkish than what the market expected. Market was expecting that the number of cuts will go down from 4 to 2, but they were not expecting the Fed to say that. They were expecting the Fed to say 3 for 2025, but the Fed almost coming in line with the market has kind of shocked, and you saw the dollar index go to 108 plus, and that led to about 15 to 80 basis point depreciation in all currencies. And the rupee was still the outperformer with about 15-16 basis point cut. It crossed the 85 mark and there was some stability around that 85.07 mark. It appears that most of the long dollar positions got squared off at that point, and further demand for dollars were not there. Also, the fact that probably the trade deficit in November may not be as ugly as was earlier presented because of a possible double counting of gold was also something that worked a little bit in favor of the rupee and against too much of dollar buying. But the trend for the future, for the next quarter, for the next year, quite clearly is still downhill for the dollar. The expectation is that you must see the dollar go at least to 85.50 by the time the fiscal year ends. By then, one will know what are exactly the Trump tariffs. And for the end of the year, 2027, the emerging number is 87, which is about a 2.5% depreciation. The argument being that China in 2018, to counter the US tariffs, had depreciated its currency by 13%. And at that time, there was nothing like 60% tariffs. So now if it is anything as bad as even 20%, you should expect the renminbi to go to 8 to the dollar, and that would mean a 2.5% depreciation at least for the rupee. So 87 is the new number that the street is looking at.
Ladha, thank you very much. 87 is the new number the market is looking at. Ambrish, any implications for equities?
It would, because clearly rupee weakening would clearly, add to inflation no doubt. But at the same time, we should see the exports benefiting whenever the rupee depreciates. But again, the way things are, we don't know as to how the tariffs will play out post Jan 20th. So that's something to be watched out for. Otherwise, it should be positive for exports.
What are your thoughts in the top gainer today? That's Dr. Reddy's. Now, Dr. Reddy's has been an underperformer. Now, this year itself, Dr. Reddy's has underperformed the Nifty Pharma by nearly 25%. And the key reason for that is because the company is going to lose out as the generic Revlimid opportunity comes to an end, very soon. But do you think that, the pessimism or the correction is overdone? Nomura seems to believe, that, and which is why they upgraded the stock today. But where do you stand on Dr. Reddy's?
No, I think it was a bit overdone. And at the same time, like what we have also noticed as far as US FDA is concerned, again, talking about Dr. Reddy, things have been quite clean and clear. So that also, I think, should play out. So I think it's still time to stock up Dr. Reddy. It should go to levels of about 1475, 1500 levels.
Ruchit, any specific trades you want to highlight? I mean, there's so many movers, both on the upside and downside, and strong ones. Particularly, actually, I want to say on the upside because, we were discussing with Ambrish earlier, K Fintech, Chennai Petro, IPCA, IOL, the small EMS companies, Avalon, Centum, and many more. 63 Moons has had having a terrific run over the last 2-3 months. From $450, it's now, of course, come up to about 1,000 plus. Reliance Power. I can go on. Anything interesting to your mind, chart-wise?
So, Prashant, yes, a lot of mid-cap and the small-cap stocks are continuously showing some positive move. But one segment, I think, which has been consistently heading out, in the corrective phase is the hotel space. If you look at stocks such as Indian Hotels is there, Chalet Hotels is there, even EIH Limited is there. So I think this is one sector where the price move, price volume action is quite bullish from a technical perspective. For a fresh trade, I think if one has to look, then one can look at Chalet Hotels, where we recently saw a breakout last week itself. from its previous swing high resistance, which was supported by very high volumes. And you look at last 2 or 3 days when the markets have corrected, we have not seen any kind of price-wise correction in shallow hotels. So I think the structure is quite strong. Short to medium-term traders can look for buying opportunities in shallow hotels over here with a stop loss below 950 and expect target somewhere around 1150.
Okay, we will thank Ambarish and Ruchit for joining in. Get into a short break. On the other side, we'll get you some market outlook as well as the big events to watch out for. Stay tuned. Welcome back. You're watching Markets Forward. Now, in the latest board meeting, market regulator SEBI approved a series of key measures which are aimed at protecting investor interest and improving various aspects of market regulations. So there were quite a few on SME IPO, unpublished sensitive information, increasing disclosures. Yash joins in for the key highlights. Yash.
Well, Reema, to be precise, about 19 points were cleared by market regulator SEBI in its board meeting yesterday. One that caught the most amount of attention was the regulations, rather the tightening of regulations around small and medium enterprises IPOs or SME IPOs. That's been a point of concern for market regulators. Statements coming in from the regulator time and again in the recent past. A few things have been done by market regulator SEBI, which were an outcome of the meeting yesterday. They've said that a company which has an operating profit of 1 crore or more for the 2 preceding years out of the 3 years can only be eligible to bring out an SME IPO. They've said that the OFS portion of the IPO cannot exceed 20% of the issue size. Also, if the promoters want to repay any kind of debt through the funds raised via the IPO, then such IPOs won't get SEBI's approval. The third one, funds for general corporate purposes will be capped at 15% of the offer size or 10 crore rupees, whichever is lower. Selling shareholders can't sell more than 50% of their holding. Promoter lock-in in excess of the minimum promoter contribution will be locked in, 50% of it for 1 year and the balance 50% for the next 2 years. Allocation for HNI or NII category will be through draw of lot methodology. Also, related party transaction norms will be applicable on SMEs as well, something which we see on the companies listed on the main board today.
Thank you very much for that. And before we wrap, we'll get you the key market events to watch out for tomorrow. Abhishek joins in.
Well, Reema, to begin with respect to India, tomorrow a monetary policy meeting minutes will be out. Watch out for that. And RBI will give out the foreign exchange reserve data. Last time around, it was at $654.9 billion. With respect to Euro area, watch out for consumer confidence index. It is estimated at minus 14% versus minus 13.7% that it had come out last time. Some of the stocks will be going ex-bonus. Watch out for that. Bharat Seeds as well as Link Limited Limited. We have a new listing tomorrow, which is International Gemological Institute, and some of the board will be meeting for fundraise approval of entities like Restaurant Brands Asia. They will consider fundraise via QIP. Piramal Enterprise to consider public issuances of NCDs, and Muthoot Capital as well to consider public issuances of NCDs. And last but not the least, watch out for Bajaj Auto. They will unveil the next generation Chetak electric scooter. Back to you.
All right, Abhishek, thank you very much for that. So those are a couple of things to watch. Last day tomorrow, and as we are slowly but gradually but firmly moving towards the end of the year. From Rima and me, it's goodbye. Thank you very much for staying with us on another edition of Markets Forward. We are back with more news and updates on the other side.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay, and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen. We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan. Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Stock markets decline across the world after the US Fed signals plans to slow rate cuts in the new year. The Nifty declines over 1%. The Sensex drops below 80,000. The rupee sinks to a historic low of 85 against the US dollar. All Asian currencies weaken after a sharp rally in the greenback. Outstanding liabilities of state governments across India declining, but it's still above pre-pandemic levels as the RBI warns against loan waivers and subs like free electricity and allowances to unemployed youth and women. Also cautions against too many central government schemes which reduce the flexibility of state governments to spend. IPO frenzy continues on the Lal Street. 5 new IPOs open for subscription, aim to raise over 2,900 crore rupees among them. 15 companies have already cumulatively raised 24,950 crore rupees so far in December, a record-breaking month for IPOs. SEBI tightens rules for SME IPO, says only entities with an operating profit in at least 2 of the previous 3 years will be allowed to file for an IPO. Caps the offer for sale portion at 20% of the issue size, also bars companies from raising funds to repay loans to promoter entities. JSW Infra unveils a 30,000 crore rupee capex plan for up to FY30, plans to expand its cargo handling capacity to 400 million tons per annum. The expansion strategy includes brownfield projects at existing ports as well as greenfield developments. After Britannia, Parle Products bites the bullet as shrinkflation makes its way back into FMCG, decides to hike prices by a minimum of 5% across the board to cut grammage on entry-level packs by 5 to 10%. High drama outside Parliament as Congress and BJP MPs accuse each other of resorting to violence. 2 BJP MPs are taken to hospital and Parliament is adjourned following the tumult. Helicopters and divers scour the waters of the coast of Mumbai for survivors after 13 people were killed in a freak accident. Mumbai police registers a case against a naval speedboat after it collides with a ferry carrying over 100 people from the Gateway of India to the Elephanta Caves. Well, let's head to the top story this evening. Markets across the world have seen red after the US Federal Reserve signaled fewer rate cuts going forward. Now, even as the Fed delivered a 25 basis point rate reduction on expected lines, the commentary was fairly hawkish. Responding to questions at the press conference, Fed Chair Jerome Powell said that the central bank would look for progress on US inflation and moving slower on rate cuts. A cautionary rate cut outlook from the Fed has prompted a sell-off on Wall Street. Asian markets were not spared either, and back home, the Lal Street felt the impact of the Fed jolt. Both the Sensex and the Nifty ended in the red. All sectoral indices, with the exception of the Nifty Pharma, ended the day with losses. Prashant is standing by now. Prashant, that hawkish commentary coming into the red and leaving global markets deep in the red today.
Well, we woke up with flashing red lights, right? I mean, you had the Nasdaq, which was down 4%, 10-year, 10 basis points higher, dollar index 108 passed. And of course, the Fed sounding much more worried about inflation once again, as opposed to being worried about growth. 2 cuts in 25 as opposed to consensus of 3. If you believe some, it would have been 4. Now just 2. And that's the reason why we, of course, started with a big swoon. The Nifty Bank, the other indices all started sharply lower. But the first 45 minutes, 60 minutes is when you had all the action. And then things stabilized. Technically, in the near term, the Nifty held on to 23,900. The Bank Nifty held on to the 61.8% retracement of the recent rise. And these are good signs. Advanced decline was nothing alarming. 1,100 up, about 1,700 down on the NSE. So these are numbers we can live with. It was, of course, far better. Of course, remember that the Nifty already lost about 700 points in the last 3 days coming into the Fed decision. So that, of course, one must keep in mind. But in any case, it was not as bad as what pre-9 o'clock, pre-9:15 GIFT Nifty indications were. The other indices, mid-cap and small-cap indices, we ended with about 0.5%, 0.75% cut, nothing large, regular kind of down days. Sectoral losses, defense, IT, private banks were three areas where they were concentrated. On the Nifty large caps, Bajaj Finserv, JSW Steel, Bajaj Finance, Asian Paints were the losses. In terms of gains, Dr. Reddy's, BPCL and Cipla were the gainers. Some minor news flow here and there, but nothing very large. In the broader market, I'll start with what was down. SI Life, a big gainer, 40% yesterday listing. Today gave up gains. DOMS, LTI Mindtree, Cummins India, Vaibhav Global, ABB, Craftsman, Triveni Turbine, Jubilant Engraver, Acme Solar, Zaggle, which sold a block yesterday, was down about 5% as well. Some of them, of course, have been big winners as well. But don't get disheartened, because there were lots of big gainers as well. On a day like today, with volumes. K Fintech was one of them, Chennai Petro, Ipca Laboratories, IOL Pharma, Avalon Centum. These are small EMS companies. Kernex, Blackbuck, which has basically doubled in the last 1 month. It's a recent listing, and there was a Premier Explosives, which stood very, very well on a day like today. I think it will be important, whatever we say, to track macro US markets because of what the Fed has done. One view is the Fed's changed the game and we should expect much higher interest rates. The other view is that it's temporary and things will settle down faster over the next couple of days. So we just have to track those things closely to track the trajectory here back home.
Yes, we will. Prashant, many thanks for joining us. And in fact, here's the statement that's moving markets worldwide. US Fed Chief Jerome Powell signaling fewer rate cuts in 2025. Listen in.
We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation, and that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
Well, that's the Fed chief there, but let's head back home. The rupee breaching the 85 to the dollar mark for the very first time. This after the dollar index strengthened following that hawkish outlook from the Fed. Indian bond prices also fell, and so did other Asian currencies. Latha is here now with the details. Latha, 85 gone on the rupee. What are the signals that the market's picking up on?
Rupee should have crossed the 85 mark even earlier, considering the amount of selling that's happened in the equity market and the dollars that have been taken out of the country. But the Reserve Bank was resisting it. It normally doesn't resist when it is a global trend. And that's what happened with the Fed sounding more hawkish than what the market expected. Market was expecting that the number of cuts will go down from 4 to 2, but they were not expecting the Fed to say that. They were expecting the Fed to say 3 for 2025, but the Fed, almost coming in line with the market, has kind of shocked, and you saw the dollar index go to 108 plus, and that led to about 15 to 80 basis point depreciation in all currencies. And the rupee was still the outperformer with about 15-16 basis point cut. It crossed the 85 mark, and there was some stability around that 85.07 mark. It appears that most of the long dollar positions got squared off at that point, and further demand for dollars were not there. Also, the fact that probably the trade deficit in November may not be as ugly as was earlier presented because of a possible double counting of gold was also something that worked a little bit in favor of the rupee and against too much of dollar buying. But the trend for the future, for the next quarter, for the next year, quite clearly is still downhill for the dollar. The expectation is that you must see the dollar go at least to 85.50 by the time the fiscal year ends. By then, one will know what are exactly the Trump tariffs. And for the end of the year, 2027, the emerging number is 87, which is about a 2.5% depreciation. The argument being that China in 2018, to counter the US tariffs, had depreciated its currency by 13%. And at that time, there was nothing like 60% tariffs. So now if it is anything as bad as even 20%, you should expect the renminbi to go to 8 to the dollar, and that would mean a 2.5% depreciation at least for the rupee. So 87 is the new number that the street is looking at.
Wow, 87 is the new number that the street is watching for as far as the rupee is concerned. Now, Jhunjhunwala family-backed healthcare services provider Inventress Knowledge Solutions made a strong debut on the exchanges. Its shares listed at a premium of nearly 43% to its IPO price of 1,329 rupees. The company's issue was subscribed 53 times, with qualified institutional buyers leading the subscription. And speaking of IPOs, 5 main board companies kicked off their journey to Dalal Street today. They are aiming to raise a total of over 2,900 crore rupees. DAM Capital Advisors is eyeing 840 crore rupees via complete offer for sale. Engineering and construction company Transrail Lighting is looking to raise 839 crore rupees. Their IPO is a mix of a fresh issue as well as an offer for sale. The other 3 companies are wastewater treatment solutions provider Concord Enviro Systems, Gujarat-based Mamta Machinery, and Mumbai-based Sanathan Textiles. So that's the IPO pipeline over the week. JSW Infrastructure has announced a 30,000 crore rupee capital expenditure plan for FY25 to FY30. The investment aims to increase JSW Infra's cargo handling capacity to 400 million tons annually by FY30. The expansion strategy includes brownfield projects at existing ports as well as greenfield developments. Now, after Britannia, Parle bites the bullet. Amid signs of shrinkflation in the FMCG sector, Parle has decided to hike prices by a minimum of 5% across the board. Shilpa is standing by now to take us through the details, the cookie crumbling for Parle, Shilpa, so to speak.
Yeah, well, you know, your Parle G, which is the most consumed biscuit in India, is actually set to get dearer. And it's not just biscuits. Rusk, cakes, munchies are all going to get expensive as Parle is rolling out a minimum of a 5% price hike across the board. And this is likely to go up to 10%. Now, when the next time you open your biscuit packet, you may actually find fewer biscuits. And this is a result of shrinkflation, where apart from hiking prices, grammage is also being cut in low unit and entry level packs of Parle's products. And this is by about 5 to 10%. In fact, your 5 rupee Parle G biscuit could become as small as what a 2 rupee pack used to be earlier. And this comes close on the heel of Britannia also saying that it hiked prices in the second quarter and it will hike prices by 4 to 5% in the next 2 quarters. This will be across biscuits, rusk, cake, etc. Now, these price hikes are on the back of rising input costs. Flour, sugar, cocoa, all of these which go into making our biscuits have been getting expensive. And even their packaging costs have risen quite a bit. A larger impact has been due to the hike in import duty on palm oil as recent as September, and that has pushed up its cost overall for these companies by about 45%. Now, the rising input costs are set to eat into our household budgets overall because it's not just biscuits or snacks. Consumer companies across the board are hiking prices. So the next time you go to buy your daily, weekly or monthly essentials, be prepared to pay at least 10% more. Back to you.
All right, Shilpa, many thanks for joining us. So price hikes coming in there for your favorite biscuit. Now, India's antitrust regulator has raided offices of alcohol giant AB InBev, in which it sells popular beer brands like Budweiser and Hoegaarden. Reports suggest that the move came amidst an investigation into allegations of price collusion with retailers in southern states. The raid took place in Hyderabad and targeted retailers in Telangana. According to the CCI, government licensed retailers of liquor in certain areas in Telangana appear to have entered into arrangements among themselves to sell only the products of AB InBev and exclude products of competitors like United Breweries, Carlsberg and Bira. The centre has proposed a new law to ban all unregulated lending by making it a cognizable and a non-bailable offence. Sapna standing by now to take us through what the draft bill says. Sapna.
Well, this is an important draft bill that has been brought out by the centre a few days back. And this entire proposal or this entire law, the new act, is going to roll out in consultation with the state governments. So basically, the 2 to 3 major aspects or key takeaways from the proposed law. One, the plan to ban all kinds or any type of unregulated lending. To ensure this ban, it's being said that unregulated lending is going to be a cognizable and a non-bailable offence. And basically within that, this is liable to imprisonment. Basically, unregulated lenders are liable to a prison term of up to 10 odd years. So the government is making it very stringent. Their objective is very clear. And it's going to be a complete clamp down on unregulated lending, so to speak. The second aspect, of course, is also the fact that the centre is going to have an online database of all kinds of lenders who are operational within the country. So if there's any lender which is not covered under any of the 20 odd acts mentioned in the first schedule of the Constitution, ranging right from the RBI Act to the Banking Regulation Act to the Chit Funds Act or to State Money Lenders Act, if any of the lenders are not covered under that, then they have to report to this authority, which will be in charge of this online database on lenders operating in the country, and that will have to be taken on board. Any lender who is not registered or not covered under any of these 20 acts is an unregulated lender, will not be allowed to do any lending business. If he does, he or she does, or the entity does, or the association does, they're liable to imprisonment. That's the second aspect. Third, of course, we'll have to wait and watch and see how this really progresses. This is basically a fallout of what the Reserve Bank of India panel had said way back in 2021. It had been looking into the practices of digital lending, and it had said a certain set of measures are required to kind of curb these kind of unregulated lending practices, including a legislation to ban this kind of unregulated lending. I think that's probably what the center has in mind, and they're trying to go ahead with it. We'll have to wait and watch and see what the final shape looks like.
Sapna, many thanks. Now time for us to head into a break, but up next, outstanding liabilities of state governments across India declining, but still above pre-pandemic levels, says the RBI. More on that when we return.
Live on YouTube at CNBC-TV18, weeknights at 7 p.m.
बजकर 55 मिनट पर नीलकमल नाम की एक जो प्रवासी वेसल थी उसको नौदल की एक बोट टकराने से एक बहुत बड़ा अपघात हुआ है, एक्सीडेंट हुआ है। इन 13 लोगों में 10 सिविलियंस है और 3 नेवी के लोग हैं जिनकी मृत्यु हुई है। जिन लोगों की मृत्यु हुई है उनको सीएम रिलीफ फंड से 5 लाख रुपए दिए जाएंगे। और ये जो पूरी घटना है, इस घटना की तफ्तीश ये पुलिस भी करेगी और नेवी भी करेगी।
जब लक्ष्मण मूर्छित हुए थे तो हनुमान जी उनके लिए संजीवनी बूटी लेके आए थे। तो आज दिल्ली के बुजुर्गों के लिए मैं संजीवनी योजना का ऐलान करने जा रहा हूं कि 60 साल से ऊपर के हमारे जितने बुजुर्ग हैं उन बुजुर्गों का पूरा इलाज फ्री करवाया जाएगा। इसकी चुनाव के बाद हम योजना लेके आएंगे, योजना पारित करेंगे। वो चाहे सरकारी अस्पताल में इलाज कराना चाहें, चाहे प्राइवेट अस्पताल में इलाज कराना चाहें, उनका पूरा इलाज फ्री कराया जाएगा। इसमें कोई बीपीएल, एपीएल, टीपीएल, आरपीएल कोई लिमिट नहीं होगी। सबका इलाज, चाहे अमीर हो चाहे गरीब हो, सबका इलाज मुफ्त कराया जाएगा। और कोई अपर लिमिट नहीं होगी। आप जितना आपका बीमारी पे खर्चा आएगा, उसका सारा खर्चा दिल्ली सरकार वहन करेगी।
SpiceJet has reached a settlement with a lessor called Genesis to resolve a $16 million dispute. SpiceJet will pay Genesis $6 million. Genesis will also acquire SpiceJet shares worth $4 million at 100 rupees a share. This is a 76% premium to the previous closing price. SpiceJet Chairman Ajay Singh said the agreement will significantly reduce the airline's liabilities. Staying with aviation, Air India has placed an order for 34 trainer aircraft for the upcoming flying training organization in Maharashtra's Amravati. The FTO, set to be South Asia's largest, is expected to start training cadet pilots by the second half of 2025, post getting all the regulatory approvals. Air India's order includes 31 single-engine aircraft from Piper Aircraft in the US and 3 twin-engine aircraft from Diamond Aircraft in Austria. And there's more from aviation. India's top 2 airlines, Indigo and Air India, say that they will increase duty and rest periods for pilots in a phased manner, but only starting from June of 2025. Madiha joins us now with the details. Madiha, this has been an issue that's been going back and forth for very long. It looked like the regulator was very serious about implementing these new rules, but then they were put on hold, they were kept in abeyance, and now it seems like it's back on the execution roadmap.
Exactly. And before I talk about the latest developments, I'll quickly give some context to our viewers. In April 2019, when aviation regulator DGCA had come up with civil aviation rules on duty and rest period, which pilot associations had challenged in the Delhi High Court. They wanted more rest period to avoid getting fatigued. So in January this year, the aviation regulator DGCA came up with revised norms and set 1st June 2024 as the implementation date. But airlines resisted, saying this will jeopardize their operations. So the DGCA put the rules on hold without any date. Then in April, the regulator asked airlines to give an indicative timeline for implementation. So early this month, Delhi High Court asked DGCA to consider the implementation date by early 2025. And then the DGCA met pilot unions and airlines this week. So here's what has transpired in the matter now. Pilots are urging that new norms be implemented by February next year. Now, CNBC-TV18 learns from sources that both Indigo and Air India have refused. They've told DGCA that they will do partial implementation by June 2025. SpiceJet is seeking implementation by March 2026. On weekly rest for pilots, which is the contentious issue, DGCA rules require 48 hours of rest. Now, Indigo is willing to increase from the current 36 hours to 40 hours. The airline told DGCA it will assess the impact on operations it has and then think about increasing the rest period further. Air India said it will increase rest period from 36 hours to 48 hours from June 2025. Indigo has agreed on 2 landings per night. Air India said it will do that in the second phase. The new rules define night from 12 a.m. to 6 a.m. Indigo is willing to implement this rule starting June 2025, but Air India said it can increase night definition to 6 a.m. in the second phase, which will be in 2026. Now, both Indigo and Air India warned that increase in rest period could lead to flight cancellations and also shortage of pilots, requiring the operators to recruit more pilots. So they have submitted that their comfortable plan to the DGCA. Whether the aviation regulator will allow them to go ahead with this is something we need to watch for.
All right, Madiha, many thanks for joining us. So that's the feedback coming in from the 2 large airlines, Indigo and Air India. It's now up to the DGCA to take a call on implementation. The other big story today, the Reserve Bank of India has released a study on the budgets of state governments. The central bank has said that liabilities of state governments are declining but remain above pre-pandemic levels. The RBI has also cautioned state governments against loan waivers and schemes to provide free electricity, free transport and allowances to unemployed youth and women. The central bank argues that such spending could crowd out resources available to build critical infrastructure. It's also warned about the weak health of state-owned power distribution companies. This has been perennially a problem. The RBI has also had a word of caution for the union government. The central bank has said too many centrally sponsored schemes reduce the flexibility of state governments to spend and dilutes the spirit of cooperative federalism. That is an important report there from the Reserve Bank. High drama ensued at the Parliament's main door today as the India bloc MPs came face-to-face with BJP lawmakers. What followed was a war of words amidst loud sloganeering. Both BJP and the opposition have traded charges accusing each other of disrespecting Bhimrao Ambedkar, the chairman of the committees that drafted the constitution after India's independence. The opposition has also accused Home Minister Amit Shah of making controversial remarks against Ambedkar. The situation became more tense as more MPs started pushing each other. BJP claims that two of their MPs, Pratap Chandra Sarangi and Mukesh Rajput, sustained serious injuries after Congress leader Rahul Gandhi allegedly pushed them. Rahul Gandhi strongly defended himself, saying a group of BJP MPs were blocking the entry into Parliament and shoving him. However, the BJP will file an FIR against him over alleged physical assault. Well, that is the latest there from Parliament. But with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment with more.
But the word reciprocal is important because if somebody charges us, India, we don't have to talk about own. If India charges us 100% and we charge them nothing for the same, they send in a bicycle and we send them a bicycle, they charge us 100 and 200. India charges a lot. Brazil charges a lot. If they want to charge us, that's fine, but we're going to charge them the same thing.
Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future.
As India strides towards its ambitious goal of becoming a developed nation by 2047 under the Vikasit Bharat initiative, robust infrastructure development becomes pivotal. From power and transport to real estate and manufacturing, the journey is both transformative yet challenging. Amidst this growth, one critical aspect demands our attention: electrical safety. Polycab, in collaboration with CNBC-TV18, presents Infra Safety, Powering India's Electrical Future, a campaign designed to spark conversations around the importance of electrical fire safety. Through expert insights, industry dialogues, and innovative solutions, this initiative aims to address the risks posed by inadequate electrical systems and empower stakeholders with best practices to ensure a safer tomorrow. Welcome to the launch episode of Infra Safety, Powering India's Electrical Future, brought to you by Polycab and CNBC-TV18. I'm Mugdha Kalra, and today we are joined by an esteemed panel of industry leaders who will guide us through this vital conversation. Please welcome Nikhil Jaisinghani, Executive Director at Polycab, Bharat Jaisinghani, Executive Director at Polycab, and Bhushan Sani, Executive President and Chief Business Officer at Polycab. Together, we will explore actionable insights into electrical fire safety, the integration of innovative technologies, and best practices that can redefine safety standards in India's infrastructure landscape. Let's get started. Bhushan, let me start with you. Why does India need to still focus on infrastructural safety? There has been so much development. We do have unique challenges, but do you somewhere feel that conversations around safety are still not enough?
See, I will say India is on a building mode, and I'll give you a few points on it. In 2047, as the government has very big aim on the industry side, it will contribute approximately 25% of the GDP, where I think PLI schemes and all, it will attract more investment in Indian manufacturing. And people are aiming semiconductors, we are aiming for PV modules, we are talking about EV modules, so many industries we are planning in, so that we can at least 25% of our GDP we can work. See, the second number I just want to emphasize that the real estate, as Pradhan Mantri has a mission that we need house for everyone. And the real estate market is going to be 1 trillion market in 2030. And this in real estate, we have to take care of all sort of safety, precautions, everything. Third is I'm talking about the sunrise industries and all. When we'll talk about the industry, it can be the highways also, it can be the airports also, it can be railway stations also, it can be data centers also, it can be everything. So we can say all three statements witness we are building the future.
Wonderful. You just mentioned about real estate being the second largest sector after agriculture. And when we talk about the infrastructural safety in this sector particularly, we cannot avoid talking about electrical safety as well. Why do you think we need more conversation around it?
See, real safety, as the fortunate, I will say this is the second biggest industries after the agriculture. But the unfortunate part is after the road accidents, fire is the second biggest accident happening in India. So awareness is a very, very big problem. I recently, my goosebump comes when I talk about the Jhansi fire.
Absolutely.
You will see a lot of newborn baby is born in that. And it is not happening only with the Jhansi. If you see the data of fire safety and so on, 60,000 accident happens in 1 year, where we are. And it is happening just because of the bad quality of wires, bad quality of switch gears, and unbased plan working electrician and all. It needs training.
Right.
Because, whenever you're talking to the household or something, he's building a home, it's called a dream house. When you're talking about any office, you talk about the career. Whenever you're talking about schools and all, you just tell me, are we safe in these walls? This is a big question, and this is not the responsibility of one man. This is the responsibility of everybody. Maybe it can be the developer, it can be the institution like BIS, IS. They people have to work, and the company us that we have to give a product which can give you a productivity, quality, and the fire safeties and all. And I'm happy that the new coming with the real estate, we are working on it. And new buildings are coming up with the all management systems and all. But again, if we talk about, we are sitting on a bomb on old buildings, which are not equipped with the requirement. So it is a requirement. We have to speak. And I think with the CNBC, and thank you very much, you people, that we will talk about more on this and how we can work on for the safer future and safe India, we can say.
Wonderful. Bharat, Bhushan spoke about manufacturing as well. We are a manufacturing powerhouse. We want to be, the next biggest center for manufacturers all across the world. What are the challenges that you foresee in this ambition of ours, specifically when we talk about electrical safety?
So, India is on its way to become the largest manufacturing hub in the world. We are all very excited, we are all very passionate about this, and it is a great opportunity. But in this journey, we don't need to learn everything from scratch. We can take global standards and quickly implement in India. In the past, the challenge was that sometimes standards were not followed. But now it's changing. The Ministry of Heavy Industries has introduced very stringent rules to make sure that equipment and machinery is taken care of and many things are followed. While large companies might do this, we could yet face a challenge with MSMEs, and we have to figure out how they will learn. So we need to come together and educate people. We checked a report that was between 2017 and 2020, where there were three deaths and 11 injuries on a daily basis due to safety. And I think we need to all come together, and this must change for a brighter future of the country.
We spoke about real estate, infrastructure, manufacturing. Nikhil, I'm going to bring you in for the transportation sector, which is shifting towards electrification, but there are challenges even in India in large-scale adoption of technology, in safety, from EVs and charging infrastructure to now public transport. Where do you see the aspect of safety being addressed, and what are the key challenges?
Well, Mugdha, firstly, I think, exciting times ahead for India when it comes to mobility, right? Is, like you said, EVs, is modernization of railways. Vande Bharat, I mean, I really enjoy traveling in that. Our railways plays such a key role because 23 million passengers travel every single day, right? And so, of course, there are a few risks while we upgrade a lot of these. In EVs, lithium-ion batteries can overheat if they're not of the right quality. So the sourcing and the quality needs to be absolutely top-notch. Besides that, there is no uniformity in charging infrastructure as on today and for chargers. And I think that, is something that the government would be working on. Since railways is, one of the largest consumers of electricity, grid stability is absolutely critical. Right? So I think some of these things we need to look at very closely.
Coming back to the real estate industry, Bhushan, what is the impact of poor electrical safety on real estate projects? Also because now projects are mushrooming in every part of the country. We are talking about a Vikasit Bharat that is also talking about real estate Vikasit, right? What are the challenges there?
See, as I earlier also said, awareness is a very big problem in that.
Right.
And the electrical wire, such are the important things like we have our veins in our body, but it is not visible. So if the electrical parameters are not met as per the requirement, there is a fire you can say the life, there can you say the amount of risk of all legal compliances, and again the delay in the projects. So builder don't have to, the cost cuttings and all in the electrical parameters. Jo dikhta hai, wo bikhta hai. All people are investing money in the, which is visible in the,
Correct.
but the electrical part, people are a little, you can say, is the backseat, is this. So it is totally, you can say the delay, life, everything impacts if the things are not properly managed and all. And it is requirement is that we have to give training to the contractor, electrician, even the builder, where we should talk about you cannot compromise the cost with the life.
I like your analogy of veins not being visible but playing an important role. Yes. And of course, and that's the reason why one has to invest energies, and awareness has to be raised amongst stakeholders that are all involved in real estate projects at any level, for that matter. But when we come back to Bharat, the manufacturing sector, we're talking about Industry 4.0. We are very ambitious about predictive maintenance technology and AI and Gen AI coming into every industry. And every industry is getting reshaped. So is manufacturing also. What are some of the effective strategies that you see that can be implemented in this narrative that is being built, and in organizations, perhaps as culture as well and as processes as well?
So Industry 4.0 is revolutionary, and every machine or every equipment gives out enough signals if something's wrong with it, and they're going to lead to failure. And these kind of signals can be due to heat, some kind of leakage, more energy consumption. Now with Industry 4.0, we are able to actually predict all this. Like we were talking about gas leak sensors, there's over-consumption of electricity, you can track it, you have sensors for heat. And when you make the machine more intelligent with, conscious effort, it will not only lead to more safety, it will also lead to more productivity, because you should be able to prevent from a lot of situations. So moving from corrective to preventive, we need all the safety equipment in case there is anything, but we need to focus on getting the act in order to have a culture of preventive safety, preventive maintenance, such that everybody is safe and we can predict things way ahead of time.
Well, I have to take a short break here, but when I come back, Nikhil, I want to talk more about the transportation sector and what is happening there and how we can address electrical safety there. So time now to slip into a very short break, but we'll be back soon.
Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay, and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
we are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour. Polycab and CNBC TV18 present Infra Safety, powering India's electrical future.
Welcome back to this very special launch episode of Infra Safety Powering India's Electrical Future, brought to you by Polycab and CNBC TV18. Before getting into the break, we were talking about manufacturing landscape, but I want to move our focus, Nikhil, now to transportation and looking at the larger story that the government is also working on, which is electrical safety in transportation, amidst modernization, amidst regulatory compliance, optimizing our processes, making transportation available to so many millions of Indians. Where do you see the opportunity here for bringing in tech, for bringing in better products when it comes to electrical safety?
So I think, the government is investing heavily on safety features like Kavach and, replacing outdated signaling systems in railways. As Bharat mentioned earlier, there's an opportunity to IoTize, the monitoring systems and bring in more safety. Of course, while we do this, it's absolutely critical to, ensure we take care of cybersecurity. Because as we keep getting more digitized, that becomes a key risk and is absolutely critical. We also need to ensure that that they use fire retardant products in various applications, right, like cables. At Polycab, we manufacture electron beam cured cables which have superior thermal and mechanical properties. right? So they can withstand way more heat and harsh conditions. We also have specialized products like charging cables for EV chargers, cables specially made for EVs, wheel speed sensor cables for added safety. Right? So, yeah, so a lot of these technologies, we need to keep using and enhance safety.
What do you say, Nikhil? Are these technologies readily available? It's just about awareness? Or what is the main roadblock that you see in getting these technologies out there?
So I think some of these technologies are available. Sometimes, some of them cost a little more. Also, I think, it just getting out there a little more is absolutely critical. So it's there, they're available. It just needs to get out there.
Bhushan, we're also talking about the evolving regulatory landscape. How can the electrical industry ensure their projects are complying with all the mandates, all the electrical safety standards, while adapting to the emerging trends in sustainability and development? And of course, profits are on one side, but compliance also becomes very important.
Look, there is always a safety first. I have one question for you. Which car you have? Does your car has airbags?
Yes.
Why it is? How many incident has happened? In again the same, like I just want to tell you, by 9 o'clock, all the equipment is working at your house. Maybe it is AC, maybe it is geyser, maybe it is any type of microwave, oven, mixie, everything is. If you don't have a accurate wire and good quality of wire, the load comes onto the wire. Sure. Now, as the airbag, if somebody gives you that this car is 3 lakh cheaper, will you buy? No, you will not buy. Now the generation is not ready to buy the product which they have to compromise on their life or safety or something. So by this, even I think the NEC, IEC, ISI, the people are educating, and this is our duty also. So we have to tell the builders and all about the updated product, what is the requirement and all. And everybody is ready to take that also. So safety is first. And our Nara should be that life is precious than everything. We can say there is no numbers like GDP and everything. The numbers is only how many life we have saved it. Absolutely. So it should be the, I think, regularity. And I think the government and agencies are working very hard on that to make more awareness about that.
Absolutely. And that brings me to you, Bharat. We always talk about industry's engagement. Stakeholders who are part of the industry, who are part of the construction or manufacturing or infrastructure. But never sort of comes to the user and consumers. I think they also need to be educated about what actually is in the homes that they are living in the offices that they are working in manufacturing hubs that they are spending so much time in. There has to be campaigns like these where more conversations are happening. Where do you think that culture of safety at the moment is? What is it missing that needs to be bridged? Of course, conversations, but what is one of the other few aspects of it that needs to be addressed?
So, safety is a mindset, and it is also something that it depends on how exposed we are to. When we go to various countries which are way more developed than India, we see that they have already taken care of various things around safety. So what is missing in India while we are, in the greatest decade that we could have ever been, and we are all, enjoying the ride in terms of building the country? I think many companies like ours and various stakeholders have to take up the mandate, and which we are going to do thanks to you guys as well. And we're going to make sure we educate electricians, we educate contractors, we educate a lot of people so that, the last consumer, and these are the guys who are the touch points for the consumer, they know about it and they get aware. It's not only about advertising on TV or, putting this thing, but going and talking about it, creating communities, creating lots of influencers who will make this difference bit by bit. And when there are certain case studies, even to use those case studies and talk to various people. as the user gets more and more awareness, who does not want to be safe?
Absolutely.
And I think it's our responsibility to take care of our country, of our people. So we would lead this initiative from our side, for sure.
Wonderful, wonderful. Before I let you gentlemen go, one more question that I want to ask is around the sustainability chatter. You know, everybody is talking about sustainable businesses. Everybody talks about how we can make a difference. I know we talk about culture as well. Bharat, can I ask you what sustainability in this industry means then?
So I feel sustainability is first about efficiency. How can we use the Earth's resources most efficiently so that there is minimum impact? Post that, efficiency is about avoiding wastage. And if a company uses these principles, a lot will make a difference to the way the world economy works. The consumption story is one part because everybody needs a lot of things. We do it efficiently. We make sure the Mother Earth is taken care of. We don't use resources without any specific need, and we take care of the environment, be conscious. Even then, taking small initiatives like saving energy when you don't need it, switching off lights, sometimes, and planting trees. We don't understand that when we plant trees or we take care of trees, actually a lot gets done in the environment, the ecosystem gets recreated, and this could be a single tool for us to make a difference. So while each industry needs to look on specifics within their industry to save resources, to save and consume as much as required and be as efficient as possible. At the same time, do things for the environment, become more conscious. And as the climate is changing, which is not pretty much in our control, we should get all our acts together to do things which are in our control.
Wonderful, gentlemen. Thank you so much for all these wonderful insights and for your time. And this has been such a pleasure.
Thank you.
Thank you very much.
Well, what a fascinating discussion this has been, from addressing the challenges of aging electrical infrastructure to adopting smart, sustainable and safety-first practices across sectors like real estate, manufacturing and mobility. Our speakers have shared invaluable insights today into India's journey towards a safer and more resilient future. A heartfelt thanks to, of course, them for their expertise and perspective, and their contributions underscore the importance of aligning innovation, compliance and community efforts to mitigate risks and drive meaningful change. As we wrap up this inaugural episode of Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future, let's remember that electrical safety is not just a priority, it's a responsibility.
Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future. YouTube at CNBC-TV18, weeknights at 7 p.m.
बजकर 55 मिनट पर नीलकमल नाम की एक जो प्रवासी वेसल थी उसको नौदल की एक बोट टकराने से एक बहुत बड़ा अपघात हुआ है। एक्सीडेंट हुआ है। इन 13 लोगों में 10 सिविलियंस है और 3 नेवी के लोग हैं जिनकी मृत्यु हुई है। जिन लोगों की मृत्यु हुई है उनको सीएम रिलीफ फंड से 5 लाख रुपए दिए जाएंगे। और ये जो पूरी घटना है, इस घटना की तफ्तीश ये पुलिस भी करेगी और नेवी भी करेगी।
Hello and welcome to News Center. An important development in India-China relations. NSA Ajit Doval and Chinese Foreign Minister Wang Yi met in Beijing as part of the 23rd Special Representative Talks. And why are these talks actually important? Because they're being held for the first time since the border clashes in 2020 in Galwan, eastern Ladakh. Now, there was consensus between India and China to restore normalcy, carry out disengagement in remaining friction points of Depsang and Demchok in eastern Ladakh. This happened in October. It happened because of the consensus between the Prime Minister Narendra Modi and Xi Jinping. Both leaders guided officials, that is Ajit Doval and Wang Yi, to take the disengagement process forward. Now, what does the wording of these statements? Both sides have said they want to find a mutually acceptable solution to the border dispute and make sure that border tensions do not impact the larger bilateral, political, economic and trade relationship. Now, let's decode the statements that have come in from India and China. Let's go across to General S.L. Narasimhan, former member of the National Security Advisory Board. Also joining us is N.R. Tenjin, a well-known Chinese strategic affairs expert. General Narasimhan, if I can begin with you. Disengagement in eastern Ladakh along all the friction points is done. But the two other larger objectives we are now working towards, de-escalation and de-induction of troops. How does this statement perform and give guidance on both these fronts?
Good evening and thank you, Parishit, for getting me on the show. You actually flagged the question very correctly. We have just finished one part of this entire discussions, that is the disengagement. Even in the disengagement, if you see, the temporary moratorium on patrolling that we had earlier on 4 friction points, that also need to be looked into subsequently. The second step is the de-escalation, wherein the additional troops which have come into this area have to go back rather away from the frontline areas, and that is going to be the de-escalation. That is going to be, again, having a long discussion which is expected to go on. And thereafter, the de-induction has to take place. If you ask me, the yesterday's statements clearly mentioned about 2-3 things. One is the fair, reasonable, and mutually acceptable solution to the boundary question, which you mentioned. Second, the opening of this Mansarovar Yatra, the river data, cross-river flow data, and also the border trade. This is something that, again, is likely to be started. And maintenance of peace and tranquility along the line of actual control, both the sides have mentioned. So these are the issues I think that are an interesting thing out of it. The other thing about the 2005 agreement being referred to is a good sign, because that is the first step of a 3-step process of resolving the boundary question. So overall, this is a good first step. We have to now look at the second and third step and beyond. That is the way I would like to see it.
Right. In our tangent, what, according to you, would be a fair, reasonable and mutually acceptable solution according to the Chinese side? Now, as far as the dispute in eastern Ladakh is concerned, we've had that dispute since 2020, but the position of the entire Indo-China border is actually disputed, and both India and China have different perceptions of the border. Having said that, how can India and China move forward while managing this border dispute peacefully?
Well, I think it's very important to acknowledge that this is all small steps, building confidence, building trust back up after a period of 4 years when it's been absent. And it has to be towards, if it's going to be lasting, towards an overall settlement. And it's not just the boundaries. There has to be a grand pact between China and India on issues of areas of influence and things like that. How to handle trade, expanding trade in China that does not in any way impact or threaten India's interests. And this all has to be done over a period of time. And as the general pointed out, it's baby steps first, making sure both sides are adhering to what they say they're going to do. And if they can do that, then there is hope that finally at last there'll be a recognized border by both sides and an understanding of how Asia can rise together as opposed to be, once again, the victim of colonial divide and conquer.
Right. General Narasimhan, if we see since 2020, there was a press note 3 which made it clear that any investments from land bordering countries, including China, will have to seek government approval. They cannot happen automatically. That hasn't changed. There is a certain degree of suspicion and mistrust with regard to Chinese investments and the operation of certain Chinese companies in the country. What, according to you, would be the low-hanging fruit which both sides would like to clinch at the earliest? We've seen India resume the issuance of visas for Chinese technicians wherever they're needed in the manufacturing sector. So what next in terms of the immediate low-hanging fruit, according to you?
One of the low-hanging fruits could be if the Chinese companies are seriously intending to do manufacturing in India, and they can use the PLI, the productivity linked incentive scheme, which has been started. That could be a good way to start. But again, the press note 3 will apply to all the countries that are neighboring India. And the issue is that we are looking at increasing the manufacturing within the country, genuine manufacturing, not only assembling, bringing the parts from elsewhere and assembling doesn't actually do value addition. Therefore, we are looking at increasing the manufacturing within the country. And if the Chinese companies are willing to go by that particular requirement, I think there will be a little more positive movement on this. This is on the business side. The second thing is the access to Indian companies into China has always been difficult. So that if it could be eased, that could help in improving this relationship a little further. And third thing, of course, China can help us in reducing the trade deficit that we are having with China. So these are all issues which have been flagged already. As long as we can find some kind of a solution to these, I think these are the low-hanging fruit that could go forward without much of a complication of the border issue coming into play.
Right. There are global geopolitics at play as well, Mr. Tangent, and that has influenced the decision of both India and China to work towards some sort of acceptable solution with regard to the border dispute. It seems that both sides are eager to get the relationship going. Now, in terms of China, what is the expectation and hope from India? What is the larger view that China has on India and what they seek to achieve?
Well, I mean, China wants India to do very well. I mean, a stable Asia is one where trade flourishes. Obviously, China is very interested in that. The elephant in the room we haven't discussed is that as U.S.-India relations have soured slightly, India-China relations have sweetened slightly. I think there are a number of attacks or perceived attacks by the Indian government involving Washington, whether it's Bangladesh or the elections, attacking people who are very close to the prime minister, and then accusing India of human rights violations. These have not gone down well. The fact that the U.S. expects, for some reason, India to take this on the chin, to act, in essence, like the Philippines. But, Modi is no Bongbong Marcos, and India is no Philippines. So, yeah, there are those issues in the background. I think what China wants is simply India to do well. The issue of trade is complicated by the fact that if India wasn't buying from China, it would be buying from somewhere else. The issue is that you don't have the domestic capabilities. Right now, many Chinese companies want to go abroad anywhere they think they can make money, and that includes India. So I think the opportunity is there, but I don't think expressing it as somehow that China can solve problems in another country is very useful.
Right. General Narasimhan, do you also believe that, considering that we're in a volatile geopolitical environment, clearly our relationship with the United States has taken, I would say, a hit? Of course, the larger relationship remains intact, but yes, in the past few months, we've seen companies being sanctioned for making exports to Russia. Then there is a Panun case which is under investigation. You see Adani Group, which is being investigated by the US DOJ, the SEC. So there are a number of investigations and cases that are there against India. Do you feel that in the current geopolitical environment, it makes sense for India to resolve its tensions with China, or at least bring it to a manageable level?
Very good question. You know, any relationship between two countries is bound to have some hiccups here and there. That will always be there, whether you are a very good partner with anybody or otherwise. Those minor bobs will always be there. That needs to be looked into and taken care of. I think both the countries are mature enough to do that. The other thing is China generally tries to see the India-China relationship through the prism of India-US relationship. That, I think, needs to tone down a bit. That is something which is, I think, being talked about in various forums. And so that is the second aspect that we need to keep in mind. The third thing is India and China relations have been in an upswing ever since the agreement on 21st October took place. Then both Mr. Modi and Mr. Xi Jinping met in Kazan. And thereafter, the foreign ministers have met, the NSAs have met. I think it is somewhere in the forward path it is going. So I think that forward path momentum should continue and see where we can find an equilibrium between both the countries which are mutually acceptable. That is why I said fair, reasonable, and mutually acceptable is what both the countries have said. And that will set the tone for furtherance of the development of the relationship between India and China. My only request is, through your medium, India-China relationships, India-US relationships are bilateral. One should not be held at the cost of the other. That is the thing I would like to convey.
All right, important point there. Thank you so much, General Narasimhan, for joining us. And I'd like to thank Inar Tangent for being with us on our program, giving us their perspective on India-China relations and the way forward. On that note, we take a short break, but don't go anywhere. We're going to discuss an important report by the Reserve Bank of India. The central bank has warned state governments about the debt burden. It also had a word of caution for the central government. We'll discuss all of this with Mr. S.C. Garg on the other side when we're back.
जब लक्ष्मण मूर्छित हुए थे तो हनुमान जी उनके लिए संजीवनी बूटी लेके आए थे। तो आज दिल्ली के बुजुर्गों के लिए मैं संजीवनी योजना का ऐलान करने जा रहा हूं कि 60 साल से ऊपर के हमारे जितने बुजुर्ग हैं उन बुजुर्गों का पूरा इलाज फ्री करवाया जाएगा। इसकी चुनाव के बाद हम योजना लेके आएंगे, योजना पारित करेंगे। वो चाहे सरकारी अस्पताल में इलाज कराना चाहें, चाहे प्राइवेट अस्पताल में इलाज कराना चाहें, उनका पूरा इलाज फ्री कराया जाएगा। इसमें कोई बीपीएल, एपीएल, टीपीएल, आरपीएल कोई लिमिट नहीं होगी। सबका इलाज, चाहे अमीर हो चाहे गरीब हो, सबका इलाज मुफ्त कराया जाएगा। और कोई अपर लिमिट नहीं होगी। आप जितना आपका बीमारी पे खर्चा आएगा उसका सारा खर्चा दिल्ली सरकार वहन करेगी।
But the word reciprocal is important because if somebody charges us, India, we don't have to talk about own. If India charges us 100% and we charge them nothing for the same, they send in a bicycle and we send them a bicycle, they charge us 100 and 200. India charges a lot. Brazil charges a lot. If they want to charge us, that's fine, but we're going to charge them the same thing.
Welcome back. You're watching News Center. The RBI has released an important report on state finances and also on the working of the central government. The report points out that the liabilities of state governments is declining, but it still remains above pre-pandemic levels. The RBI has also cautioned state governments against loan waivers and schemes to provide free electricity, free transport and allowances to unemployed youth and women. The central bank argues that such spending could crowd out resources available to build critical infrastructure. It also warned about the weak health of state-owned power distribution companies. The RBI also had a word of caution for the union government. The central bank said that too many centrally sponsored schemes reduce the flexibility of state governments to spend, and it dilutes the spirit of cooperative fiscal federalism. Joining us right now is the former Finance Secretary, Mr. Garg. Mr. Garg, thank you very much for being with us on the program. Do you see some need for immediate alarm on the way the state governments are managing their finances? We're coming out of elections in different states, and we have seen subsidies, state-level schemes playing a very important role in these election outcomes as well.
So, Parikshit, if you go by the report, I think there cannot be a more sounder endorsement of the way the states have been managing their finances. For 23-24, the provisional accounts of the states tell you that the state's aggregate fiscal deficit was 2.9% of GSDP. They were allowed to do 3.5%, but they could manage 2.9%. Except in 2021, when the GDP had actually gone down and the fiscal deficit ratio of the states had gone up to more than 4%. In every year, the states have managed to hold on to less than 3% or so of the fiscal deficit. There's a lot of concern these days about the states spending so much on freebies and FDs and those things like that. But the other finding finding which the Reserve Bank has brought out in the report is that their revenue deficit was only 0.2% of the GDP, which is almost as if the states have been running their finances without taking or without running any revenue deficit. And all of that, 3% or so, of the fiscal deficit is being used for capital creation. There cannot be a more sound management of state finances. Now, to respond to your question about immediate, we have seen in last 1 year and 2 years, a lot of states going for cash transfer schemes, Ladli Behna, or whatever version of those are there in various states. The key point I think you should remember this is that the states are managing to incur all these expenditures without affecting the quality of their finances, which is there. So I'm not unduly concerned about states' management of finance.
Okay, the other point that strikes us is that the RBI noted in its report that too many central government schemes reduce the flexibility of state government spending and dilute the spirit of cooperative fiscal federalism. How do you see this, and what course correction can be done?
See, the impact of too many centrally sponsored schemes is not adversely reflected in the state's management of finances. Of course, it constrains the state's flexibility. The states have to not only find resources for matching the contributions for the centrally sponsored schemes, they also have to provide for the gap between what is the total and true cost of the centrally sponsored schemes and what the central government provides by way of unitary or unit cost-based kind of reimbursement to them. Increasingly, central government is putting more and more of the share of the centrally sponsored schemes. It ranges now up to 40% for many schemes. And that would be very well, the center would be very well advised to sort of give more flexibility in the centrally sponsored schemes. In fact, it should reduce the centrally sponsored schemes and should not actually undertake the kind of loan assistance which the central government has started for the last couple of years in the name of capital expenditure. The state governments are not using that for incurring capital expenditure because their fiscal deficit is within their original limit, not the enhanced limit of the centrally sponsored or central government provided loans. So I think the center would, but this is a subject which has been going on for the last 40 years. Various committees have gone. The central government has not been able to resist the temptation of undertaking yet another centrally sponsored schemes anytime. So therefore, I don't think this will be possible. But the advice, if it is taken, it should be a very well acceptable advice.
Okay, thank you so much, Mr. Garg, for joining us with your perspective on the RBI's latest report. Now, let's focus on another important point. In that RBI report, we were discussing with Mr. Garg about centrally sponsored schemes and also subsidies on the part of various state government. We've seen how many women-centric schemes have taken center stage in states going to polls. Be it Delhi or Karnataka, all states are coming out with schemes and making women the focal point. Shivani Bajaj tracks women-centric schemes across states to get you this report.
Well, a few years ago, women voters were often overlooked in political campaigns due to their historically lower turnout compared to their male counterparts, despite women constituting nearly half of the electorate. However, this narrative has shifted dramatically with the introduction of targeted welfare schemes. Let's start with Delhi, where the Aam Aadmi Party government has rolled out its Mukhyamantri Mahila Samman Yojana, promising a monthly stipend of 2,100 rupees for women aged 18 and above if they come back to power. Significantly, this amount has been doubled just ahead of the Delhi Assembly assembly elections, marking a clear strategy to consolidate women voters. As of 2023, 14.83 lakh accounts were opened with a total deposits of 8,600 crore rupees in the scheme. But this playbook isn't new. Take Madhya Pradesh, where the BJP's Ladli Behan Yojana has been a game changer with a monthly payout of 1,250 rupees and an increased budget allocation of 18,900 crore for FY 24-25. The scheme proved crucial in securing BJP's recent victory in the state. Out of the total 2.78 crore women voters in the state, 1.29 crore women are direct beneficiaries of this scheme. In Maharashtra, the Mayuti government introduced the Ladki Behan Yojana with 1,500 rupees monthly payout, promising to increase it to 2,100 rupees if they come back to power. The scheme is expected to cost a massive 46,000 crore rupees annually, reflecting just how serious states are about reaching women voters. Among the 4.66 crore women voters in the state, the number of beneficiaries under the scheme stand at 2.34 crore as of December 2024. This trend isn't limited to one or two states. In West Bengal, for example, Mamata Banerjee's Lakshmir Bhandar Yojana offers 1,000 to 1,200 rupees monthly assistance to women, with 14,400 crore allocated for this year. The scheme has registered 2.5 crore women out of the total 3.7 crore women voters in the state. In Odisha, the Subhadra Yojana provides 10,000 rupees annually to women with a total payout of rupees 50,000 over 5 years, backed by a massive 10,000 crore allocation for FY 24-25. The scheme targets the state's 1.66 crore women voters. While in Karnataka, Congress government is allocating 28,600 crores for the Gruha Lakshmi Yojana, giving 2,000 rupees monthly to women heads of BPL families. The scheme so far has reached 60 lakh beneficiaries out of the total 1.66 crore women voters in the state. These schemes don't just make headlines, they deliver results. A December 2023 SBI research study found that in Madhya Pradesh, a 1% increase in marginalized women beneficiaries of the Ladli Behan Yojana led to a 0.36% rise in electoral success for the incumbent party. The report estimates this impact across 30 to 35 seats in at least 8 districts. And the impact is nationwide. Another SBI study in May 2024 during the Lok Sabha polls revealed that female voters outnumbered males in net incremental share. 93.6 lakh women voters versus 84.7 lakh men. Schemes like Ujjwala Yojana, the Matru Vandana Yojana and the PM Awas Yojana are driving this increased participation, especially in rural areas. From cash transfers to targeted women welfare-centric schemes are now at the heart of electoral strategies. With every state joining the race, it's clear that winning the trust and the votes of women could decide the next big political outcome. Back to you.
On that note, we come to the end of our special show, News Center. Thank you for watching. Goodbye.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC.
Hello and welcome to a very special edition of our Market Town Hall. 2024 is wrapping up and it is stock taking time. While the Nifty is up only 11% this year, the mid-cap and small-cap indices are up an impressive 27% each this year. And while we take stock in terms of winners and losers, this is also the time to think ahead into 2025 and maybe even beyond. I'm Prashant, and that's what we intend to do here. With me is my colleague, Nigel D'Souza. Nigel, hi.
Well, thanks a lot for that, Prashant. Well, we have three very, very special guests joining us on the show to help us out with exactly that. The bets, the ideas you need to track, which will make you money in 2025. Let's welcome to the show. We have Niket Shah of Motilal Oswal, Tahir Badshah of Invesco, and Rohit Shimpi of SBI Mutual Fund. Well, welcome, gentlemen. Thanks a lot for joining in.
Thank you.
Just want to also add that all the three gentlemen have managed what has turned out to be some of the best performing funds in 2024. So good on you all. Congratulations. And 2025, well, you'll have your work cut out.
Well, it's a full-on starcast here.
Indeed.
And we intend to use it to your advantage. So, what we intend to do here is pretty simple. Keep it tight, simple. We'll go one round with all of them to understand their sort of mental makeup as we head into 2025. Just a top-down view about whether the market's going to be easy, adversarial, or not. And then, of course, we intend to dive straight into the ideas which, of course, are going to be important and the themes where they want to put money behind and which you should pay attention to as well. I also want to mention we've got a full audience here and some of the brightest minds from some of the top colleges here in Mumbai. And we intend to open the floor up for questions to the three market masters with us. So once again, welcome to the program. Thank you very much, all of you.
Thank you.
So as I said, Nikhil, let me start with you. Top down. It's never easy. So I don't want to say, well, 2024 was easy and maybe 2025 won't be. It's never easy. But how is the setup looking as we head into 2025? As I said, mid and small cap indices have done 27%, which means stocks have done far better. Go on.
Yeah, so I think if you look at in the beginning of 24, it looked like a year where there were still some opportunities available today. But as we start 2025, if you look at micro and macro both, so if you look at micro, earnings growth is kind of weakening out. from almost 35-36% earnings growth in mid-cap that we have seen in the last 4 years. We are now down to about 4 to 5%. We don't expect this to meaningfully move up, at least for 25 as such. On the macro side, I think clearly there are challenges as far as US is concerned. US has clearly articulated that there's going to be a $2 trillion cut on spending. And one really needs to see how that really shapes up as well, because that can have a meaningful impact on global markets. So if you look at the macro and micro, it looks like 2025 will be much more tougher year, probably in the last 5 years. It'll be a year where the market will be quite narrow. You need to really be very, very sharp in terms of your stock picking. You will not see a broader market that you have seen in 2020 to 2024. There'll be few stocks doing very well, few sectors doing very well. And hence, I think one really has to do a lot of cherry picking to really do very well in 2025.
Okay, interesting. Well, Tahir, what about you? What's on your wish list for 2025? Consumption clearly was a little bit slow towards the end of this year, that's 2024. Private spend as well was a little bit lower. So what's on your wish list for 2025?
Yeah, pretty much what has not happened in 2024 is what we should expect to happen in 2025. And, there are a few things which probably did not pan out the way we would have expected. For example, interest rates, in India, despite the fact that we've had interest rate cuts in the US, we've not been able to follow through. It's been about 4 to 5 months since then. And it's been a very long pause in any case. So I think that is something which probably we will look forward to happening in the course of the next year. Hopefully at the start of the year when we get some data around inflation as well as food inflation in particular, maybe the outcome on the summer as well as the winter crops. I think that should probably indicate whether we are headed for a phase where we can open up the doors for interest rate cuts eventually to happen in India. So I think that's one that we would probably kind of anticipate. The other thing is that we've also seen that very distinct deviation between in the whole consumption segment, where we've seen the upper end of the consumption segment do exceedingly well, whereas value consumption actually has trailed. And I think that is something which probably deserves a catch-up. Once again, it'll be a function of what happens to interest rates, what happens to inflation, what happens to rural incomes. I think there are certain reasons which make us believe that probably that will get stronger, especially given that states and the government are now focused on rural upliftment and probably also supporting some of the stressed sections of society. So I think that is another hope that probably comes about. It will give a more balanced look to the economy as a whole. And the last but not the least is probably private capex. That's also something which has been on the cards for a long period of time, especially at the time when we are probably confronted with a slower trajectory of government capex. We don't want it to slip significantly either, but private capex could probably come to the rescue. We've seen some initial signs. If you go by probably the a bottom-up assessment of the BSE 500, then the first half probably indicates that the capex for BSE 500 is actually up 15% year on year. And BSE 500 typically still comprises of a lot of the private sector companies, right? And within which, again, the government side is actually slowed. So actually what it implies is that the private part has actually grown even higher.
This is for what period?
This is the first half of FY25 compared to FY24.
Okay. Okay.
So I think...
But tying all of this together, as Niket said, would you agree this is going to be a far challenging year? I mean, as things are, I mean, if something comes to the rescue, so be it. But as they are right now?
So there are some of these things which are imponderables, and therefore we need to see as to how they manifest. I would like to think that the first few months of the year is going to be a bit of a weak start to calendar year 25. It'll also probably be a bit driven by global circumstances. So we have the US markets actually, or the developed markets in general, doing a little better than India. We have a upward revision trend out there in the US, whereas we have probably a downward earnings revision trend out here in India. So I think that will play its role in the first few months of the year. Probably in the second half of the year, I would expect that some of the local factors play out. And by which time actually Trump assumes office and some of the rubber hits the road with regard to some of the policies that will come about. So, I hope so too. And that probably brings about a rotation.
So we'll come back to some of these points, and I think that's well explained. Rohit, come in. First thoughts. Sure. I mean, adversarial, not easy. So let's keep that aside. But what's your sense?
So on markets, I think the way SBIMF in our equity strategy framework, we look really at three parameters, which is valuations, earnings, and sentiment, right? So when you start off with valuations, now clearly when you just look at the trailing PE ratios, even if you adjust for earnings cyclicality, those are at elevated levels, right? I think it's only when you adjust for the level of interest rates that those ratios are more in middle or median kind of territory. So that's okay as a starting point. It's not the best where you would want to be, but it's not too bad either, considering where interest rates are. So that gives you your asset allocation type perspective as well. When you look at valuation, when you look at earnings, actually, that has been a super bright spot in the last few years post-COVID, and we're currently actually going through some probably mid-upcycle pangs, to say the least, considering how the last couple of quarters have been, for the overall market. And even excluding those one-off type stocks or one-off type sectors, we know them, the OMCs, the metal stocks, etc. Even considering that, taking that out, earnings have not been very great over last couple of quarters. We do think that is kind of pulled down by two factors. One is the monsoon issues, some of the election-related slowdown that we've seen. And we are actually hopeful that that comes back over the next few quarters. Typically, a capex upcycle or an earnings upcycle does not fizzle out as soon as we're probably seeing market experts predict at this point. So I think that's a little more durable theme that we're hopeful on. And the third one is sentiment, right? And you can't exactly predict markets, but you can tell the temperature of the room you're sitting in. And clearly for the last few years, last few quarters, markets have been kind of hot, right? If you look at retail investor sentiment or subscriptions in IPOs, etc., that gives us some sense. So sentiment is off peaks right now, considering the fall we did see in markets back in, if I just look at October, November, for example. But on balance, I think with valuations being middling relative to interest rates, with earnings seeing some pause, maybe they pick up over a few quarters, and sentiment still being a bit elevated, probably the market outlook over the next few quarters, next few years is going to have to track how the earnings trajectory behaves. And there we're not as negative. We think that over a few quarters, over a few years, that will tend to pick up in line with the overall capex cycle kind of coming back.
I just want to ask one local and one global question. So, and maybe a yes or a no, but maybe not yes or no, maybe two lines, but quick ones. How critical is the government spending and interest rates, both to work for markets to do well in 2025? And from a market perspective, are we at that point that we need those to move in the right direction? More government spending and lower interest rates. Niket?
So I think, yes, we do need that. Government spending was down almost 28% for the first half of the year. We expect that to pick up in the second half, but it's still going to be missing targets for the year.
Okay.
So definitely government spend would be quite important if you want to ensure that the animal spirits of the economy continues to remain alive.
Sure.
On interest rate, I don't think inflation is coming down anytime soon. You look at the amount of freebies that has been given in the election in different states. It's been about close to 2 lakh crores. A lot of people don't realize it's 2.5 times Manrega outflow, right? And that is ensuring that the inflation on the food side continues to remain fairly high. You look at the last number that RBI reported, about 9% food inflation. When you have a 9-10% food inflation, core inflation continues to remain quite sticky yet. I don't think we are going to see an interest.
So rates will remain high, government spending must come back. Tahir?
I would tend to agree. So basically, we need government capex definitely to continue, and I think that is the core of the Indian economy, at least.
You mentioned private sector has to pick up the slack, but we've been hearing that for a while. It's not. I mean, maybe it'll happen. Hopefully,
some signs. So
the government has to.
Which is cooperating. So I think government has to, and it in up cycles of investment cycle, rising investment cycles, government has always played a very important role. They occupy nearly about 70% of the capex that has to be done. So obviously, you can't have a situation where they are absent from the market. All I'm trying to say is that probably if you are seeing a little bit of slowdown on one side, if there is a pickup on the other, then we probably are balanced out. So that's what we're looking forward to. There are some telltale signs, there are some hard numbers which are actually visible. We also probably look at project awards, etc. And when we meet many of these companies, so for example, all of us actually interact with a lot of corporates, and I would say 8 out of 10 companies in our interactions, anecdotally or even otherwise, and you can look at the fundraise, etc. Part of it is probably for debt repayment, I agree. But most of them are in a capex mode. I mean, whether they are doing brownfield, greenfield, acquisitions, etc. So all of them are indicating at a situation where they want to increase capacity, because for the last few years they've not done so. Last many years probably they've not done so.
So you're satisfied with what you're seeing on ground as of now?
So the trends are good.
Trends are good.
It should probably, interest rates is not something which we need to have. It's not a must have, but if we get that, then that's something which will add on.
What about you, Roth?
Yeah. I think that actually, you are seeing capex happening in the private sector. It may not be to the extent that which we kind of say that it's taking up the entire slack from, some slowdown in the government space that's being seen. But there are interesting areas where it's happening. So whether that's power is well known, right? That's one where everyone's investing in renewables, etc. You're seeing a lot of ESG type capex happening on the sustainability side. And finally, the manufacturing opportunity of India. That's a big deal. I think we've started seeing some small strides out there. Maybe the export story out there within manufacturing can pick up with, let's say, the global economy, including, say, the US markets or the US economy improving over the next few quarters and years. And that, I think, that will take that will get the private sector involved really on the capex side. When it comes to rates, really, like the others said, we're not necessarily in the camp which is calling for sharp interest rate cuts, but probably some of the action you're seeing on liquidity. So the CRR cut, for instance, I think that is starting to help out. And we didn't talk about it earlier, but I think financials is the elephant in the room, right? Large cap banks have done really nothing over the last few years.
Yeah.
And I think that gives an interesting catalyst out there too.
Absolutely. Just one round on global. Economists think Trump will do what he will do. India will not get hurt. It'll probably benefit. Agree? Disagree?
So I think, Trump this time around has a much better planned cabinet, unlike his first term, right? He obviously has Mr. Musk along with him. So I would definitely agree that what is going to happen with, say, Mexico, Canada and China would definitely benefit India to a larger extent. And there are multiple themes.
At the margin, benefit. And we'll talk about those themes in a bit, Tahir.
Longer term benefit, but I think in the short run, we will probably also be impacted.
Rohit?
Yeah, I think there's going to be a lot of noise, and you're not sure whether some of it is posturing to kind of ensure that you get a better deal out of each trading partner.
Okay.
But I think there are opportunities and there are some risks as well.
So noisy 2025. So well, let's take a quick commercial break at this point, and then we'll come back and we'll dive into the real stuff, right? What are the themes to back? And that's what I think our viewers are going to be interested in as well. So let's take that break, get into that quick commercial break. We are right back with the three market masters, and of course, this very interesting chat.
TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. Well, we heard about what our fund managers expect for 2025, but let's zero it down a little bit more and let's get the top bets from there. Nikit, you go first. Tell us, what is that top bet for 2025?
So I think we do believe manufacturing will really play an important role as we get into 2025. So if you just look at the broader numbers, US has about 5.5% of the world's population, contributes to 25% of world GDP.
Okay.
Europe has about 4.5% of world population, contributes to 18% of world GDP. China has 17% of world population, contributes to 17% of GDP. India has 17.5% of world population, contributes only 3% of world GDP.
So that's where the opportunity.
So there has to be a significant movement, from mean reversion, right? And how do you do that? The only way you do that is manufacturing, and within manufacturing, you have to do more exports, right? That's how you get incremental GDP from 3% to 5 or 7% over a period of time. If you look at manufacturing theme per se, if you look at China and India, both of them started in 1970s at the same level. And China really took off from 2005 all the way to 2015 in a meaningful fashion. That's why globalization was being talked about. For India, this is probably the best time to happen because of anti-China sentiment that we are seeing right now. This is probably the best window to really accelerate on the manufacturing side. Also, if you look at India, is generally known for IT services, right? So if you look at globally, 20% is IT services or services export that we call, and 80% is merchandise export. So merchandise is far larger category than services. In India, it's 60-40, 60 being services and 40 being merchandise. So I think the real move that the government has done in terms of PLI on the manufacturing, say mobile PLI, component PLI, which is likely to come announced shortly, all of them is actually moving in direction of ramping up the merchandise export from India. If you look at someone like, say, Apple, Apple this year is likely to do about $10 billion of sourcing from India. This used to be zero. If you look at India, in 2014, 78% of mobile phones was imported. Today, it's negative 25%, which means we export 25% to other countries, right? Thanks to PLI, obviously. So I do believe a lot of countries like China, if you look at Vietnam, Vietnam export is this year is about $120 billion. In 2013, Vietnam and India were at the same level. So we really need to do a lot of catch-up. And some of these PLI initiatives announced by the government are going to be quite handy as we go forward.
Just to get the number, you said 10% of the sourcing Apple does is from India.
No, $10 billion.
$10 billion. $10 billion right now. And,
so if you look at
exports annually out of which is made, which Apple sort of exports, merchandise exports, is now they've said that they want to get to about 25% of their overall sales, right?
That's correct. That's over a period of 5 years.
Right.
So which is again a very large size.
When we speak to most of these EMS companies, they all kind of are still with the Android ecosystem.
Correct.
Very few work with the Apple. Actually, So will that change, you think?
It will, right, with per capita. If you look at US per capita is $81,000. China's at $13,000. India's at $2,500.
Yeah.
It's 2.5. If it moves to 5,000, there's a large population willing to buy Apple phones in India itself. Right? So India will become de facto the second largest market for Apple in the next 5 years.
So for example, a Dixon, right, works with phones are still the biggest segment. They work with all 5 Android clients.
Right.
So what next? I mean, they're getting into other components, etc. But within phones, Apple is a very high value segment.
So if you look at mobile phone industry, is about 4 lakh crore. From a manufacturing standpoint, it's about 3 lakh crore worth of sales that they do.
Yeah.
Right? Of that 3 lakh crore, about 50% is semiconductor, which is 1.5 lakh crore. India virtually has no role to play, at least till FY28. Hopefully, the first foundry of Tata's will come and, we'll have some semiconductor from there. The balance 1.5 lakh crore is where the opportunity size lies, within the component manufacturing. Till now, if you look at prior to COVID, India was doing large amount of trading. 2020 to 24 was more of assembly. The first time we are now getting into manufacturing in a meaningful fashion, because our value addition was only about 14-15%. Now we are really going to 50% because balance 50 is semiconductor, which you can't do it. So effectively, the first signs of manufacturing will be visible now, with PLI of electronic component manufacturing going live. And you will also see that in other categories. You are seeing in compressors, right? There are companies who are now doing tie-up for compressors in India, with 51% owned by an Indian guy and a 49% owned by an international guy. So I think all these moves will really play a big role to really change the unit economics of the way manufacturing changes in India.
Valuations, Niket?
It's quite punchy, but I think, in India, you have to pay, if you look at mid-cap itself, more than 65% of mid-cap are trading at more than 40 times 1 year forward earnings. So anything which is high quality and high growth is not going to come at 10p or 15p, right? It's going to be expensive in India.
Motilal on the private equity side, I think, is the only investor in Dixon. They put in $40 million back in the day, and that's the only money which I think Dixon has raised, right?
That's correct.
Ever in their life.
Yep. And apart from the IPO.
So apart from the IPO, do you need to do something? I mean, you have to find something very small. Is it possible, or you think it's
quite possible? I think if you identify some of these themes early in the cycle and play through the cycle, I think there is reasonable amount of money to be made. But you have to be ahead of the curve when you think about some of these newer themes. You have to identify which are those companies which have those capabilities. Like, for example, if you look at mobile phone, the real essence is display, camera modules, and to some extent plastic component manufacturing, which is quite relevant. So
just name one or two which you already own with full disclosure. I mean,
no, I think we own Shelly Engineering, which is a public domain information.
And I think they work with Apple.
I don't know, but I think if you look at, they are very, very large on the plastic eco component system.
Yes.
So if you look at mobile phone, there is a large amount of plastic component involved there.
Sure.
So we'll see how that plans.
And this is one of your recent entrants in 2024, I think.
Yes, it's been about 5 months old. Yeah.
All right.
Tahir, do you want to talk about CDMO, which is a big sort of area of focus for you? What's the thesis?
I think this is obviously about companies in India essentially benefiting from the China Plus One story, especially with regard to this whole space and small molecules as far as pharma is concerned, and even things like peptides, etc., which are coming into play. Especially there are a good number of companies which are involved in small molecules. Many of them have actually even started on the peptide molecule space, especially with regard to GLP-1. So small batches right now, but can probably pick up over a period of time. So I think that's one space that we clearly like. The other one that we are probably very excited about is on the domestic context is the power utilities in the power segment, but more particularly within the power value chain, the transmission portion of the power economy. And that's because we, as we all know, are in the midst of this massive change where we're looking forward to having at least 50% of our installed capacity being in renewables. This calls for a significant overhaul, upgradation, change in the transmission system, because you're now actually going to have a mix of different types of power, right? We're largely dependent on the transmission system was largely driven by coal-based power up until now, and now you're going to have a mixture of wind as well as solar and coal.
So transformers, companies which
transformers, all kinds of equipment which are related to actually upgrading the whole transmission system.
The grid, basically.
The grid, because you are going to have instabilities induced because of this intervention of different kinds of power sources. So and we've not done anything to the power transmission system in a very long period of time.
What kind of names? I mean, just to kind of
talking about companies like Hitachi, GE Vernova, these are kind of guys who are going to maybe even to some extent even the likes of Siemens and ABB. Many of the multinationals probably will dominate here. There will also be the ancillaries, which are, as you mentioned, the transformer related companies, where you have a fair number of Indian players as well. So I think that that is the ecosystem that we like. We believe that that's something which is probably going to be a lot more durable. And this process is long enough because you're talking about, even otherwise, you're talking about power capex being what in the vicinity of some $400 billion over the next 5 years in order to do everything. Generation as well as transmission. So I think that's a huge number, and we are crunched for time. We are talking about the next 5-6 years because we have to accommodate that 500 gigawatt which comes out of wind and solar. So I think it's not a very long, duration theme, and at the same time, it is probably concentrated among a few players. So I think there'll be a few of them which will be really, really large beneficiaries.
Now that's interesting, particularly on Hitachi. I had visited the company around 15-16 months ago, and they were talking about HVDC orders. Normally used to come once in 4-5 years.
Right.
Now they're expecting it once in every year. So it tells you the kind of
We saw a couple of those actually come about in the past.
Indeed. Yeah. And that's...
I think that's just the start, and we are probably going to see
many more
Indeed.
as they come about.
All right, Rohit, what about you? Tell us what's the top bet for 2025? Which is
So mine is the most boring in the room, which is just the mean reversion factor of lower end consumption. And I think we've seen this, happen in a big way post-COVID, that the recovery has been extremely K-shaped, right? So you've seen the lower end, particularly, rural has been impacted quite significantly.
It's a good day to talk about lower end consumption. Vishal Megamart had the Vishal listing. Go on, please. Sorry.
That's right. So, to that extent, we've also, if you go back, even something like two-wheelers, been doing badly from 2019 onwards, right? So it's even before COVID that space was probably struggling.
Yeah.
Now that it's been a while, there's been some change at the margin in terms of government policy, at least from the states coming out with some income transfers, etc. I think that is something which probably is driving a bit of growth out there, and just the fact that it's been poor for so many years, right? So just that, catch up, the sticker shock in terms of two-wheelers kind of, finally consumers are getting used to that. So I think that's one where there are probably...
Specifically, any sectors there?
I would say two-wheelers is an interesting one. Even within passenger vehicles, we've actually seen the small car segment has done nothing, right? It's all been SUVs, right? So potentially spaces like that, there's, more... tier 2 towns, value retail. I mean, you did speak about it.
So you'll be playing more OEMs, or will it be auto ancillaries when you're talking about this theme of two-wheelers as well as...
So the good part is that in any of these themes, right, they're big enough to play both. You can do OEMs, you can do ANCs, and that's the great part, where it's not always so obvious. You'll find even potentially industrial names which are levered to those segments, and it's kind of hidden out there. You've got to do a bit more work to pick them, but that's something which can work out, right?
That's interesting. Mean reversion, lower end picking up, and premium maybe just sort of slacking off for a while. It's done very well.
That's
good sugar rush over the last couple of years. Right. So we've got 3 ideas, but we've got more to go. 3 more, 4 more, 5 more. We'll do all of that. Let's take another quick commercial break here. Stay tuned. We are in conversation with the 3 market masters here. Themes for 2025 and ideas to bet on. Stay with us.
7:55 पर नीलकमल नाम की एक जो प्रवासी वेसल थी उसको नौदल की एक बोट टकराने से एक बहुत बड़ा अपघात हुआ है, एक्सीडेंट हुआ है। इन 13 लोगों में 10 सिविलियंस है और 3 नेवी के लोग हैं जिनकी मृत्यु हुई है। जिन लोगों की मृत्यु हुई है उनको सीएम रिलीफ फंड से 5 लाख रुपए दिए जाएंगे। और ये जो पूरी घटना है, इस घटना की तफ्तीश ये पुलिस भी करेगी और नेवी भी करेगी।
Welcome back. You're with us here on this special market town hall, and we are ideating about what to put your money into in 2025 and beyond. And we've got 3 young star fund managers with us, and we're sort of bouncing around ideas. We got one round done earlier. Let's get to the next one. Niket, GLP-1 is a theme that you want to back, and there's a very specific opportunity.
Yeah.
Probably after, I think, Lipitor, perhaps the largest drug category in the world, eventually, right?
Yeah.
Talk to us about that and how to play it here.
So I think, obviously we've seen some large molecules like Revlimid in recent times, and GLP-1 obviously is probably the largest in mankind. We're now touching broadly about $50 billion worth of sale. There are still countries like Europe, India, some part of China, which still doesn't have, a GLP being launched at scale. So a lot of states within Europe and China don't have GLP-1s. And I think that clearly means that this particular molecule will continue to grow at very rapid pace, at least for the next 3 to 4 years. Now, within GLP, there are 2 major ones. There are 3, in fact, but 2 more relevant, which is liraglutide and semaglutide. Liraglutide is already off patent, but I think there's an exclusivity to one pharma guy till December 31st, which means from 1st Jan 2025, it gets off patent. And then there will be a lot of companies who will, try to tap on liraglutide. Sema gets into off patent next year in Canada, in Brazil. Canada is second largest market after US for semaglutide, and so is Brazil, is probably the top 5 markets, which incrementally means that, again, there is significant size of opportunity for a large Indian pharma player, generic guys, to do first to file or tap into that market. Now, there are multiple ways to play. One is obviously you play the API player. If there's an API player who will supply the API to the generic guys, that's still a very significant size of opportunity. The second is the generic guy itself, who decides to launch a generic version for Lira or Sema as and when, because the Sema gets into off-patent in 2032 in US, but other markets are still quite large, which incrementally means that there is a generic opportunity for the generic pharmaceutical players. Third is device manufacturers. Most of the GLP-1s are actually consumed through an auto-injector, which means that, and it's plastic in nature. So there is a significant amount of opportunity for device manufacturers because it cuts across all the players. Every player will need a device manufacturer. And there are a few Indian guys who have the capability to do. So I think these are the 3 ways you can really play this theme.
And you did mention Shelly does.
Yes.
Shelly's into that space, which you already have already backed, right?
Right.
And between API and sort of actual generic companies, is it a big if, or you think?
I would really go with the device manufacturer because it's quite critical and it cuts.
Whoever makes it, the devices too.
Yeah, because everyone has to go to the device manufacturer effectively.
Okay. You, Tahir, briefly mentioned CDMO, and I think I also heard GLP-1 earlier before you started talking about power transmission. Anything you want to add to what Niket said?
No, so I think there are a few companies which are also in the CDMO space, which are operating, trying to be end-to-end players in the spectrum. So Niket mentioned about certain companies which are in the specific buckets, but then there are some of them which are actually trying to do things end-to-end, and they're probably even enhancing their capabilities out there. We've seen a couple of new listings also which happened recently, which are captured in that area, and some of the existing companies as well. So I think that's the other part of the CDMO story, which we which probably we
What
think
kind
will
of
probably
names? Just purely from an
we're
educational
looking at, let's say, we have a probably reasonably large position in a company called Suvain. Suvain Pharma is essentially one of them. So I think that's one. And then there are a few others also which we have smaller positions in. But Suvain is the largest that we have, and it's one of our larger bets even in the Focus Fund. It's there in the public domain, so I don't have a problem in mentioning it.
Okay, all right, Rohit, what about you? I believe you're quite bullish on some of these real estate completion themes, real estate ancillary, so to call it.
Yeah.
Run us through that. I mean, what are the data points you're factoring in?
So we all know real estate, residential real estate has been in a good cycle, and it's been coming out of 21. That's been one space which is doing really well.
Yes.
Housing inventories have been low, so new launches have also been picking up over time. Really speaking, the new launches have picked up in a very big way in calendar year 22, 23, 24, and that's actually forecast to increase at a quick pace going forward as well. Now, if you go back to the previous real estate upcycle, right, I'm talking about the period between, loosely speaking, between 2004 and 2011, let's say.
Yeah.
You will recall that actually the peak kind of launches and peak purchases came somewhere in 2010 to 12, right? But then, if you recall, the peak of the completion plays, when you think of companies like tiles, ceramics, even consumer durables, etc., that actually came somewhere in 2015 to 17. Right, so I think that's a nice kind of space that one has. So those companies right now, the initial plays, like for example, housing pipes have done well because that's what's used in the initial phase of construction. The later cycle, when you're kind of getting your home, when you're finally doing the finishing in terms of tiles, ceramics, and finally filling it up with whether durables or even other products like furniture, mattresses. I think there are interesting kind of plays out there. Which today they're not doing as well because clearly the homes are not completed yet, so you can't spend on them just yet.
The builders have put the checks in, but the homes, the keys have to be delivered.
Yeah.
So that is a space that you're looking at. Right?
Just talking about that theme, what about paints? What's the view out there? Because that's been a sector.
So paints, we've been a bit selective out there. We've not kind of been across the board. It's not that we've kind of had huge holdings out there. We've been looking at it a little on a stock-specific basis, but clearly that space, like a lot of the consumer space, has had very high valuations in the previous decade, which unfortunately has led to new competition coming in. Right, when somebody sees that kind of market cap created by some of these top companies, that is an invitation for competition, and clearly large groups have been getting into that. So one wants to be a bit careful. Having said that, do you never want to get into that space? Probably not, because these are high quality companies, great, great barriers to entry, great track records, good managements. You want to look at when you want to get in, and frankly, we've been a bit selective, but it's not been a whole hog kind of jump into that space just yet.
Niket, consumer discretionary is something you mentioned, and I think Rohit was also talking about that. What kind of sort of ideas here within the discretionary
I would say
space?
jewelry is one space which is just holding up, right? Every category has gone through ups and downs this year. Jewelry continues to go at 25-30%. So that's a very good hiding space in the current market. And I think few of the value retailers, who have done quite well, Lights of Trend, who have done extremely well in this year. And we do expect a lot of newer businesses to get added to that existing, Zudio or West Side for as such.
Value seems to be like a common theme. Value retail and so the lower end of the segment, right?
Yeah.
I think Tahir, you also like that space, and Rohit, you also mentioned that. So that space should do well. Okay, what we'll do is we have a couple of our own sectors that we want to ask, which I didn't hear quick commerce at all. That's been the big winner. I mean, Motilal Oswal, of course, is a big backer across all three companies, right? Yeah. So we'll talk about that. But let's take another quick commercial break. What we'll do is we'll come back and open it up on the floor as well. So, the audience, the live audience which is here, will have an opportunity to take questions to all three guests here. So stay with us. We're right back.
जब लक्ष्मण मूर्छित हुए थे तो हनुमान जी उनके लिए संजीवनी बूटी लेके आए थे। तो आज दिल्ली के बुजुर्गों के लिए मैं संजीवनी योजना का ऐलान करने जा रहा हूं। कि 60 साल से ऊपर के हमारे जितने बुजुर्ग हैं उन बुजुर्गों का पूरा इलाज फ्री करवाया जाएगा। इसकी चुनाव के बाद हम योजना लेके आएंगे, योजना पारित करेंगे। वो चाहे सरकारी अस्पताल में इलाज कराना चाहें, चाहे प्राइवेट अस्पताल में इलाज कराना चाहें, उनका पूरा इलाज फ्री कराया जाएगा। इसमें कोई बीपीएल, एपीएल, टीपीएल, आरपीएल कोई लिमिट नहीं होगी। सबका इलाज, चाहे अमीर हो चाहे गरीब हो, सबका इलाज मुफ्त कराया जाएगा। और कोई अपर लिमिट नहीं होगी। आप जितना आपका बीमारी पे खर्चा आएगा उसका सारा खर्चा दिल्ली सरकार वहन करेगी।
But the word reciprocal is important because if somebody charges us, India, we don't have to talk about own. If India charges us 100% and we charge them nothing for the same, they send in a bicycle and we send them a bicycle, they charge us 100 and 200. India charges a lot. Brazil charges a lot. If they want to charge us, that's fine, but we're going to charge them the same thing.
Welcome back. Well, we got all the top themes that we are looking at in 2025. But as promised, we're going to open up the discussion to the audience as well. They have got some queries, and my colleague Yash is in there. He's going to be pulling up a couple of them. Yash, over to you.
Well, thank you, Nigel. Thank you, Prashant. And of course, the Market Starcast for that quality discussion. And to make it more interesting, we've got very curious finance minds from colleges across the city. Let's open the floor to those questions. Sir, if you could start, of course, introduce yourself and then go ahead with the question.
Okay, so good evening all. I'm assistant professor in Narsimunji College, myself Gopal Krishna Surnekar.
Welcome.
Okay, my question is that now the young people from India, they are investing a lot in equity market, but at the same time it is creating issue for the deposits in the bank. So how do you see this issue, okay, specifically for the banking sector and investment in banking sector both? So that is my question.
I'll take that. You want to take it? So actually there's a bit of a myth that the money which goes to equity markets moves out of the banking system. It doesn't move out of the banking system.
Okay.
Simple example, if I buy a share, you sell it, if you get capital because of you sold the share, that money goes to your bank account. And it debits from my account, goes to your account. So whenever equity market tends to blossom, that doesn't mean that deposits are going to get impacted because the money only remains in the banking system, right? Money doesn't move. The only time the money moves out of the banking system in case if the FIS sells out and moves out, that's the only time. Otherwise, yeah, the color might change. Instead of CA, SA or term deposit, that can change. But largely the money doesn't move out of the banking system.
And what is...
And also just to add that, what actually drives deposit creation is actually credit creation. So if you're going to have a weak credit cycle, then that's also going to be an additional headache as far as deposit creation is going to be concerned. Because once you start developing credit, then it actually starts accumulating as deposits in the system in one account or the other. So I think partly, yes, you are right that maybe some transfers do happen from one account to another. But by and large, I think to ensure that if you have a good deposit growth, you need to probably ensure that the credit cycle is maintained. We've seen a little bit of slippage as far as the credit cycle in India is concerned. And but we've also at the same time starting to see that now deposit growth and credit growth are actually moving in tandem. Yes. Earlier, they were deposit growth was significantly lagging credit growth. So I think that's a good sign in a way. And hopefully it will probably start to develop a little more strongly in the course of 2025.
And I would just add actually that regulation has been quite proactive in that sense, seeing some of the issues that the US banking system, for example, saw in early 2023 with deposits leaving some of these online banks, right? I think so RBI had been quite, specific with banks in terms of asking them to look at loan to deposit ratios because that's certainly important from a overall financial stability perspective.
Okay, let's take a few more questions. Yash?
Yes, we'll take another question from the front row itself. Ma'am, you had a question. Please go ahead.
Hi, I'm Nabanita. I am analyst working at Anurati Wealth. My question is, this has been the year of value. And do we expect a mean reversion? Do we expect growth to come in play in the coming year?
So I would like to think so probably that you will probably see a improvement in the growth part of the market as well during the course of 2025. Will it come at the cost of value? I'm not too sure, because you are probably going to see. So there are some parts of the industrial economy, and we talked a little bit about that in the last in the last hour. Those are also looking reasonably strong. And if we probably were to see the combination of government capex and private capex continuing, I think value will also find support. But along the way, I think the one important trigger, which once again I go back, probably will drive value to make a comeback, is probably the direction of interest rates. We're not necessarily looking forward to a very deep cut in interest rates, but even if we get a shallow cut, a shallow cycle downwards, I think that'll help the cause. Rohit talked about the recovery as far as the consumption space is concerned, especially as far as value consumption is concerned. I think many of those companies are actually growth oriented. So if they make a comeback, probably the growth portion of the market starts looking better.
Right.
So there is that anticipation that some part of it should unfold in 2025.
Yash?
You want to probably add something?
Can I just add?
Yeah. Yes, please.
So on this value versus quality versus growth debate, right? So we at SBI Mutual Fund run a quant model, right, which runs different factor indices. And when any of those hits an extreme, either on the upside or the downside, that's when we go back and rebalance. So earlier this year, somewhere around April, our model was actually showing that quality had hit the bottom in terms of our lower band threshold. So that's when what we do is we rebalance all the factors that we're looking at, quality, growth, value, momentum. We rebalance them all to an equal 25%. And that actually happened earlier this year. So, to that extent, we are kind of, while we don't try to predict which style is going to do the best, whether it's going to be quality, growth or whatever, but we do think that, it's a good time to have rebalanced, away from value to an equal right now.
Okay, we have another question from the gentleman at the back. If you could just introduce yourself.
So hi, my name is Sami and I'm a student at this moment. So I have a question regarding the US markets, to be specific. So after the US Donald Trump's victory, it has been a euphoric moment for the markets, and specifically if we look at the FANG and the Nasdaq, it has given a phenomenal return. So and even after the news of the SoftBank putting in around more $100 billion, it is about to give more returns. So do you see any near-time corrections, and has the decoupling effect really happened with the Indian markets, because we do not see the such run-up in the IT sector here even after the bolstering of the dollar?
Okay.
Yeah, so I think if you look at tech itself, I think the reason why tech did very well the day Donald Trump was announced the winner, the next day in Indian markets, the largest gainer was a tech, because I think he's already articulated the tax cut that he plans to do. Whenever there's a tax cut in US enterprises, there's significant amount of free cash flow which is left in their hand, which typically tends to go towards IT services spend. For US companies, IT services spend is like a capex. For Indian, it's like OPEX. We don't spend like billions of dollars on IT services. But these guys, because they have global operations, they do spend billions of dollars on IT. And hence, I think with tax cuts happening, tech should do quite well in US for next year. And it can be the sector for the year.
Okay. Maybe take one more, Yash? I mean, if you can. Just a very short one, please.
If anyone who has a question can raise their hands, please.
Good evening, everyone. I am Dilsha Chorasama and I'm preparing for my CFA level 1. So my question to Nikit sir is about the QGLP approach, and how does it ensure that the investment process remains consistent and the returns are on par with the benchmark even during the high periods of market volatility?
Yeah, so I think QGLP simply stands for quality, which is not only quality of earnings, but quality of management, right? And there are a lot of filters on it. One is return ratios, capital allocation that the company does, cash flow analysis of that businesses. So quality of business and quality of management is quite important. G stands for growth. Fundamentally, we like to buy businesses with at least 25% plus growth. And hence, we fundamentally believe that whatever is the earnings growth, assuming multiple remaining the same, should be the return of the stock price over the next 1 year. So if a business is growing at 25%, stock price should give you a 25% return, assuming P multiples remaining same. L stands for longevity of the growth, which essentially means that you buy businesses which are a little more structural in nature, say food delivery business or multiple other businesses, So we don't like to buy businesses which are cyclical in nature, like the metal business. It's quite difficult to predict next year what steel prices are going to be, right? So L stands for longevity of that growth, and P stands for price, which is buying them at the right valuation, which in current environment is quite difficult.
And that's where the magic happens, right?
Yeah, that's where the magic.
All of them.
So you have to buy it early.
Yeah.
You have to predict earnings early, and if your prediction of earnings is sharper, then you get stocks at a lower multiple.
Well, that gets us to a nice close on this very, very wonderful discussion. Niket, Tahir and Rohit, great to have all of you here. I want to thank the audience as well for being a wonderful listener and asking all those intelligent questions. Yash, thank you very much wherever you are. That's it on this Market Town Hall special from all of us here. Goodbye. Thank you very much. Happy holidays, and we'll see you in the new year.
Hello and welcome to Leap to Unicorn Season 2 special on Young Turks, presented by IDFC First Bank in association with Money Control and CNBC-TV18. For 2 years in a row, Leap to Unicorn has emerged as one of India's largest startup growth and funding program. It's not a competition, it's an effort to nurture, mentor and fund India's best startups and help them